minutes. We can assume network analysis. Okay. Yeah, hi, hello everyone. Welcome back. See, in SCM chapter 4, one of the easiest chapters, sir. From this chapter, we will get a 7-mark question plus 1 or 2 MCQs, sir. That means 9 to 11 marks is the weightage of this chapter. Okay, so in this chapter number 4, we have multiple concepts. Those are first one, activity based costing, ABC, just in time, throughput, backflush. Okay, so apart from this, these 4 chapters are problematic concepts. Okay, so apart from this, we have one more small concept, just theoretical concept, that is benchmarking. Okay, some small concepts only. Okay, we can get easily 9 marks from this chapter. Okay, so now let us start with just in time, sir. Some small concept only. Okay, we have 2 problems in this particular concept. Okay, so if any question asked from this chapter means only 2 questions only there. Okay, with changing numbers only they will ask the question. Just in time. Okay, just in time. What does it mean by just in time concept, sir? Just in time. Okay, we have seen too many movies from Balaya and Boyapati combination, right? Okay, so in Balaya Boyapati's movies, okay, just before interval, there will be some big fight will be there, sir. Okay, so all the villains attacks the hero's family. Okay, so from that hero family, one old lady will be there. Okay, so before villains killing them, she shouts like Bhagavantuda. Okay, immediately Balaya, out of nowhere, Balaya will come and kill all the villains. Okay, so that means whenever they call Bhagavantuda, Balaya will come. Like that, in manufacturing industries, whenever we need raw materials, immediately raw material should come. That is called just in time, sir. Okay, so in manufacturing industries, we have 2 types of material procurement procedures, sir. In manufacturing industries, there are 2 types of material procurement procedures, sir. So first one is push approach. Second one is pull approach, sir. Pull approach. Push approach, pull approach. So this push approach means nothing but olden days technique. That is nothing but in this technique we will fix some economic order quantity and stock levels, sir. Okay, in case of so pull approach, this is nothing but advanced technique just in time. Okay, now so let us try to understand what is this push approach and pull approach, sir. Okay, now see, first one push approach, sir. So supplier, stores, factory, warehouse, customer, sir. Okay, so in push approach, what manufacturing industries do is like they fix some stock levels and they follow EOQ concept also. Okay, so generally what happens in stores means whenever the stock in stores department reaches reorder level or reorder period, immediately they will place an order for raw materials, sir. Whenever they place the order, supplier will send supply the raw materials to stores. Okay, so whatever the raw material received by the stores will be stored in the stores department only. Okay, so until factory or production department requires the raw materials, sir. This is production department. So until the production department asks or request the raw material from stores department, those raw materials will be stored here only. Okay. So when production department requires, then those raw materials will be sent to the factory. Okay. In factory or production department, so what they do is like, so they will have some capacity, fixed capacity, something like they will have capacity to produce. Let's say within 1 year they can produce 1 lakh units, sir. Okay, so as they are having capacity of 1 lakh units, irrespective of demand, whether demand is there or not a point. Okay, so what they do is like they continuously do production only. Okay, so raw materials were required by the production department, they will be sent to the production department. In production department, if those procedures, so operations, so the operations which use it to convert the raw material into finished goods, if those operations are lengthy operations means again, so here at factory work in progress stock will be blocked, sir. Okay, so if operations are lengthy operations, that means it will take more time to convert the raw material into finished good. That means in production department, work in progress stock will be blocked. Okay, so whatever the production they do, they will send those finished goods. Finished goods will be sent to the warehouse. Here in warehouse they store the finished goods, sir. Finished goods until until so until customer places an order for finished goods, those finished goods will be stored in warehouse itself. That means here also again finished goods stock is blocking. Okay, once again what is happening here means so stores department or purchase department places an order for raw material, not when raw material required by the factory, whenever it reaches reorder level. Okay, so whenever it reaches reorder level, they places order for raw material, they will receive order raw materials and stores in stores department itself until raw material required by the production department. That means raw material stock will be blocked here. Raw material stock will be blocked here. So again, after request from production department, these raw materials will be sent to the production department. Again, production department, if operations are lengthy operations means again work in progress stock will be blocked here. Okay, so after their production, those goods will be sent to the warehouse, and in warehouse itself, these finished goods will be stored until they receive the orders from customers. Okay, after receiving orders, they will send these finished goods to the customer. That means again, for certain period of time, so finished goods stock will be blocked in warehouse. Okay, in this kind of procedure, this is nothing but they will fix some stock levels and use EOQ concept. Okay, in this approach, so what is happening here means there is stock blockage at 3 stages, sir. Okay, at stores raw material stock will be blocked, factory or production department work in progress stock will be there, in warehouse finished goods stock will be there, sir. Okay, so as we are having 3 levels of stock, so huge carrying cost will be there, sir. Carrying cost. Okay, as we're having stock means carrying cost. So what is carrying cost, sir? Yes, excellent. What are the examples? Tell me in detail examples for carrying cost, sir. storage cost, okay, some rental, that means rent, go down rent, electricity, labor, that means security labor, something like that, okay, uh, security, what charges, freight means transportation, that becomes ordering cost, sir, okay, not carrying cost. Okay, so as we're having stock means we need to take some insurance and taxes, insurance and taxes. The most important thing is, okay, so inventory is blocked means we have to invest some working capital on that inventory, right? Okay, whatever the capital we invest on that inventory means on that inventory, or else on that working capital, so there will be some interest cost, interest or else opportunity cost. Interest means nothing but opportunity cost. So whatever the amount I invest in this finished goods means, if I invest those amount at outside, some outside investment if I make means I will get interest. So that is my opportunity cost. Okay, so these all are the carrying cost. Okay, so what happens here means in during 1880 those period of time, some luxury car manufacturers were there, sir. Luxury car manufacturers, luxury car manufacturers, what are the manufacturers, what are the luxury car manufacturers, something like Benz, Rolls Royce, Audi, what is that, okay, BMW, so all those are the luxury car manufacturers. So luxury car means at least base price will be at least 50 lakhs, or else 1 crore, 2 crore, 4 crore. Okay, so let's say 4 crore rupees car is in inventory, sir. Okay, so finished good, let's say they have produced, as they are having some capacity, they have produced some units of luxury cars, they are holding those cars as the finished goods in a warehouse itself. That means they will be having huge carrying cost. So for per one car only 4 crores is the cost, right? Okay, that means a huge working capital will be blocked on the inventory. Okay, in case of raw materials also, luxury cars means they have to use some costly raw materials, costly, so spare parts and everything. That means at each stage their inventory cost will be huge. So as inventory cost is huge, they will be having huge carrying costs. Okay, so that's why to overcome this problem they came up with a new technique called just in time, sir. Just in time. Okay, so what happens in just in time? Okay, in just in time, that is nothing but a pull approach, we call it as pull approach, sir. Okay, in pull approach, stores department, they won't place any order, purchase order. So what they do is like whenever, so production department or factory requires raw material, then only they will place an order, sir. Okay, so once they place an, so when production department requires raw material, okay, they won't do the production until an order received from the customer. Okay, so they will do the production, they will start the production only when they receive an order from customers. Okay, so when order is received from the customers, they will start the production. To start the production they require raw materials. Okay, so immediately, so stores or purchase department will place an order. That means whenever they place an order, supplier directly transport or supply raw materials directly to the doorsteps of production department, sir. No need to store here, right? That's why in this concept there won't be any stores department. Okay, so when the raw materials are required by the organization, supplier will deliver the goods directly to the doorsteps of factory. Okay, immediately they will do the production, as they are having order on hand means they do immediate production, and immediately they will deliver the goods to customers, sir. Okay, that means we are avoiding raw material stock here. Okay, So and also we are not storing any finished goods here. That means we can avoid finished goods stock also. Okay, so as we're having hard orders on hand, so we try to reduce the lead time. Lead time means the time taken to convert the raw materials to finished goods. Here we try to do so production so as possible as quick, sir, so that so work in progress stock also can be avoided. That means here in three places we will try to reduce the inventory levels. Okay, so that we can avoid the huge carrying cost, sir. Okay, so what are, so to implement this just in time approach, what are the prerequisites means okay, so they won't be having any stores department and also warehouse. Okay, so whenever the customer places order, it should immediately reach production department and it should immediately reach suppliers. That means they will install some in IT infrastructure, sir. IT infrastructure means so information technology systems and ERP softwares. Okay, so that means here customer places an order using a software. Okay, so through an website, let's say. Okay, so immediately one notification will go to the production department and another notification will go to the supplier. Okay, so after receiving that notification, supplier immediately delivers these goods to the factory. Okay, immediately they start production and deliver the goods. Okay, so this is somewhat simplified concept only. So in this concept we can avoid stores department and raw material stock can be avoided, work in progress stock maximum possible can be avoided, finished good stock won't be there. That means we can avoid or reduce the carrying cost, sir. Okay, so also here, so to reduce the lead time, here lead time means time taken to convert the raw material to finished goods, sir. That is the lead time here. Okay, so to reduce that lead time, here they use some advanced machineries or else some conveyor belts. Conveyor belts means if you can observe in some kind of cool drink manufacturing companies, some belt will be there. On that belt cool drinks, okay, rolling over there, so some getting that. Okay, yeah, some belt. On that belt raw materials can be transported without using labor and everything. Okay, okay, that's it, sir. That is the concept. Okay, so here, so we don't need a stores department and purchase department. Okay, don't need a warehouse, sir. Okay, for this approach, for push approach, here we are having three levels. At three stages we are having stock. As we are having stock, we need to have some control over that stock. The control means how many units of raw material are there, what is the value of that. Okay, how many units are we are receiving, how many units are sending issuing to the production department. So all the details we should have, sir. So that's why we need to maintain some detailed accounting system. Okay, so we need to maintain three control accounts. That means raw material control account, work in progress control account, so finished good control account, sir. Okay, so we use three types of control accounts, okay, to have control over the inventory. Okay, this type of system, so we need to have some detailed accounting system that we have learned in, okay, so CMA inter level cost accounting system, integral and non-integral cost accounting system, integral and non-integral cost accounting system we have used. So in that system we'll be having we will maintain some detailed so three separate accounts for each level of stock and so detailed accounting system we use. So this is somewhat complex accounting system, sir. Somewhat complex accounting system. So here in this pull approach, as we are not having any raw material stock, work in progress stock, and finished good stock, we don't need to maintain some detailed, elaborated accounting system. That's why some new simplified account system is enough in this just-in-time system, sir. That means that new simplified accounting system is nothing but Backflush. That means whenever you are following just-in-time system means you are also using, you will use a backflush accounting system. And if you are using this push approach means we need to maintain some detailed accounts for every stock level and everything. Okay, so uh, next one. So what are the benefits? What are the benefits or cost under just-in-time system, sir? If you are implementing just-in-time system means you will be getting some benefits, also some cost, sir. Okay, so what are the benefits? So in just-in-time there will be some theoretical questions, concepts will be there, sir. So what are the precautions we have to take while implementing just-in-time system? Some 6 or 7 points will be there that we will discuss later after doing the problems. Okay, see. So what are the benefits, sir? If you implement just-in-time system, what we are saying, so first one is inventory levels will be reduced. That means we can save carrying cost. We can reduce the carrying cost. That means a benefit, right? Okay. So carrying cost means we can reduce rental cost. We can save rental cost. We can save interest. Interest on working capital. Okay, so working capital levels will be reduced. We can save interest. Okay, next insurance. Insurance, taxes, tax and insurance, and okay, some labor cost. So what we're saying here, to implement just-in-time system, we need more advanced technologies. Okay, so if you are using advanced technologies and machines means we can avoid some labor cost, right? Okay, so labor cost can be reduced. Okay, so these all are the benefits. So what is cost, sir? Again, now what is cost here? Okay, as we are saying, we are not maintaining any stock in the stores means. Okay, so if raw materials are not available immediately when they are required means a stock out situation can be arise, sir. stock out Stock out situation, that means what is stock out? Stock out means no stock situation when raw materials are required by the production department, but immediately raw materials are not available. Okay, that means they will not start the production. That means stock out situation can be so arised. So what is stock out cost? Stock out cost means okay, here we will be having two types of costs, sir. Okay, so we have to start the production. Okay, machineries are there, labor are there, but we are not having raw materials. Okay, so they won't do any production. That means labor came to the factory but they won't work. That means labor idle time cost. Okay, so as labor, okay, we pay the labor on daily wages basis. Okay, so if the labor came to the factory but we are not having raw materials means even though they work or not, we have to pay them, right? That means labor idle time cost will be there, sir. Idle time cost. And if you don't do the production immediately when you receive the orders, okay, you cannot deliver the goods immediately. That means okay, so if you cannot deliver the goods to the customers immediately or else on delivery time so fixed by the so terms and conditions means so customer will dissatisfied, sir. Customer customer gets dissatisfaction. Okay, if customer gets dissatisfaction means in future he won't purchase from our company. That means future sales will be affected. Future sales will be affected. Future sales affected means so future profits are also we are getting loss. That means opportunity cost, profits will be lost. stock out cost, sir. Another cost is second one. Okay, so to implement just-in-time system, what we are saying, we need to install information technology systems and new advanced machineries. Okay, for these two systems, that means we need to purchase some assets or machineries. Okay, if you are purchasing some assets or machines, means you are incurring some capital investment, sir. You are making some capital investment. Capital investment. Okay, so whenever you are making some capital investment means okay, there will be two types of cost on that capital investment. Okay, you will be having some opportunity cost. So opportunity cost, sir. What is opportunity cost, sir? Okay, so let's say I'm purchasing a machinery with 10 lakh rupees. Okay, so if I'm not purchasing that machinery with 10 lakhs, means I can invest the 10 lakhs in other investment options, something like I can invest in the bank or else in fixed deposits, I can invest in shares. Okay, so if I invest outside, means I will get some interest or return. Okay, that return or interest is my opportunity cost here. Okay, if I'm investing on so on machines or assets, means there will be some opportunity cost of interest opportunity cost, sir. And also we'll be having some depreciation, right? Depreciation, as we are purchasing machines. Okay, so we use the machines. Okay, per every year there will be some depreciation cost will be there. This is also the cost, sir. Okay, and also as we have purchased the machines and everything, okay, there will be some operating cost, sir. Okay, if you install IT infrastructure and machineries, means for that infrastructure and machineries, we will incur additional operating costs. Okay, so just by implementing just-in-time system, okay, we will be getting some benefits as well as we incur some costs, sir. Okay, now we have benefits and also cost. Okay, now we have to decide according to the situation. If problem, so in problem they will give the information regarding everything. So benefits and cost, everything they will give us. Okay, so what we have to do is we have to identify whether this cost, this element is benefit or cost. We have to classify the all the elements into, so whether benefits or cost, we have to do some cost benefits analysis. If benefit is greater than, if benefit is greater than cost, means you can implement the just in time system. If benefit is less than cost, means okay, you don't go for the just in time system. That's it, common sense only. Okay, so this is the one point. And another point we have to understand here is um, cost, sir. Cost of raw material, sir. Actually we don't need this concept for problematic, sorry, conceptually we don't need this, but for doing problems we need this concept, sir. So cost of raw material means what is the cost of raw materials? Cost related to raw materials. If you are purchasing the raw materials, you will incur some purchase cost. Purchase cost, purchase cost means you have to pay some purchase price. On that price you have to pay some tax, that means GST and everything. This is purchase cost. Okay, so and also along with the purchase cost there will be some ordering cost, sir. Ordering cost. Okay, so some carrying cost will be there, and stock out cost will be there, sir. Okay, so four types of cost are linked with raw materials, sir. Okay, so purchase cost, nothing but whatever the cost you incurred to purchase the raw materials. Next one, ordering cost. Ordering cost means, wow, excellent. What is that? Tell me some examples. Right, okay. Freight or transportation. Commission. Excellent, sir. Okay, so in multinational companies, what they do is like whenever they are placing some orders, okay, they don't do just randomly place the order. Okay, what they do is like they have to call for some bids, sir. Bids means some tenders. They call for some tenders. Okay, so to call for tenders, they need to do some advertisement. They will do some advertisement. They call different suppliers. Okay, let's say I need 2000 tons of iron. Okay, so submit the codes, how for how much price you can supply, something like that. They will do some advertisement. Okay, different suppliers will submit their bids, sir. Okay, so now we have to analyze these bids. Okay, so to receive the bids and to analyze them, we will incur some small cost. Okay, maybe to analysis and everything we need some expert. Okay, so after selecting one per supplier, we will place an order. Okay, so after placing an order, each time we place an order, okay, so those raw materials to be transported from supplier place to the stores. Okay, that means transportation cost will be there, transport or freight. Okay, each time we place an order to transport the raw materials, they need to load the raw materials into the trucks. That means loading cost will be there. Okay, so after truck coming to the stores department, we have to unload. That means again unloading cost will be there. Okay, so while unloading, so again at stores department, what they do is like whether the raw materials transported by the supplier, so whether those raw materials meets our standards. Standards means quality checks. We have to do some inspections and checks everything. Inspection cost. So each time you place an order, okay, so you have to incur some advertisement cost, bids analysis cost, some transportation cost, loading cost, unloading cost, some inspection cost, checking and everything. So in total, this is the ordering cost, sir. Okay, so if you any other costs are there, wow, excellent, sir. Transport, insurance. Okay, so next one. So when raw material received and stored, so placed into the stores department, so we will incur some rental cost for that stores. Okay, electricity cost will be there, and also okay, security. For security purpose, we need to engage. We need to have some watchmen, uh, employees to safeguard the raw materials, and we have to install some CC camera system and everything. Okay, and then so we need to take insurance, stock insurance policy, stock insurance. Okay, next, so on that insurance we have to pay some taxes, and main and important cost is interest cost, sir. Interest cost. Okay, so coming to the stock out cost I have written already here. Okay, stock out cost means no stock cost. When raw material required by the production department, immediately if raw materials are not available, means we will incur some cost. That is labor, idle time cost. Okay, if you are if orders are received but we are not making production, means okay, so customer can cancel the orders. That means if the customer cancels the order, means so we are losing some profits. Okay, profits will be lost. Okay, in future also they won't make orders for us. Okay, that means future sales will be affected. Future sales affected means future profits will also be affected. This is all these are opportunity costs, sir. Opportunity cost. Okay, now to minimize this purchase cost, ordering cost and carrying cost, we had a concept, sir, that is nothing but EOQ. Okay, to minimize the stock out cost, okay, in CMA level we have some formulas, that is stock levels. we fix some stock levels. Actually this is the concept. Okay, so we have four types of cost. To minimize these three types of cost, we're having EOQ. Now we have to understand what is EOQ. Don't need to in detailed understanding. Okay, just what is EOQ, sir? EOQ, we have 2AO by C is the formula. We have to understand what is opportunity, what is ordering cost and what is carrying cost. Okay, so we know what is ordering cost and what is carrying cost. Here we have to calculate the total ordering cost and total carrying cost per year. Total ordering cost per year, total carrying cost per year. Okay, so first one, total ordering cost. Total ordering cost. Okay, that means let's say ordering cost per order is 100 rupees, sir. Ordering cost per order is 100 rupees. Okay, so annual demand, annually per year I require 10,000 units of raw materials, sir. 10,000 units of raw materials. Okay, so I have decided to purchase ordering quantity EOQ or OQ. Ordering quantity, my ordering quantity is let's say 1,000 units. Okay, that means in 1 year how many orders I will place, sir? 10 only. Okay, each time I'm placing 10, 1,000 units means per 1 year, as I need 10,000 units, I have to place 10 times order. Okay, that means my total ordering cost is equal to number of orders, number of orders into ordering cost per order. How can I get this number of orders? Means annual demand divided by ordering quantity into ordering cost per order. What is annual demand in this particular case? Means 10,000 divided by 1,000 into 100, sir. How much? 10 into 100 means 1,000, right? Okay, so what I need here means this formula. Total ordering cost, that is equal to annual demand divided by ordering quantity into ordering cost per order, sir. So you can ask me, sir, why are you telling this basic bacha concepts? I have learned this all these concepts in my CM enter level itself. Okay, I know, sir, like that you can say, but here we have, sir, we have this concept for in one problem. Okay, that's why I'm telling. Next one, we have to calculate total carrying cost, sir. Total carrying cost. Okay, total carrying cost per 1 year. That means let's say C is the carrying cost per unit per annum, per unit, per 1 unit per 1 year. So carrying cost is let's say 2 rupees, sir. Okay, now our question is, okay, we are saying 2 rupees is carrying cost per unit per annum, but on how many units I have to calculate this total carrying cost, sir? Okay, so we all know that in stores department, okay, stock won't be in constant level. So stock will be increases, decreases, increases, decreases, something like this. Stock fluctuates. Okay, so on whether I have to calculate this carrying cost on maximum level or else a minimum level. No, we have to take, so as stock level is fluctuating, we can take average level. Okay, that means here total carrying cost will be calculated on average stock, sir. Average stock multiplied with C. C means carrying cost per unit per annum. So how can we get this average stock, sir? Average stock means nothing but half of OQ. Generally we write EOQ. EOQ means economic order quantity. Okay, instead of EOQ we can order other quantity also. That is nothing but OQ. OQ, ordering quantity into C. Okay, this is total carrying cost, sir. Okay, sometimes this carrying cost per unit per annum will be given by certain percentages, sir. Let's say carrying cost per unit per annum is 10%. If they say like that means we have to apply this 10% on per unit cost. If I am purchasing 1 unit of raw material at 70 rupees, okay, so then what is carrying cost per unit per annum means 70 into 10%, that is equal to 7 rupees per unit per annum is my carrying cost. That is how we have to calculate, sir. Okay, these basics you know, but for my satisfaction only, you guys know, but my satisfaction only I'm telling. Okay, done. So just in time concept to revise, there are two approaches in manufacturing industries for material procurement procedures, sir. Push approach, pull approach. Push approach means olden technique. Pull approach means new technique. Okay, so in push approach we use stock levels. Whenever the stock reaches reorder level means immediately, so in stores department, purchase department immediately places order. Okay, so supplier will so supply the raw materials to the stores department. Those materials will be stored in stores department till so materials are required by production department, sir. When production department requires the raw materials means then only these raw material will be sent to the factory. So till then raw materials will be stored in the stores department. That means here raw material stock will be blocked. On that raw materials we will incur some carrying cost. Again, if raw materials are sent to the production factory or production department, in factory also, okay, so they will be continuously doing the production as they're having capacity. Okay, they don't like to keep their capacity idle, so they don't want to keep their machines and labor idle. So that's why, so continuously they will be doing some production. Okay, so if their operations are lengthy operations means here again there will be, so work in progress stock will be blocked, sir. Okay, so on this work in progress stock also we will be having some carrying cost. Again, once raw materials are converted into finished goods means this will be transported to the warehouse. In warehouse they will be, finished goods will be stored till we get orders from customers. Okay, that means again on finished goods will incur some carrying cost. Okay, here at three levels we are incurring carrying cost. Okay, so in this period of time, in this olden days, on luxury car manufacturers identified they are incurring huge carrying cost on their inventory. So as their cars are having some huge cost means their spare parts or work in progress finished goods will be having some huge cost, right? So that's why on huge cost again they will be incurring huge carrying cost. So they try to reduce their carrying cost. So then there came a new technique, just in time, that is pull approach. In this pull approach, what they do is like, so production department generally don't do any production. Okay, so when they will do production means whenever they get the orders means then only they will start the production. To start the production they need what, sir? Raw materials. Immediately they will, so places an order to the supplier. So supplier immediately sends the goods to, so factory. So you can ask me, sir, how suppliers immediately send the goods, or what happens if we can't supply means okay, so there will be some prerequisites for just in time, sir. We have to enter some agreements with multiple suppliers. If one supplier is not available means we can go for other suppliers. Okay, like that system will be there, sir. Okay, that means okay, customer while placing order, so here we have to install some ERP, enterprise resource planning softwares. Okay, now we're having SAP, right? Okay, these all are the ERP softwares. IT infrastructure we have to install. Customer places an order through website. Okay, that website immediately sends two notification, one to the production department, another to the supplier. Okay, if multiple suppliers are there means okay, it will send to the multiple suppliers. Okay, one of them will send the raw materials directly to the doorsteps of factory. Okay, so from whenever raw materials are received from the factory to the doorsteps, through conveyor belt, those raw materials will be transported to the directly to machines. And machines immediately those raw materials will be converted into finished goods. Immediately they will be delivered to the customers. That means we can avoid, the stores department won't be there. That means we can avoid raw material stock. So as we are doing immediate quick productions here, we can avoid work in progress stock, and also we can avoid finished good stock can be avoided. That means we can avoid huge carrying costs. Okay, this is what just in time system. Okay, so to implement just in time system, so there while implementing just in time system, there will be two effects, two ways of so one is benefits and another one is cost, sir. What all the benefits means? Nothing but carrying cost only. So we can reduce the carrying cost, rent carrying cost, interest on working capital carrying cost, insurance, labor, all these are carrying cost only. Okay, simply we can reduce the carrying cost, sir. Okay, so and also some cost will be there. Okay, first one is stock out cost. If you are following just in time means there are chances that stock out situation can be arranged. That means um, all of sudden we are making all of sudden customer places order means immediately we place an order to the supplier. If at that time the supplier is not able to supply the raw materials means stock out situation can be arises. Stock out cost means okay, labor idle time cost, something like that. And also customer get dissatisfaction means they won't get the delivery immediately means they will get dissatisfaction. And okay, there might be chances that customer can cancel the order. If he cancels the order means profit will be lost, and also in future sales can also be affected. And here we need to install some IT software systems and everything, right? So that's why we have to do some capital investment. Okay, on the capital investment, depreciation and opportunity cost will also be there, sir. And also there will be some operating cost. Okay, here uh, so in just in time system, as we are not having any stock blockage means we don't need to have some control over the inventory. That's why we don't need any detailed accounting procedure. That means here we follow Backflush accounting. Okay, in olden system we follow some complex accounting system, that is so integral non-integral cost accounting system. Simple. That's it, sir. Here, so four types of raw material cost is there: purchase, ordering, carrying, storage, stock out cost. Sorry. Okay. So total ordering cost, annual demand divided by ordering cost into O. Okay. So total carrying cost half of OQ into C, sir. Okay. That's it. So with this information, we can do some problems here. Go to the workbook. Okay. In study material, we have two questions only, sir. So illustration 10 and 11. Okay, if you can observe, if any question came from just-in-time concept means these two models only will be there, sir. Just with changing numbers and everything, they will ask the question. Okay, so come to the page number 4.2.1. Read this question, illustration 10, sir. Okay, read each and every point. Identify whether that cost number, whether that number is benefit or cost. If you implement the just-in-time system, whether that is benefit or cost, just identify, read each and every point, sir. Okay, sir, I'm reading the question. Tell me points. So, B Limited has decided to adopt just-in-time policy for materials. The following effects of just-in-time policy are identified. Okay, first point, to implement just-in-time, company has to modify its production and material receipt facilities at a capital cost of 10 lakhs. The new machine will require a cash operating cost of 1 lakh 8,000. The capital cost will be depreciated over 5 years. What is this, sir? Cost or benefit? Operating cost is cost only. Okay, and the capital investment is there. The capital investment is not the cost, but on that capital investment we will incur some interest cost and also depreciation also given. But here for depreciation, one more some small point is there. I will tell you while solving the problem. Raw material stock holding will be reduced from 40 lakhs to 10 lakhs. That means 30 lakhs can be saved. 30 lakhs is not our benefit, sir. 30 lakhs is saving in working capital only. Okay, on that working capital we can save interest cost, right? Opportunity cost, that is only our benefit. Okay, so next, the company can earn 50% on 15% on long term investments. That means okay, on this capital investment, capital cost of 10 lakh, we have to calculate 15% long term investment cost, sir. And also in this 30 lakhs of working capital, again 15% interest cost benefit. Next, third point, the company can earn 15% on its fourth point, the company can avoid rental expenditure on storage facilities amounting to 33 per annum. Okay, that means cost or benefits are benefit only. Property taxes and insurance amounting to 22,000, benefit only. Okay, so fifth one, presently there are 7 workers in the store department at a salary of 5,000 each per month. After implementing just-in-time scheme, only 5 workers will be required in this department. Okay, balance 2 workers employment will be terminated. That means how much cost we can save, sir? 10,000 per 2 employees into 5,000 per month. But okay, so we are saying we are calculating this interest cost per annum. Okay, everything we can calculate per annum. That means here also we can calculate per annum into 12. Okay, that is the saving from employees cost. Next one, sixth point, due to receipt of smaller lots of raw material, there will be some disruption of production. The cost of stock out cost are estimated at 77,000. Directly they have given cost element only. Okay, now we have in 6 points we have some benefit elements and cost elements. Okay, just do cost benefits analysis, right? All the benefits one side, right? All the cost one side. Okay, make a total of it, compare benefit or cost, whichever is higher. Okay, so we can take a decision set. Just some small question only. So what they are asking the question, determine the financial impact of just-in-time policy. Okay, is it advisable company to implement just-in-time system? We have to decide. Okay, based on cost benefit analysis. Okay, so solution, keep a heading like cost benefit analysis of just-in-time system, sir. Just in time. Okay, now first of all let us try to write benefits, sir. Benefits. So what is that first benefit? Okay, so in first point we have cost only. Stock holding, so reduction in working capital. Okay, see. Okay, first point, savings from reduced working capital. Working capital, or else we can write it like reduced inventory. Okay, inventory reduced from 40 lakhs to 40 lakhs minus 10 lakhs. That means we could save 30 lakhs inventory. On that 30 lakhs, we can earn if we invest that 30 lakhs outside investment. If we make an outside investment means on that how much return we can get, sir? 15 percentage. Okay, so into 15 percentage, that means how much, sir? 1,50,000, 4,50,000, 4,50,000. Okay, what is our second point, sir? Second benefit. Okay, in fourth point, rental expenditure savings 33,000 and insurance and taxes 22,000. Savings in rents how much? 33,000 and insurance and taxes. Insurance and taxes 22,000, right? Okay, next one. Okay, reduction in labor cost. We can write it like savings in employee cost. Savings in employee cost. Okay, how much we could save, sir? Okay, originally 7 employees are there. Okay, so we can maintain 5 employees. That means only 2 employees can be removed. That means for each employee 5,000 is salary per month multiplied with 12 months. Okay, how much? 1,20,000. Okay, next point. Any other benefits are there, sir? No. Okay, so make a total of it. How much? 6,25,000. Okay, next one, cost. Cost by implementing cost, additional cost from implementing just-in-time system. Okay, now, so what is the cost, sir? So first one, so simple points, let us try to write. Mission operating cost was there. Okay, mission operating cost 1,08,000. Okay, write it. Operating cost. Okay, next one. What is the other cost, sir? Stock out cost also directly given. 77,000. Okay, next one. Final point, sir. Capital cost. Capital investment cost will be there, right? Okay, how much capital investment we are making, sir? Capital investment, that is 10 lakhs. Okay, for this 10 lakhs, there will be some opportunity cost. Opportunity cost means interest. interest cost. How much interest, sir? So 10 lakhs into 15 percentage, that means 1,50,000 is capital cost, capital investment interest cost. Okay, and again, okay, so as we are purchasing machinery, right, a new machine by using the 10 lakhs, okay, the capital cost will be depreciated over 5 years. That means depreciation cost for each year, how much, sir? Life, machine life depreciation, for depreciation life is 5 years. Let's say depreciable value, so complete 10 lakhs is the depreciable value, no scrap value. Then 10 lakhs divided by 5, that means depreciation per each year is 2 lakhs. Okay, generally these interest cost, these depreciation cost, both are the cost only. Okay, so but in our CMA final study material, what they are saying is this depreciation cannot be considered as a cost here. Why means this depreciation is nothing but apportionment of capital investment only. Okay, just we are apportioning that capital investment for 5 years. This cannot be taken as a cost. Okay, just take interest cost and do your analysis. Okay, so but so the our study material only, so our CMA material only saying like that, but I have seen CA final AMA materials, advanced management accounting. So some subject was there before 2019, I think. Okay, on in CMA final level AMA, so same just in time concept was there and these same problems are there. But again in that materials they have considered depreciation cost also. By depreciation cost, considering depreciation cost also, they have made decisions. But we here we are writing CMA final, right? Okay, we have to follow CMA middle. That's why, okay, we also write so depreciation for depreciation we will write a short note point, sir. Sixth one, interest cost, capital cost. Capital cost, take 1,50,000 only. 1,50,000. Then total cost will be how much, sir? 3,35,000. 3,35,000. Okay. Now net benefit will be how much, sir? 2 lakh. 2,90,000 is net benefit. Yes. Okay. As benefit is greater than cost, we can implement just in time system, sir. But before writing that conclusion, write a note point. Note. Okay, since depreciation 2 lakh rupees, that means 10 lakh divided by 5 is apportionment of capital. Therefore it is not considered as next. Finally, conclusion. As benefit is greater than cost, okay, therefore implement just in time system. Okay, we have one more problem, sir. Okay, see, so come to the additional questions, page number 4.2.4, sir. Okay, we have past attempt question, December 2018. Same question was asked, but with changing some numbers, sir. Similar kind of question. Okay, you can read that question, and so answer is also there. Okay, you can try this question. Okay, later, not now. Now read this question, illustration 11, sir. Okay, in recent attempt, that means December 23 attempt, this question came in the examination. Okay, but not complete question, sir. In this particular question, we have to do so 3 alternatives analysis, but in December 23 attempt, they have removed one alternative. So by comparing two alternatives only, we have to do the answer. Okay, that means this is the big question. If you can solve, if you can understand this question, means you can do other problems also. That means the question which has came in the December 23 attempt. Okay, so same question only, but they have removed some portion of this question. That's it. Okay, this one is somewhat lengthy question, not an issue. Okay, so let us solve this question. Okay, read that question completely from beginning to end. Okay, so identify the numbers. What is that number? What is that cost? Whether ordering cost, carrying cost, what is that cost? Okay, like that, read the question completely once, then we will start doing the problem. Done? Read the question completely, guys. Shall we start? Yep. Okay. So Ultra Video Company sells a package of blank videotapes to its customer. Videotapes means videotapes. Something like video cassettes. Okay. So which companies are Ultra Video Company? It sells packages of blank videotapes to its customer. It purchases videotapes from a tape company. Okay, let's say now our company is Ultra Video Company. Okay, we are purchasing the stock from S-Tape company. So at purchase cost is 150 rupees. Okay, S-Tape company pays all freight to Ultra Video Company. No incoming inspection. At now present, no inspection cost is there because S-Tape company has a superb reputation for delivery of quality merchandise. Annual demand of Ultra Video Company is per year they require 15,600 packages. Ultra Video Company requires a 10% annual return. That means this can be used for carrying cost calculation. And the purchase order lead time is 2 weeks. The order is purchased through internet and 20 rupees per order. That means ordering cost per order is 20 rupees and relevant insurance material handling cost is 10 rupees per package. That means this is also carrying cost. Okay. So now here in this particular question carrying cost have two parts, sir. Okay, carrying cost that is equal to direct fixed cost of 10 rupees plus 10 percentage 10 percentage on purchase price. That means 15 into 150 into 10 percentage. How much, sir? 15. Okay, so like that we have to calculate carrying cost per unit per annum, sir. See now Ultra Video has to Ultra Video has to decide whether or not to shift to just in time. Now they are purchasing in old system, not a just in time system. Now they want to shift to the just in time system. A step company agrees to deliver 100 packages of videotapes 150 times. Okay, what is their annual demand, sir? 15,600 is their annual demand. Right now in just in time system, they want to purchase how many times? 100. So ordering quantity is 100 only and 156 times 156 number of orders they have to place, sir, if they follow just in time system. Okay, instead of existing delivery system of 1200 packages 13 times a year. Okay, see, so after reading question till now we got, so clearly we can understand we have two alternatives, sir. So what are the two alternatives? Okay, existing policy and just in time policy. Okay, from a tape company we have two alternatives. Okay, let's say from a tape company itself we have two alternatives, sir. Existing policy, just in time system, sir. Okay, so so ordering cost 20 rupees 20 rupees. So carrying cost also there we have to calculate. Okay, so next one, what are they saying? So orders, ordering quantity in just in time system 100 units. How many times, sir? 156 times. Okay, in existing system what they are saying in the question. Okay, in existing system, so ordering quantity is 1200 packages 13 times. Okay, so ordering quantity is 1200 packages 13 times. That means this stock ordering quantity can be used to calculate carrying cost and this number of orders can be used to calculate total ordering cost. Okay, now see with additional amount of 0.05 purchase per package. That means so what is our existing purchase cost, sir? 150 rupees. Okay, if they follow existing policy, purchase price is 150 rupees only. Okay, if they shift to the just in time system, okay, their purchase price will be increased to 150 point plus 05, right? 150.05. Okay, now so Ultra Video Company incurs no stock out under existing policy. So in case of existing policy, there won't be any stock out cost. But it is estimated that Ultra Video company will incur stock out cost on 50 videotapes under just-in-time policy. Okay. So if they follow just-in-time policy means 50 videotapes will be stock out situation. For 50 videotapes, stock out situation arises. In that event of stock out, Ultra Video company has to place rush orders with a cost of 8 rupees per package. That means what is the stock out cost? Okay, stock out cost in case of, so here we won't be having any stock out cost, but if you follow just in time system, for 50 packages, for you have to make rush orders means immediate emergency orders. For that 50 units into 8 rupees is our stock out cost. Okay, now again, RAM company also supplies videotapes. So this data is from Ashtape company, one supplier. Now we have another supplier, sir. RAM company also supplies videotapes. Another supplier agrees to supply at 145 rupees per package under just-in-time delivery system. Okay, so he is also agreeing to supply under just-in-time system. Just-in-time system means here ordering quantity is 100 packages 156 times. That means, okay. Now, if videotapes purchased from RAM company, okay, it agrees to supply at 145 per package under just-in-time system. If videotape is purchased from RAM company, relevant carrying cost would be 9 rupees per package against 10 rupees in case of purchase from Ashtape company, sir. So let us try to present this data, sir. Okay, now we are purchasing from RAM company. If you purchase from RAM company, what is the purchase cost, sir? 145 rupees only. Okay, so carrying cost, what they are saying, carrying cost, fixed carrying cost. Here carrying cost we have two parts, 10 rupees fixed part and 10% is also there. 10 rupees from Ash company, but in case of RAM company it is 9 rupees only. Okay, again, so however RAM company does not enjoy sterling reputation for quality. Okay, so they won't supply some quality goods. That's why Ultra Video company anticipates the following negative aspects purchasing from RAM company. If you purchase from RAM company means you will incur additional inspection cost of 0.05 per package, and average stock out cost will be 360 tapes, largely resulting from late deliveries. RAM company cannot make rush orders, so Ultra Video company has to anticipate loss of contribution. So 10 rupees from stock out. That means 360 units stock out, and each unit you will incur 10 rupees of cost, and also inspection cost is 0.05. That means again here stock out cost will be 360 units into 10 rupees, and also we will incur inspection cost. Okay, as Ashtape company supplies, this has good reputation, right? That's why you don't need to inspect the goods here, raw materials here, but we have to inspect here. So on 0.05 we have to inspect each and every unit. That means what is our annual demand, sir? We need to purchase 15,600 units per annum. Each unit we have to inspect, so this is total inspection cost per annum. Okay, now what is the other point, sir? Data. So customer would likely to return 2% of all packages due to poor quality. Okay, 2%, and to handle this return, an additional cost of 25 per package would be incurred. Okay, this is also from RAM company. If you purchase RAM company only, this cost will be incurred. Okay, what is that cost, sir? Returns. Returns in total 2% of total. What is the total, sir? 15,600 into per each unit. What is that cost? 25 rupees is additional cost. This is returns cost, inspection cost. Okay, so if you can observe what all the cost in this particular problem means, okay, so you will incur purchase cost, sir. To bring those materials, you will incur again ordering cost. After bringing those materials to the stores means you will incur some carrying cost, and inspection cost will be there, After that, stock out cost, and returns. Okay, these all are the cost elements given. So for the three alternatives, what are the three alternatives here we have? From a step company, existing policy and just in time policy. From ram company, just in time policy. We have three alternatives here. Okay, we have to calculate purchase cost, again ordering cost, total carrying cost. Okay, so total stock out cost, inspection cost, rental cost, and everything. We have to do some detailed calculation. That means for each alternative, we have to calculate total cost per 1 year. That means why data is given for annual demand of 15,600 units, right? Okay, so that's why for this annual quantity demanded for 1 year per annum, we have to calculate total cost in each alternative. So go to the question and comment whether alter video company can place order with ram company or not. Okay, we have three alternatives: RAM company, S-type company. If you are purchasing from S-type company, whether existing policy or just-in-time system, or else if you should purchase from RAM company, we have to decide, sir. Okay, to decide that, so let us start solving the problem with single statement like this only. We can take the statement particulars, S-type company, existing policy, just-in-time policy, just-in-time from RAM company like this. So take four columns, sir. Take four columns. Okay, solution. Keep heading like analysis of all the alternatives. All the alternatives. Okay, here we have how many alternatives are? Three alternatives. Okay, take particulars column. Then from S-type company, we have two alternatives: existing alternative and just-in-time system. Okay, and also from RAM company, just-in-time. That means here we have three alternatives, sir. Okay, so first of all, let us try to calculate each cost, sir. Each cost. Now see, first cost, purchase cost, sir. Purchase cost. Okay, so what is our annual demand, sir? Annual demand is equal to 15,600. Okay, so but purchase price under existing policy is 15,600 into 150. But in case of just in time, 15,600 into 150.05. In case of just in time from RAM company, 15,600 into 145, sir. Okay, so calculate and tell me the what total amount. 23 lakh 40,000. Okay, second one, 23 lakh 40,780. Last one, 22,62,000, sir. Just purchase cost only. Next one. Second one, sir. Ordering cost. Ordering cost. Ordering cost per order, how much, sir? 20 rupees. Okay. In case of existing policy, how many orders we will place, sir? 13. Ordering quantity is 1200, 13 orders only. 13 into 20. How much? 260. Okay. So in case of just-in-time system, each time we place an order of 100 units only. That means 150 is the time, 6 times we have to place an order into 20. Okay. Here also just-in-time 156 times into 20. Okay. 3120. 3120. Okay. Now okay, inspection cost. So carrying cost, we will be having some calculation for carrying cost. Okay, we'll see that at the end of the problem. Okay, for now, so let us complete all other costs, sir. Third one, let's say inspection cost. Inspection. Okay, so in case of a step company, as they are having some good reputation, okay, no need to do inspection. But for from RAM company, annually we are purchasing 15,600 unit, and each unit our inspection cost is 0.05. In total, how much, sir? 780 rupees. Okay, excellent. Now, after inspection, what all the cost we have, sir? Stock out cost, right? Stock out cost. Okay, in existing policy, we won't incur any stock out cost. Okay, if you go for just in time, so just in time from S type company means what is the stock out units, sir? 50 units. On each unit we have to place rush orders 8. That means how much? 400. Okay, so in case of RAM company, 360, right? 360 is stock out units, and we cannot make rush orders. Okay, that means we will lose sales. That means contribution can be lost. For each unit, 10 rupees contribution can be lost. That means 3,600 rupees. Okay, now finally we have customer returns, sir. Customer returns. So customer returns in first place, second place there won't be customer returns. Okay, now in third alternative only we will be having customer returns. Okay, so how much customer returns are? 2% only. Okay, annually we are selling 15,600 units. Out of this, 2% customers will return the goods. Okay, on each return, what is the cost? To handle that return, we will incur 25 rupees cost, sir. Okay, so in total, how much? 7,800. Okay, that means we have written all the alternatives. Okay, now Sixth one, all cost we have written, sir. Now we have to write carrying cost. Okay, so let us take a working note for this, sir. See, working note 1, calculation of carrying cost. So to calculate total carrying cost, what is that formula, sir? We need half of ordering quantity into carrying cost per unit per annum. That means we have to calculate the C value and also OQ values. Now, to calculate the C value, again carrying cost per unit per annum given in two ways. First one, fixed part and variable part 10%. Now we have three alternatives: existing system, just in time from Yash tape company. We have two alternatives, and RAM company, from RAM company. Okay, what is the purchase price, sir? Purchase price here 150, here 150.05, here 145. Okay, now carrying cost given in two ways. So first one is material handling, something like that, carrying cost per unit per annum. Okay, insurance and material handling. Material handling fixed 10 rupees, 10 rupees, but in case of RAM company it is 9 rupees only. Okay, again 10 percentage interest cost. This 10 percentage we should calculate on purchase cost. Okay, that means 150 into 10 percentage, 15. Okay, 150.05 into 10 percentage, how much, sir? 15.145. Here 145 into 10 percentage, 14.5. Okay, in total C value will be 25, 25.005. Okay, here 23.5 only. Okay, now also we have to calculate average inventory, average stock. Okay, what is our ordering quantity, sir? In case of existing policy, we are making 1200 units order, but in case of just in time 100 units only. Okay, now total carrying cost, total carrying cost, that is equal to half of OQ into C value. We have, so 1200 divided by 2 into C 25 in this alternative, 15,000. Okay, next one, here half of 100 into 25.005, 1 2. Here in third alternative, half of 100 into 23.5, 1175. Okay, write these amounts in the above statement. Okay, carrying cost 15,000 for first alternative. $15,000 for second alternative. It is 1250. For last alternative, it's 1175. Okay, now make totals in each column. 23,55,260. In second alternative, 23 lakh 40. Okay, 550. Okay, leave that 0.25. 550. In third alternative, 22 lakh 78,475. That's it. Okay. Here we have two or three alternatives. Okay, if you are comparing if you are comparing these two alternatives only from a step company means okay, if you want to purchase from a step company only, then which one is the best, sir? Just in time. Go for just in time. If you want to decide between S and RAM means you can go for RAM company. So right conclusion. Out of three alternatives, just in time alternative gives least cost compared to existing policy. Therefore, implement just in time. As out of three alternatives, just in time alternative gives the least cost comparatively from existing system. That means you can install just in time system. First point. Coming to second point. Okay, so just in time system, just in time from RAM company gives least cost. That means therefore it is the best alternative. Done, sir. Okay, so with this successfully you have completed just in time concept. Okay, so in morning session we will discuss SCM part, and afternoon session DM part. Okay, thank you all. We'll meet you in the afternoon session. Bye. Yeah. Hi, hello everyone. Good morning. Welcome back to BCCA. So, in previous class, means yesterday's class, we have discussed with just in time, sir. Okay. So when we are following traditional costing approach, that means a traditional material procurement procedure means in that procedure we will be having some stock levels. So raw material stock, work in progress, and finished good stock at three levels. There will be some stock blockage, and that stock we will incur some carrying cost. Okay, as we are having stock inventory levels at three stages, we need to have some control over that stock or inventory. Okay, that's why we need to maintain some detailed complex accounting system, that is cost ledger accounting system, sir. Under traditional costing system we have to maintain so cost ledger accounting system, sir. Okay, so when you are following traditional costing system for material procurement procedure, okay, there will be some inventory blockage. As inventory is blocked at three levels or three stages, we need to have some control over that inventory, sir. Okay, so to maintain the control over that inventory. So what does it mean by control? Control means how many units of raw material we have. So what is the value of that? How many units are we are receiving? How many units are we are issuing to the production or other departments? So that all the data we need to maintain, sir. So to have all the data, we need to maintain some detailed accounting system. Detailed accounting system, sir. So the detailed accounting system is nothing but cost ledger accounting. So under cost ledger accounting system, so we have two methods here. That means integral accounting system, integral and non-integral, sir. Two types of accounting will be there. So integral accounting system and non-integral accounting system. So what is integral and what is non-integral, sir? So integral means so costing and financial accounting, both the accounts will be maintained in same set of books. Okay, non-integral means two separate set of books will be maintained for cost accounting and financial accounting. Okay, so this non-integral accounting system we don't need here, but we have to know some just at least some basic journal entries in case of integral accounting system, sir. So integral accounting system means costing and finance accounts will be maintained in maintained in same set of books, sir. Okay, so in this traditional costing system, under integral accounting system, okay, so we'll be having four trigger points, sir. Four trigger points. Okay, see, in this integral accounting system, so traditional costing system and cost ledger accounting, okay, under integral type of accounting, so we will be having four trigger points. Sir, what does it mean by trigger points, sir? Trigger point means something that requires us to pass a journal entry, sir. Okay, that requires to pass journal entry. Okay, so four trigger points will be there. So now we have to understand what all that four trigger points, basic trigger points. So that four trigger points are. So first one is purchase of raw materials, sir. Okay, you have to pass a journal entry when you purchase the raw materials. Okay, so generally, what is the entry for purchase of raw materials, sir? In financial accounting, we know purchases to cash or credit. Okay, so but in integral accounting system, in place of purchases, we write stores ledger control account. Here, I will write raw material control account, sir. Okay, so the entry will be raw material control account, control account debit to cash or bank. Let's say cash account. Let us say this is a cash transaction only. Okay, you can write creditor also. Okay, why I am debiting this raw material control account, sir? Okay, raw material stock. Okay, current assets real account. Okay, so raw materials are coming into our business means so value asset value is increasing. So when asset value is increasing, we have to debit, increasing debit. Okay, when you issue raw material, so asset value decreasing, that means you have to credit that account, sir. Okay, now so this is first trigger point, sir. Next, see in this diagram. So our first trigger point is purchase of raw materials from suppliers. Okay, so supplier sends the goods to stores. Okay, we have received the raw materials, and for that we have passed a journal entry, raw material control account debit to cash or bank. Now, so after receiving raw materials, so when production department requires or requests the raw materials, the stores departments so issues the raw materials to factory or production department. So now again our second trigger point is issue of raw materials, sir. Second trigger point, issue of raw materials to production department, sir. Production. Okay. Now, what is the entry for issue of raw materials? Okay. So, when raw materials are issued to the factory, here that will be converted into work in progress. Then that will become finished goods. So when raw materials came here means we have to write the entry. So work in progress. It will become so work in progress, sir. That's why. Okay. So in stores department, raw material stock is decreasing, and in production department, work in progress stock is increasing. So as work in progress stock is increasing, we have to debit work in progress control account. Control account debit to which account, sir? Raw material control account. Okay. Raw material control account. Why we have to credit that raw material control account means when you are issuing raw material from stores means so stock is decreasing in stores department. Okay. So our next so when we issue the raw material to the production, here on that raw material, so we do some process to convert that raw materials to finished goods. So what we do, sir, generally we apply. So some labor will work on those raw materials. That means we will incur some direct wage cost, direct wages, and also we engage some machines, okay, and we use some resources like electricity, whatever it is. That means some overhead cost will also be there. That nothing but a fixed factory overhead cost. On that raw material we incur some direct wages cost and factory overhead cost. Why we are incurring this cost means to convert the raw materials to finished good. Okay, so as we are incurring this cost to convert raw materials to finished goods, so that's why we are calling this cost as conversion cost, sir. Okay, so that means we will incur some conversion cost. So conversion cost, why this cost means to convert the raw materials to finished goods. Okay, so what all the conversion cost means? So first one is direct wages. Direct wages. So second one is factory overheads. Factory or other overheads. Okay, now these two are our conversion costs, sir. Okay, so as we are incurring these two costs, we have to pass a journal entry for that, right? Okay, so what is that journal entry means? Okay, we are incurring a cost, so we can write, we can use the direct wages account, or else directly I'm using conversion cost account to cash, cash or bank. Okay, so direct wages plus overheads, we can write it directly, sir. Direct wages plus overheads for the two expense. Nothing but why we are debiting this conversion cost means this is nothing but expenditure. Expenditure, nominal account. Okay, debit all expenditures. Okay, credit all incomes. We know all the basic principles, right? Okay, conversion cost account debit to cash. Okay, so uh, what we are doing here is like these expenditure are incurred to convert raw material to finished goods. That's why we are applying this expenditure on raw materials. Okay, after applying this expenditure, raw material value will be increased. That means work in progress stock value will be increased. That means, so we have to add this cost to the value of work in progress. So now I'm applying this value to the work in progress, sir. So that's why as work in progress value is getting increased. Okay, that's why work in progress control account debit to conversion cost, sir. Conversion cost account. Okay, got this entry, sir. Okay, I'm applying this expenditure to the stock value getting increased. That means we have to apply that conversion cost to the work in progress, sir. Now, so see, so raw materials received, we have written an entry. Okay, now raw materials issued. Okay, for issue we have written an entry, and also we have applied some conversion cost entry, and also we have applied that conversion cost to the work in progress. Okay, so we have done with two trigger points. Now the third trigger point is completion of finished goods, sir. Third trigger point, completion of finished goods. Finished goods. Okay, so finished goods completed. So after applying that conversion cost, let us assume that work in progress converted into finished goods. Okay, now I'm transferring that work in progress stock to the warehouse. Okay, at the warehouse, finished goods stock is increasing. In factory, so work in progress stock is decreasing. Okay, now what is the entry, sir? Finished good stock is increasing. So that's why finished good control control account debit to work in progress control account, sir. So finished good control account debit to work in progress control account, sir. Now the finished goods are at warehouse. Okay. So now our fourth trigger point is sale of those goods, sir. Sale of finished goods. Sale. So finished goods are sold, sir. Okay. Now what is the entry, sir? Wow. Nice. Okay. So when we sale means okay, finished goods are so transferred to the delivered to the customer. That means finished goods stock is decreasing, and also we are making sale means okay, we have to debit cost of sales, cost of sales, or else in place of cost of sales we can write cost of goods sold. Account debit to finished good control account, sir. Okay, that means total cost of finished goods were transferring to the cost of sales account. So in cost of sales account, debit side will be so cost of goods sold will be there, sir. And also we have to write one more entry for sale. When we receive the cash means cash to the cost of sales. So whatever the amount we receive, we will credit. So debit side cost, credit side revenue amount will be there. By comparing, we can recognize the profit. Okay, so till this, okay, entries are enough for us, sir. Okay, so after sale, so we can so transfer this cost to the cost of costing P&L account. So everything will be there, but we don't need all those entries. Just four trigger points. What all that four trigger points means? Purchase of raw materials, issue of raw materials to production, completion of finished goods, sale of finished goods, sir. These all are the four trigger points, four basic entries, sir. Okay, so why we have to write or why we have to maintain all these control accounts? Raw material control account, work in progress control account, finished good control account, so, and also we are maintaining some cost of sales account, conversion cost account. So all these lengthy five accounts we are maintaining, and detailed so entries we are maintaining. So why we have to write all those entries means as we are having stock, so inventory at three stages, we need to have some control, right? That's why we are maintaining some detailed accounting procedure. But now, so what we are saying in just in time means as we are having inventory, we will be having some carrying cost. To avoid that carrying cost, so we came into the new procedure, new approach, that is just in time system. Okay, under just in time system, so there won't be any inventory, or else if any inventory is there means some negligible amount of inventory will be there, sir. So that's why don't need to maintain that elaborate detailed accounting system, sir. Okay, so just in time system means as we are having inventory, we will be having some carrying cost. To avoid that carrying cost, so we came into the new procedure, that is just in time system. Okay, so just in time system means ఓకే గైస్, వెల్కమ్ బ్యాక్. ఓకే, మీకు కలిగిన అసౌకర్యానికి చింతిస్తూ ఓకే, సారీ ఫర్ ద ఇన్కన్వీనియన్స్. హలో, హాయ్. See what we are discussing, sir. Yeah, in case of traditional costing system, when we are using middle procurement procedure traditionally, there will be hello, hi, there will be so inventory stock will be there. That's why we need a detailed accounting system. That's why we use traditional so cost ledger accounting system, sir. So when we go to the just in time system, so there won't be any so inventory or stock won't be there. So that's why we don't need the detailed complex accounting system. So we can use the system Backflush accounting, sir. When we are using just in time system, okay, so no or negligible inventory will be there, sir. Negligible inventory will be there, so we don't need that kind of detailed and complex accounting system. We just need some simple accounting system. We just need some simple accounting system. That simple accounting system is nothing but Backflush accounting, sir. Okay, Backflush accounting. Okay, so why it is called as Backflush? It flushes back the unnecessary entries. That's it. Yeah. So what we are saying in traditional costing system, four trigger points are 1, 2, 3, 4. So what are the trigger points? Purchase of raw material, issue of raw material, completion of raw material, finished goods, sale. Okay, these all are the four trigger points. Okay, so in traditional costing system, that means cost ledger accounting system, we pass all the entries for all the trigger points. That means we write this entry, this entry, this entry, this entry, all the entries. Now we came to the Backflush, sir. In Backflush accounting, so there are two versions or two variants will be there. Version 1 or variant 1, version 2 or variant 2, sir. Two version of Backflush accounting will be there. So what we do here means okay, so here we don't need to pass all the entries for four trigger points. Okay, so first one we pass the journal entry for purchase of raw materials. Okay, so as in just in time system, raw material supplied by the supplier directly they will supply to the doorsteps of factory. Okay, so that means there won't be any storage of raw material in stores department and then issuing raw materials to the so factory. So that's why we don't need to write issue entry here. We don't need to write raw material issue entry. Why means supplier himself directly supplying those raw materials to the production department, right? So that's why there won't be any issue entry. So we can avoid that entry, sir. Okay. Now after completion we can write an entry, and also on sale we have to write the entry. But okay, so as we are eliminating this entry, so work in progress control account won't be there, sir. So for that, what we do here means, so for that we use raw material plus, that means, see, supplier directly supplying raw materials to the factory. Okay, so raw materials directly at the place of factory, on the directly they will work, sir. That's why we don't need to maintain work in progress control account. So that's why what here we do is like, so whatever the raw materials in factory, that may represents either direct raw materials or else a direct work in progress. So that's why instead of using work in progress and raw material control account, we use combined name called raw material in process control accounts. That is not a RIP, that is raw material in process in process control accounts, sir. This is combination of both raw material and in process work in progress control account. So here we use raw material in process control account. Okay, now in Backflush we don't account for raw material consumption and cost of conversion during the production, sir. Okay, so what we are doing in traditional costing system means, in cost ledger accounting, while immediately we issue the raw materials, so we write it as work in progress. That means raw material converted into work in progress, and conversion cost is also directly added to the work in progress. Okay, but in backlash accounting we don't recognize this consumption of raw material and so cost of conversion so during the production. That means before completion of finished good. So when we will recognize those cost means, only on completion of finished goods, sir. That means when we completed the goods to finished goods, then only we can recognize this conversion cost. So directly this conversion cost added to the finished goods directly. Okay, so that is the some small difference from traditional to backlash accounting, sir. See, only three trigger points will be there, sir. Three trigger points only in version 2, nothing but in version 2 what we do is like, this purchase entry also we can eliminate. Okay, only two trigger points, two entries only will be there, sir. Okay, so see, that's it. Okay, so now let us try to write the journal entries in backflash version 1, sir. Okay, if you understand this entries means, okay, just eliminating one entry, that will become version 2. Okay, just eliminating this entry, it will become version 2 only. Okay, so first of all, backflush accounting, backflush backflush version 1, version 1 journal entries. So what is our first trigger point in backflush, sir? Purchase of raw material. So for purchase of raw material, what is the entry? Raw material, generally raw material control account. But here in backflush, we write raw material in process control account. Okay, so why we are writing raw material in process means, directly directly supplier delivering the goods to the production department. In production department there is inventory, that means that may be represent raw material, that may be some work in progress. So that's why in total whatever the inventory there in production department, that represents either raw material or work in progress. That's why I'm writing raw material in process control account to to cash to cash or bank. Okay, here, so when goods are supplied to the, when raw materials are supplied to the production department, so in production department we incur some conversion costs, sir. Conversion cost. Okay, just cost. So for that cost entry I'm writing, sir, conversion cost. Conversion cost, whenever I incur that cost means I have to write that journal entry, right? So conversion cost account debit to to cash account, to cash account. So one is direct wages, another one is overheads. Okay, so whenever I incur that cost, I have to write the journal entry. That is only I'm writing, but I'm not recognizing that cost, sir. Okay, when I will recognize that cost to the that inventory means only after completion of finished good. So what is our second trigger point? That means in second trigger point is completion of finished goods. Completion of finished goods. When finished goods are completed, so what I have to do, sir, I have to recognize raw material consumption in finished goods, and also so conversion cost for that finished goods, sir. That means so when we recognize the finished goods value is increasing. That means debit debit finished good control account, finished good control account. Okay, so to complete this finished goods I have used raw materials. That means raw material to raw material in process control account, raw material in process control account. Okay, so to conversion cost, conversion cost account, sir. So whatever the cost I incur, whatever the cost I incur to complete this finished goods, so that raw material consumption and conversion cost, that cost is now transferred to the so finished good control account. Okay, now what is our third trigger point? Sale. Third one, sale, sir. Sale, you can write either cost of sales account or cost of goods sold account debit to finished goods control account. Same entry, no change. Now, so what is that version 2? So what is that version 2 means? In version 2 we can avoid this entry. You can avoid this entry directly. You can write the second and third entries. 10 off. Some simplified accounting. That's it. Okay. Now, so here one assumption is there, sir. So what is that assumption means? Whenever you are following backflush accounting means that means you are following just in time system. And also another assumption is that we are following standard costing, sir. Standard costing system, so we are following, that is the assumption. Why means to recognize the raw material cost and conversion cost, so we recognize that cost at standard cost, prefixed cost, sir. So that means whenever you are following some standard costing means, so in standard costing, what we calculate, sir, we calculate some variance. Okay, actual cost, standard cost, difference, variance. Okay, so there are chances that variance can be arised. So that variance and discussion and everything we will discuss while doing one problem. One a small point only will be there. Okay, so I will explain that while doing the problem. Okay, let's go to the workbook, sir. In workbook we are having only just two problems only. Okay, we have two problems only here. Till now these problems are not asked in the examination, any examination. Okay, but before new syllabus, in old syllabus they have asked some theoretical questions, but these problematic questions are not asked in previous exams, sir. Okay, now so read that question, illustration 19, sir. Okay, so read this question, sir. Illustration 20. Okay, let's do this question, then we go for illustration 19. Okay, in illustration 20 we have to write only journal entries. Okay, so after doing this we go to the 19th one. So in that we have to open some ledger accounts and everything. Okay, read this question. Okay, so just try what all the entries we have to pass like that, just check, sir. Done. Okay, see, sir, Dandia Limited follows just-in-time system. It had following transactions in May 2021, sir. What is that first point? Raw materials were purchased for 20 lakh, 2 lakhs. So tell me what is the journal entry, sir? Okay, so here they are asking both traditional journal entries and backflush accounting. Okay, so in traditional accounting system, so entry will be raw material control account debit to cash 2 lakh. Okay, So first entry. Second one, direct labor cost incurred 36,000. Okay, actual overhead cost 3 lakh. That means conversion cost account debit. How much, sir? 3 lakh 36,000 to cash. That is, one is direct labor, another one is actual overhead 3 lakh 36,000. Next one, conversion cost applied 3 lakh 16,000 only. But what is the actual cost, sir? 3 lakh 36,000. Okay, so we have incurred 3 lakh 36,000. Okay, now what is actual cost we are applying, sir? 3 lakh 16,000. That means what is the difference? 20,000. Okay, so now we can call it as a, okay, so our actual expenditure is 3 lakh 36,000. But how much we are absorbing? So let's say this is overhead. So overhead absorption and actual. Okay, absorbed overheads are 3 lakh 16,000 only, but actual is 3 lakh 30,000. That means 20,000 is under absorption. Okay, so this under absorption overheads we can transfer it to the costing P&L account, sir. Okay, as we are following standard costing system. Okay, standard costing system. So that means only, so standard cost, based on the standard cost only we absorb the cost, overhead and everything. Okay, that's why any over absorption or under absorption, that will be transferred to the costing P&L account, sir. Okay, next one, all materials that were purchased were placed into the production. So whatever the materials purchased were placed into the production, that means we have purchased 2 lakh rupees raw material stock, sir. That were, so placed into the production means we have issued total materials purchased to the production. That means what is the entry, sir? Work in progress control account 2 lakh to raw material control account 2 lakh. So whatever we have purchased issued to the production, that's it, right? Next one, the production was also completed and sold during the month. Okay, whatever the, so total production means finished goods. So for finished goods, how much raw material we have used, sir? 2 lakh. And how much cost we are absorbing means 3 lakh 16 and 2 lakh. In total 5 lakh 16,000 will be the finished good. The total stock was sold. So for that amount we have to pass two journal entries. Okay, the difference between actual and applied cost is computed. Okay, actual and applied cost is how much, sir? 20,000. This has to be transferred to the costing P&L account. Okay, first of all we have to write the journal entries in traditional costing system, then we go for backflush, sir. Okay, now traditional costing system journal entries. Okay, now, so what is that first entry, sir? Purchase of raw materials. Purchase of raw materials, sir. In traditional costing system, we use raw material control account only. Raw material control account. Control account debit to cash. Cash account. How much, sir? 2 lakh rupees. 2 lakh rupees. Okay, next. Okay, whatever the materials purchased were put into the production. That means whatever the materials we have purchased that were issued to production. Now, so what is the entry, sir? Work in progress control account. Work in progress control account debit to which account, sir? Raw material control account. So how much? So 2 lakh. Whatever we have purchased, what placed into the production, right? So that's why 2 lakh materials were issued to the production. Okay. Now here we have also incurred some costs, sir. That is nothing but conversion cost. Conversion cost account. Conversion cost account. Okay, even though we write entry for conversion cost, we don't treat it as a trigger point, sir. Okay, just normal entry. That's it. So conversion cost account debit to cash. Let's say direct wages. How much, sir? 36,000. Let's say to cash. Okay, overheads. In actual, we have incurred 3 lakh rupees. That means in total. So conversion cost is 3 lakh 36,000. Okay, 3 lakh 36,000 is the cost, conversion cost. Now, third trigger point. Completion of finished goods. Okay, what they are saying in the question. Okay, all materials were issued, placed into the production, and the production was also completed and sold during the month. Okay, so whatever the materials issued, for all that materials, production is also completed. Okay, so that means we have to write finished good completion entry, sir. Oh, sorry, before that we have to apply this, right? Some small entry is there, sir. Sorry, I forgot. Okay, we have to apply this cost. Okay, conversion cost to work in progress, right? So that's why work in progress control account. Work in progress control account to conversion cost, sir. Conversion cost. Okay, so how much cost we are applying to work in progress, sir? 3 lakh 16,000 only. Okay, 3 lakh 16,000. Okay, so the difference will be transferred to the costing P&L account. Okay, so we can write the transfer entry here itself, or else we can write it at the end. So I'm writing here itself only. Okay, now so costing P&L account debit. Okay, why debit means under absorption. Okay, let's say if conversion cost account is like this, conversion cost account. Okay, so we have incurred to cash 36,000. Okay, so again to cash 3 lakhs. In total, debit side will be having 3 lakh 36,000. Okay, out of the 3 lakh 36,000, 3 lakh 16,000 was transferred to work in progress control account. Remaining 20,000 is the balancing figure. This will be transferred to the costing P&L account, sir. Okay, here debit means credit means costing P&L account will be debited. Costing P&L account debit to conversion cost account. Conversion cost how much? 20,000 only. Sir, how did you get this 20,000, sir? Means 3 lakh 36,000 minus 3 lakh 16,000. Okay, that's it. Okay, now completion of finished goods. So if you can observe, so let's say this is work in progress account, work in progress control account. Okay, we have transferred raw material to work in progress control account. So raw material, how much value, sir? 2 lakh rupees of raw material transfer to the work in progress account. And also debit side, so conversion cost, how much applied to work in progress, sir? 3 lakh 16,000. That means in total, in debit side of work in progress control, work in progress control account, we are having 5 lakh 16,000, sir. Okay, this total 5 lakh 16,000 we have to transfer that to finished good control account, sir. Now debit finished good control account debit to work in progress control account. How much? 5 lakh 16,000. 5 lakh 16,000. Okay, so whatever the amount of goods completed, so all those units were sold. Okay, sale entry. On sale we have to pass an entry. So cost of sales or cost of goods sold account debit to finished good control account. How much, sir? 5 lakh 5 lakh 16,000. 5 lakh 16,000. That's it. Okay, now we have to write, we have to pass journal entries in Backflush accounting system, sir. So they haven't mentioned any version 1 or version 2. That means we can write any version. So for now I am writing version 1. In version 1 I will pass the journal entries under Backflush accounting, sir. Okay, Backflush accounting. Backflush accounting version 1 journal entries. Okay. Version 1. So first trigger point is same, sir. Purchase. On purchase we have to pass journal entry. Same entry but some small change. Raw material in process control account, sir. Control account to cash. How much? 2 lakh rupees. Now directly we can go to the, so here we can write. So if you want to write, you can write conversion cost entry, or else we can avoid, sir. Conversion cost. So conversion cost account debit to cash. That means direct wages for to, again cash for overheads. Okay, one is the 36,000. overheads is 3 lakhs. In total 3 lakh 36,000. Okay. On completion of finished good only, we recognize that conversion cost, sir. That's why we can directly go to the completion of finished goods. Okay, in traditional costing system, we have applied this conversion cost to work in progress. That means all the conversion cost and raw material consumption will be recognized during the production itself. But in backflush accounting, we recognize this conversion cost and raw material consumption only after completion of finished goods. Okay, so that's why on completion of finished goods, we have to pass an entry. That is finished good control account, finished good control account debit to for raw material. Raw material, so in process control account. In process control account 2 lakh rupees. Okay, so generally in previous traditional costing system, we transferred this raw material cost to work in progress. Okay, here there won't be any some that work in progress account, right? That's why directly we have to transfer this raw material cost to the finished good. Then, so to conversion cost. So conversion cost. Previously we have applied this conversion cost to work in progress, but in Backflush directly we have to apply that conversion cost to finished goods, sir. How much conversion cost we have to apply? 3 lakh 16,000 only. So then 5 lakh 16,000 in total finished goods value. Now, now we have incurred the conversion cost of 3 lakh 36,000, but we have applied 3 lakh 16,000 only. That means that under absorption of overheads or conversion cost, okay, so should be transferred to the costing P&L account. So under absorption. So you guys know this under absorption or over absorption concept, right? Okay, actual cost incurred is 3 lakh 36, but we have recognized 3 lakh 60 under absorption. Under absorption should be transferred to costing P&L account. Costing P&L account to conversion cost account. Okay, 20,000, 20,000, sir. Okay, next one. Final trigger point, sale only. Third one, on sale. Okay, simple general entry only. Okay, cost of sales account debit to finished good control account, sir. Finished good control account, how much means? 5 lakh 16,000. That's it, enough. Okay, this under absorption entry. So you can write it here, or else you can write at the end. At the end, after writing this sale entry, you can write it here. Okay, not an issue. Now, so again, go to the workbook and read this question, sir. Read this question, illustration 19. Here we have to pass journal entries. Along with that journal entries, we have to write ledger account, sir. Okay, read the question twice. Write that question 2 times, sir. Okay, here there is an assumption or directly they gave like standard costing. Okay, so they have given standard cost per unit, sir. Okay, that means okay, so they are following a standard costing system. Okay, read that question and identify so what all the entries we have to pass and with what amounts we have to pass all that. See, done, sir. The manufacturing cost information uh, for March for division XYZ is as follows. Okay, so cost incurred in March in thousands they have given. Purchase of raw materials in total rupees value 4,250, sir. Okay, that means what is the entry? So if you are writing in backlash accounting means entry will be raw material in process control account debit to cash 4,250, sir. Labor 2,800 and overheads. That means in total what is the conversion cost? 2,800 plus 1,640. 4,440 is the conversion cost. Actually, this cost we have incurred, sir. Now, activity in March. Finished goods manufactured during the period 180 units. So, if you observe, this is units. Okay, that means this 180 is what, sir? Units. 180 units of finished goods are completed. Okay, so out of this 180, 145 units only sold, sir. Now, see what is the standard cost per unit. Standard cost means with what amount we have to recognize the cost of finished goods, sir. Okay, so material cost is 20 rupees and labor 15 and overheads 9 rupees, sir. Okay, so after writing first entry, purchase entry, and conversion cost entry. So what is our second trigger point means in backflush accounting, second trigger point is completion of finished goods. So while completion of finished goods, we have to recognize the cost, right? So for completed units, 180 units only, we have to recognize the cost, sir. For 180 units, what is the material cost, sir? Material cost is so 20 rupees only. That means 180 into 20 rupees. How much? 3600. Okay. So how much raw material we have purchased, sir? 4250 raw materials we have purchased. But 3600 only applied for finished good. That means what is the difference, sir? How much that? 6,650. So what is the 650? That 650 may be material cost variance, or else that can be closing stock. Okay, so if you observe these two lines, sir, there is no opening stock of raw materials, work in progress, or finished goods. It should be assumed that there are no direct material variance, sir. Okay, as they are saying no direct material variance means we can assume that as a closing stock. Okay, next. Labor and overhead, sir. How many units completed, sir? 180 units. Each unit cost 15 plus 9, 24. Okay, 24. 180 into 24 means 4320. Actually, for conversion cost, we have incurred 4440 cost. But how much we are applying to finished goods? 4320. What is the difference? 120. So now what is this 120 difference, sir? Over absorption or under absorption? That means cost variance only. Okay, as we are applying standard costing here. Okay, actual and standard. The difference between actual cost and standard cost is nothing but variance. That means overhead or labor cost variance. That variance we will transfer that to the costing P&L account, right? Okay. So next, then show the relevant journal entries. Okay, so after so recognizing finished goods, we have to account for whatever the units sold. For that 145 units, so we have to make an entry, a sale entry, sir. Then what we have to write here? Show the relevant journal entries and ledger accounts in variant 1 and variant 2 backflush accounting, sir. So relevant journal entries. So in version 1, sir, let us write the journal entries in version 1. Okay, so first one, backflush version 1, sir. Version 1. Okay, journal entries. Okay, if you write version 1 means version 2 easy only. Okay, so in version 1, what is our first trigger point? First trigger point, purchase of raw materials. Okay, write the journal entry. Okay, raw material in process control account debit to cash. How much, sir? 4250. 4250. Okay, now so in backflush directly whatever the raw material purchased will be supplied directly to the production department. That's why you can write conversion cost entry also here. So conversion conversion cost, sir. Okay, so for conversion cost, okay, so conversion cost account, conversion cost account debit to cash and also to cash. Okay, so one for direct wages, another one for overheads. Okay, so what is the total cost? 2800 and 1640. 2800 and 1640, sir. Now what is the total? 4440. Now go to that second trigger point, sir. Completion of finished goods. Are you guys reading, sir? Okay. Completion of finished goods, sir. Okay, on completion of finished goods, so pass journal entry, finished good control account debit to raw material in process control account and to conversion cost account, sir. Okay, here we are following standard costing, sir. Okay, so as we are following standard costing, we have finished completing 180 units. For that 180 units, how much standard cost of raw materials we have to recognize means raw material standard cost is 20 rupees only. Okay, for the 20 rupees only we have to recognize raw material in process account. So 180 into 20, that means how much? 3600, sir. And conversion cost, so for conversion cost also 180 units only completed, and for that conversion cost 15 rupees direct wages, 9 rupees overheads. Okay, so that means 24 rupees. For 24 rupees only you have to recognize 180 into 24, how much? 4320. That means how much, sir? 7920 rupees. Okay. So how we got this 24 means 15 plus 9, sir. Okay, so we left with okay, here we have to identify the under absorption of conversion cost. That entry I will write later. Okay, for now pass third entry, sir. Third trigger point, what is that? Sale. So for sale, so cost of sales account to finished good control account, sir. Okay, so what is the standard cost? So here we have completed 145 units only. For each unit, finished good standard cost. Finished good means raw material cost and conversion cost. For raw materials, 20 rupees only we have recognized, and for conversion cost, 24 rupees only we have recognized. That means in total 145 units into 20 plus 24, 44 we have to take, sir. Okay, so in total 145 into 44, how much, sir? 6000, 6380, 6380, 6380. Okay, then leave a space for one or two entries here. Leave some space, sir. Then open ledger account, sir. Ledger accounts. Okay, so what is our first ledger account is raw material in process control account. Raw material in process control account. Okay, in debit side we have to write what, sir? To cash. How much amount we have purchased, sir? 4000 with 4,250, right? 4,250. Out of this 4,250, how much was applied to finished goods, sir? By finished good control account, how much we have recognized in finished goods, sir? 3,600 only been recognized. 3,600. So now what is the difference, sir? 650. 650 is the difference. This is nothing but balancing figure. Okay. So this balancing figure can be arised out of two reasons. Either due to closing stock or else due to variance. Okay. So in question they are clearly saying that there is no material cost variance. So that's why you can assume it as a by balance brought down or carried down, sir. Carried down. Okay, now coming to conversion cost account, sir. Conversion cost. So conversion cost, again two types of conversion cost is there. To cash, direct wages, how much, sir? 2,800. Again second one, to cash, okay, overheads, how much? 1640. This 1640. Okay, so actually we have incurred that cost, but how much cost we are recognizing in the books means in for finished good means by finished good control account 4320 only. In total debit side there is 4440, but we are recognizing in credit side 4320. The difference is 120 is the difference. This 120 is nothing but balancing figure. This difference can be erased. Why, sir? Okay, so closing stock. So as this is expenditure, there won't be any closing stock, right? So that's why. Okay, so this is due to so nothing but we can say it as a over absorption or under absorption. In standard costing we call it as a variance. Okay, this is actual cost, this is standard cost. The difference between actual cost and standard cost is variance. Okay, so this variance can be transferred to the costing P&L account, sir. Costing P&L account. Then next we have what account, sir? Finished good control account. Finished good control account. In finished good control account, debit side to raw material in process control account, how much, sir? 3,600 only. Okay, to conversion cost account 4320. This is for 180 units. By cost of sales account. Okay, we have produced we have completed 180 units, but we have sold 145 units only. For that 145 units, what is that cost? 6380. The difference, how much difference, sir? 1540 is the difference. This is nothing but balancing figure. Why this balancing figure arised means, okay, clearly we can understand we have produced 180 units but sold 145 only. So nothing but closing stock. By balance carried down. That's it, sir. Okay, we have done with version 1. Okay, so here we have to pass what entry, sir? Conversion cost under absorption transfer to the, okay, so costing P&L account. Costing P&L account debit to conversion cost. Conversion cost how much, sir? 120. Okay, nice. This entry only enough. Okay, now we have to write in version 2. No need, sir. If you want to write, right. So for the cost of sales, to write the cost of sales account, we need for how much amount we have sold that goods. Okay, that only revenue one side, cost one side. We have to compare that and calculate profit. Okay, we don't have that information, right? Okay, only we can pass only debit side entry only we can pass post in that particular account. So go to version 2, sir. Okay, so in case of version 2 entries, okay, what we have to do is like just eliminate purchase entry. In version 1 we have written, right? Okay, in this version 1 entries, okay, so just eliminate that purchase of raw material purchase entry and copy paste all other entries, sir. Just copy paste all other. Okay, if you want to copy, you can copy conversion cost, or else you can also leave that. And just copy paste these two trigger points, sir. What are the trigger points? Completion of finished goods and sale entry. Just two entries enough. That is only version 2 saying. That's it, sir. Just copy paste version for version 2, just copy paste. So second trigger point and third trigger point, you don't need to write that purchase entry. That's it. Ledger accounts will be same. Okay, you don't need to copy paste your ledger accounts. Done. Okay. That's it, sir. That's it for backflush accounting. Okay, so in workbook we have 2 3 theory questions, sir. Theory questions, variants of backflush accounting, and okay, what are areas where backflush accounting will be useful, backflush accounting procedure. So whatever we have done, whatever the entries we have passed, so regarding that only some theoretical point will be there. Okay, so see, in this question there are number of variants in backflush accounting system, each differing as to the trigger points, okay, at which costs are recognized with the cost accounts and thus associated with projects. Variant 1, this has two trigger points at purchase of raw materials and everything like that. Everything will be there, sir. Data. Okay, so go through the theory once, you can understand. Okay, that's it, sir. That's it for backflush accounting. Thank you all. So we'll meet you in the next class. Okay, so go through the theory once. Okay, if you are having any doubts means, then I will explain. Okay, not an issue. Thank you all. Bye. Yeah, hi, hello everyone. Good morning. So in SCM, till now we have discussed in chapter number 4, we have done with just-in-time backflush. Now we have two more concepts here, that is throughput costing or throughput accounting and activity based costing. And now in class, we shall discuss about throughput accounting, sir. Throughput. So in throughput, in total, we have only four concepts, sir. Concept number one, concept number two, concept number three, concept number four, sir. So first concept is difference between absorption costing versus marginal costing versus throughput costing. Okay. So what is absorption costing and marginal costing and throughput costing? The difference is between three concepts. Okay. And then we have concept of bottleneck, sir. Bottleneck. So if there is a bottleneck, so what are the strategies we have to eliminate that bottleneck? Strategies to eliminate bottleneck. Next one is when there is bottleneck, okay, how to calculate optimal product mix. Optimal product mix. Next, last concept is based on throughput accounting. We will be having some formulas, sir. Okay, so first of all, let us start with first concept, sir. Concept number one. So the difference between absorption costing, marginal costing, and throughput costing. Okay, so we have here nearly some 7 problems only. Okay, so in this concept we have illustration 16. Only one problem is there on this concept, sir. Okay, so for other three concepts we have two problems. Now see, sir, concept number one. So the difference between absorption costing, marginal costing, and throughput costing. Okay, so before going to discuss about this concept, okay, we have to understand, okay, what is a product cost and a period cost, sir. Product cost and period cost. product cost. Generally, under absorption costing, whatever the cost incurred to produce a product is treated as product cost, sir. That means cost of production. Cost of production. So under cost sheet, in cost sheet, we all know that. So how to calculate this cost of production, sir? So direct materials plus direct labor plus direct expenditure. So this is prime cost plus factory overheads, whether that is variable or fixed. Factory overheads, we have to add that. So in total, this is called cost of production, sir. Okay. So now, what is a period cost, sir? That means the product cost is the cost incurred to produce a product. So after this, so after calculating cost of production, we will classify this into the cost of goods sold and closing stock. Okay. So let's say, for example, in this particular year, if we have sold, if we have produced 100 units, out of this 100 units, so if you calculate this cost means that is cost of production. Okay. Out of this 100 units, let's say, for example, 30 units only sold and 70 units are unsold, sir. That means this 30 units cost is cost of goods sold. This 70 units cost is closing stock, closing stock value. Okay. So cost of production again then bifurcated into the cost of goods sold and closing stock. Now what is a period cost, sir? So period cost means whatever the cost we incurred to sell that production. Okay, that means nothing but selling and distribution overheads. Selling and distribution, we treat that as a period cost. That means whatever the cost you incurred on selling and distribution, that will be transferred to the P&L account. Okay. So here if you can observe under product cost, okay, cost of goods sold and closing stock, sir. So cost of goods sold will be transferred to the P&L account, but closing stock will be transferred to the next period. That means cost of goods sold is expired cost, closing stock is unexpired cost. Okay. So period cost completely whatever the cost incur in that particular period, the total cost will be transferred to the P&L account. So expires in that particular period itself. Okay. So let us go to the basic difference between absorption costing, marginal costing, and throughput costing, sir. Let me take an example. For example, okay, so I'm having a manufacturing farm. So my total capacity of that farm is maximum capacity that is equal to, let's say, for example, 100 units. That means in 1 year or else 1 month. Okay, what is the maximum production I can do with available machineries, with the available resources means I can produce maximum 100 units only. Okay. So in that particular year or particular period, what is my total demand? I'm having demand of 30 units only. I can produce 100 units, but my demand is 30 units only. Okay. So coming to the cost structure. So in that form, cost structure is like this, sir. Direct material cost. Direct material cost, let's say variable cost 1 rupee per unit. 1 rupee per unit. Direct labor cost again 1 rupee per unit, sir. Okay. So factory overheads. So factory overheads, here we have two types of overheads, factory overheads. One is variable overhead, again that is 1 rupee per unit, sir. Okay. Next one, fixed cost. Let's say factory rent, something like rent. Rent is for example only I'm taking, let's say 90 rupees only, small numbers only I'm taking for conceptual understanding. Okay, this is total cost structure, sir. Now So selling price per unit, selling price at the rate, let's say 5 rupees per unit, sir. Okay. So let's say, for example, in first case, as I'm having demand of 30 units only, and also I'm having capacity to produce 100 units, sir. Let's say as I'm having 30 units only the demand, okay, so I'm producing 30 units only. Okay, so even though I'm having 100 units of capacity, I'm producing only 30 units. Okay, so produce 30 units. Okay, so whatever the units I produce, as I'm producing 30 units, and that 30 units I'm having demand, right? That's why I can sell total 30 units. So total my sales will be sales 30 units, each unit 5 rupees. How much, sir? 150 rupees. 150 rupees. Let's say cost. What is my cost, sir? Okay, so now what is my direct material cost at the rate 1 rupee? That means 30 rupees. Direct labor 30 rupees. Okay, so factory overheads variable, each unit, per each unit 1 rupee, 30 rupees. Okay, now fixed overheads, fixed overhead 90 rupees. Okay, in total direct material, direct labor, factory overheads, in total this is my cost of production, right? Cost of production. So what is my cost of production, sir? 180 rupees. Okay, so whether I'm having any closing stock? No, no closing stock. Let's say for example minus closing stock. If I subtract from cost of production closing stock, so what I will get, sir? Cost of goods sold. Again, cost of goods sold 180 rupees. Okay, here I'm not having any so selling and distribution expenditure like that. Okay, let's say my ad. So period cost, selling and distribution, or else let's say I'm writing here period cost, sir. Period cost. So I'm not having any period cost. So in total, my sales is 150, but my cost of goods sold is 180 rupees. So what is profit or loss, sir? Loss. How much? 30 rupees. In this particular case, I got 30 rupees loss. 30 rupees loss, sir. Okay, so I'm having loss now. Okay, to make that loss into profit, so generally what we have to do, sir? So we have to sell more number of units, or we have to reduce the cost, increase the sale price, something like that we have to do. Okay, so instead of doing any of that, so what I can do is, so somewhat like if I am having somewhat like a criminal mind, so I do nothing but I do overproduction, sir. Now I am producing 100 units. Okay, so I'm having demand for 30 units only. But even though knowing that information also, I'm producing 100 units, sir. Okay, now, so what is my sales, sir? Even though I have produced 100 units, I could sell 30 units only. 30 into 5 rupees, 150 rupees only the sales. Okay, so coming to the cost, what is my direct material cost, sir? I have produced how many units? 100 units. 100 into 1, 100 rupees direct material cost. So direct labor 100 into 100 rupees. Variable cost, factory overheads again 100 rupees. Okay, what is my fixed cost? 90 rupees. In total, what is the cost, sir? 390. This is my cost of production, sir. Okay, so I have produced 100 units with 390 rupees cost. Out of this, how many units I could sell, sir? 30 units. Remaining 70. Okay, for 100 units, for 100 units cost is 390, sir. Okay, I can sell 30 units only. This means cost of goods sold is 30 units, and for 30 units I have to calculate cost of goods sold and closing stock. Closing stock is 70 units. So what is the value of this 30 units, sir? 30 units means okay, so 390 divided by 100 into 30, how much? 117 is my cost of goods sold. Okay, what is the value of closing stock means? Okay, I have produced 100 units with 390 rupees cost. Okay, what is my closing stock? 70. That means 3273. Okay, now my closing stock value is 273. Okay, my cost of goods sold is 117, sir. Now cost of production. So from that cost of production, let's say subtract what is my closing stock value? 273. That means cost of goods sold is 117 only. Okay, I'm not having any period cost. That means the selling and distribution cost is nothing is there. That means, okay, what is my sales value? 150. Cost of goods sold is 117. Now I'm getting what, sir? Profit of how much? 33. So what happened, sir? Okay, so in first case, I had 30 rupees of loss. Okay, I haven't made any incremental sales. I haven't reduced any cost. Okay, but here I got profit. My loss converted into profit. So why this happened, sir? Increased. Okay, I have increased production. So just by increasing production, okay, why my loss converted into profit? Excellent, madam. Okay, due to fixed cost, sir. Out of, so actually under absorption costing, what we are doing, sir? So this 90 rupees is fixed cost. Okay, so if I am having closing stock, through closing stock, some portion of this fixed cost is being transferred to the next period, sir. This is closing stock value, right? So in this closing stock value 273 rupees, we're having direct material cost, direct labor cost, variable factory overheads, and fixed factory overheads also. So fixed factory overheads, nothing. Let's say for example that fixed cost is rent, sir. Okay, so some portion of rent is being fixed cost. Some portion of fixed cost is being transferred to the next period. That means current period cost is reducing, next period cost is getting increases, sir. Okay, so that's why I'm getting a profit here. Okay, so what is the demerit here means? Actually, I'm paying that rent for that particular period only. I'm getting that benefit for that particular year or for that particular period only. But some portion of rent I am transferring it to the next period through closing stock. Okay, actually this is not correct, right? Okay, so this is the demerit of absorption costing, sir. Got it? Got it, sir. Okay, sir. Now what is the point, sir? So under absorption costing, as we are treating fixed cost as cost of production, that means the product cost, some portion of fixed costs are being transferred to the next period. That means, but actually fixed cost, something like rental cost, salaries cost, all these costs are period cost. That means we are getting that benefit for that period, and we have to incur that cost for that period only. But in this particular scenario, if we are having closing stock, some portion of fixed cost is getting transferred to the next period. Okay, that is not at all right. Okay, that is not at all correct. So we can call it as, so it's a demerit of absorption costing, sir. So to overcome this demerit, okay, so a new technique brought into the picture, sir. That is nothing but marginal costing, sir. Okay, so marginal costing. So what is marginal costing, sir? Under marginal costing, generally, so we all know that what is marginal cost? Marginal cost, sir. Marginal cost. Yeah, cost incurred. Super, sir. So cost incurred to produce one more additional unit. Incremental cost incurred to produce incremental production. That's it, right? Okay, that is marginal cost. So generally, what we call, so incremental cost means variable cost only. If I have produced 100 units, to produce one more additional unit, that means one not one unit, to produce that one more additional unit, what cost I will incur means only variable cost. So that's why under marginal costing, okay, so cost of production means only variable cost, sir. When only variable cost, that means only material cost, direct material plus direct labor plus so direct expenditure, so factory overheads, that too variable cost only, variable overheads only. So this is our cost of production. That means this is only the product cost. Okay, So even if you are having so factory overheads, fixed cost means that fixed cost will be treated as a period cost, sir. Okay, so period cost. So all fixed cost and selling and distribution all will be treated as a period cost. Okay, so all fixed cost are okay period cost only. Now okay, so what is period cost, sir? So period cost means okay, whatever the cost we incur for a particular period, we transfer that cost to the P&L account. We charge that cost to the P&L account. That means expired cost. That will be expired in that particular year. Expired means you are charging that cost to the revenue against the revenue. So that's it, sir. Now, so if I am following this marginal costing, what happens? Let's see. Okay, so even under marginal costing, even if under marginal costing, if I produce 100 units, sir, let's say I'm following marginal costing technique and also I have produced 100 units. Okay, so then, so what will be my sales amount, sir? 150 only. So even I have produced 100 units, I could sell 30 units only, 150 rupees only my sales. Okay, so what is my direct material cost, sir? 100 is my direct material cost. Direct labor 100. So factory overheads variable 100. Okay, so this fixed cost cannot be treated as a cost of production. That means what is my total cost of production, sir? 300 is my total cost of production. Now to produce 100 units, I'm incurring 300 rupees of cost, sir. Okay, out of this 100 units, okay, 30 units are sold. Okay, for that I have to calculate cost of goods sold. 70 units are unsold, nothing but closing stock, sir. Okay, so what is the value of this 30 units means so per unit, what is the cost per unit means 3 rupees only, right? 300 divided by 100, this is 3 rupees only. Okay, for 30 units, my cost of goods sold will be 30 into 3, that is equal to 90 rupees. For the 70 units, 70 into 3, that is equal to 210. Now what is my closing stock value means so come here, subtract closing stock value 210, sir. Okay, that means you will get cost of production is how much? 90 units. Okay, so your sorry cost of goods sold is 90 units, sir. Now whether I'm having any period cost, sir, what is that period cost? 90 rupees is my period cost. Okay, so my cost of production is cost of goods sold is 90 rupees and period cost is 90 rupees. In total what is that cost, sir? 180. Okay, so in total 180. What is my sales figure? 150. What is my total cost? 180. So profit or loss? Loss only. How much, sir? 30. Okay, now again we got a figure of 30 rupees loss. Okay, so what happens with the marginal costing means again it is nullifying the effect of having closing stock, sir. So that's why we got same figure as absorption costing. If under absorption costing, if there is no closing stock means same figure will be represented here also. Okay, so it gives same loss of 30 rupees, sir. This is somewhat actual or else we can say it as somewhat it is right only. But what happens with marginal costing? Okay, so even if I follow marginal costing, okay, if I do overproduction, so in first year let's say my closing stock is 70 units. Okay, in second year also I am doing overproduction. Even though I'm having 30 units only demand, I'm producing 100 units. So second year closing stock will be 70, third year 70, fourth year 70. Like that, if I do overproduction for next 5 years means what is the total closing stock at the end of fifth year, sir? 350 units. Okay, after 5 years I will be having huge closing stock value. Okay, this closing stock, so this stock is being in the closing stock for 5 years. Okay, will that get sold, sir? Okay, so there is less chances that this closing stock will be sold, sir. Okay, so at the end of fifth period, so if I am not able to sell that closing stock, means what I have to do, I have to make some scrap sale. Scrap sale means I can recover only material cost, only direct material cost from that scrap sale. Okay, so if I am selling a particular product at a scrap sale, means I can recover only material cost, but not the cost incurred, direct labor cost or overhead cost, or so whatever the cost I incurred on that particular product, I cannot recover, sir. Okay, let's say, so this is the finished good, right? Okay, this table. Okay, if I want to sell this table after 10 years, I have to sell this as scrap. So at that time, scrap sale means whatever the material for this wood, for this iron only, I can recover the money. Okay, so whatever the amount I spent to for the carpenter to make this table, all that cost I cannot recover, right? So that is only will happen in this particular scenario, sir. Okay, so again, what is the demerit in this marginal costing means, under marginal costing also, okay, so some small demerit is there. That is, we, so through closing stock, so at what cost we are valuing closing stock means direct material, direct labor, and variable overheads. Okay, all, for all this cost I am valuing this closing stock, sir. Okay, so if I am having so some huge closing stock, that means with the closing stock to the next period, I'm transferring direct labor cost and variable overheads. Somewhat direct labor cost and variable overheads over the period of time, if that units are not getting sold, means I cannot recover that cost, right? Okay, so so this can be taken as a demerit of marginal costing, sir. What is the demerit means? We are incurring direct labor cost, okay, through closing stock, transferring that to the next period, next period, next period. That means postponing that cost only. You are not charging that cost to the P&L account. Okay, so ultimately at the end of fifth period or sixth period, I cannot even recover this cost. So this will become a loss. Okay, so to overcome this demerit, a new concept came into the picture. That is nothing but throughput cost, sir. Throughput costing or throughput accounting, sir. So what this technique saying is like, so your cost of production is only your direct material cost. Okay, whatever the cost you incurred on direct material, that is only your cost of production. Other cost, that means direct labor cost, variable overhead cost, fixed overhead cost, whatever the cost incurred except direct material cost, all that cost is period cost only. You have to transfer that period cost to the so P&L account in that period itself. Okay, only treat as direct material cost. If you are having some closing stock, okay, so value that closing stock at direct material only. Why means, if you are transferring like that, so closing stock next year, next year, next year, like that, after getting cumulative huge closing stock, you cannot sell that closing stock at so direct labor cost and variable overheads, all those costs you cannot recover, right? So that's why you treat closing stock at direct materials only. Okay, that is only throughput costing is saying, sir. Okay, let's say, let us write a chart, sir. Absorption costing, marginal costing, throughput costing, sir. Direct material cost, direct labor, direct expenditure, okay, under factory overheads, under factory overheads, variable overheads, okay, fixed overheads, and selling and distribution, sir. Okay, so we won't discuss administration overheads here. That means in reality there won't be any administration overheads. So even administration overheads are there, means that will be classified as either that is related to the production, that will be treated as factory overheads. If that is related to selling of a product, that means then that will be classified as selling and distribution overheads, sir. That means there will be no administration overheads. Okay, so product cost, what cost you treat as a product cost under absorption costing, sir? Under absorption costing, direct material cost will be treated as a product cost. Product cost are cost to be considered while valuation of closing stock, for closing stock valuation, sir. valuation. So whatever the cost we consider for closing stock valuation, that is only the product cost, right? Okay, we consider direct material, direct labor, direct expenditure, variable overheads, fixed overheads. We consider as product cost, but selling and distribution overheads is period cost, sir, under absorption costing. Again, okay, under marginal costing, direct material, variable cost, product cost, direct labor, variable cost, product cost, direct expenditure, okay, variable cost, okay, this is also variable cost. Now this fixed cost always be treated as period cost, sir. So this is again period only. Okay, coming to next concept, throughput costing. Under what we are saying here, under throughput costing, only direct material cost only be treated as a product cost, or while valuation of your closing stock, you have to consider direct material cost only as the value of closing stock, sir. Okay, now all other costs, that means the direct labor cost, period cost only. So direct expenditure, period cost only, and variable overheads, period cost only, and fixed overheads, period cost only. So now, wow, nice, Sakshi. Done, sir. Now, at least are you getting some clarity, sir? Okay, what is the difference between absorption costing and marginal costing, sir? This is only the difference. Under absorption costing, all these costs are cost of production. This is period cost, selling and distribution. But coming to the marginal costing, only variable cost is the product cost. Other cost, in total, whatever the cost you incurred on fixed cost or selling and distribution overheads will be charged to the P&L account. Under throughput costing, if you are following throughput accounting, means only direct material cost will be treated as cost of production. Okay, other cost, whatever direct labor cost, direct expenditure, all this cost, whatever the amount you incur, you have to transfer all that cost to the P&L account. Okay, okay. Now see, let's say for same example, calculate profit under throughput costing, sir. Under throughput accounting, TP means throughput, sir. Okay, let's say again with the same cost structure, I am producing 100 units, sir. But I could sell how many units means 30. 30 into 5. That means 150 is my sales revenue. Okay, what is my cost of production? Okay, so cost. So here I have to take only direct material cost, sir. Okay, what is the direct material cost? So I have produced 100 units into 1 rupee. That is 100 rupees is my cost of production, sir. Cost of production 100. From that cost of production, subtract closing stock value. So for 100 units, 100 rupees means my closing stock will be 70 rupees. 70 units into 1, right? Okay, what is my cost of goods sold? Cost of goods sold is 30 rupees. Okay, to this cost of goods sold, add period cost. Okay, what is that period cost, sir? Okay, direct labor 100 rupees is my period cost, and variable overheads 100 rupees, and fixed overheads 90 rupees. So in total, what is that amount, sir? 290 plus cost of goods sold 30. How much, sir? 320. Okay, this is my total cost of sales. Okay, so 320 is my cost of sales, 150 only is my profit or loss, sir. 170 is the loss. Okay, you will get huge losses under throughput cost. Okay. Okay, why means we are treating only direct material cost as the period cost, all other cost, okay, treating that cost as a period cost. So that means this is somewhat a prudence concept, sir, prudent concept, somewhat like even though, so if those closing stock is not being sold in the future means, so future losses are accounting right now only in that particular right now, so particular period only. Okay, got it now. So actually we all know that marginal costing income statement, sir. It's income statement under marginal costing. So we all know that what is that income statement under marginal costing, sir. First of all, sales. Sales minus what, sir? Variable cost. Okay. Sales minus variable cost is what, sir? Contribution. Nice, sir. Minus fixed cost. You will get what, sir? Profit. That's it. That is only the income statement under marginal costing. So now the same income statement under throughput costing, sir. Throughput. So again under this throughput costing, sales minus, in place of variable cost, what we have to take, sir? Direct material cost. Okay. So here we get contribution, but in throughput costing, you will get throughput contribution, sir. Throughput contribution. Okay. So here we subtract fixed cost. Okay. In marginal costing, we subtract fixed cost. Okay. Here in throughput costing, we subtract all other cost, all other period cost, sir. Period cost. So here period cost means direct labor, variable overheads, fixed overhead, selling and distribution, all other cost. Okay. Then this will be our profit. CN means contribution, sir. TPCN means throughput contribution. Now, now this throughput contribution also called as just throughput, sir. Just throughput. So under throughput accounting, if you call it as throughput, what is the throughput means? You have to calculate throughput contribution. Okay. Now, so what is throughput cost, sir? What is throughput cost? This is throughput contribution. What is throughput cost means? Whatever the cost we incur to generate this throughput contribution is the throughput cost, sir. So, sir, here, let's say, so in yesterday's class we have discussed about conversion cost, right? So, what is conversion cost, sir? Convert the raw material into finished good. So what is the cost we incur to convert that raw material to finished goods means direct wages or direct labor cost plus factory overhead. Okay. So in total, let's say if this is factory cost, sir, factory cost. not factory overheads, factory cost. So factory cost means under cost sheet, so works cost or factory cost we calculate, right? So that is prime cost plus factory overheads. Prime cost plus prime cost plus factory overheads. So prime cost means direct material plus direct labor plus direct expenditure plus factory overheads, sir. Okay. So in factory cost here, what we are saying is direct material cost only be treated as product cost. Okay. Remove this direct material cost, sir. Except this direct material cost, this total cost here we call it as factory cost. Okay. So this factory cost only the cost incurred to convert the raw material to finished good. That means this is only the throughput cost, sir. Throughput cost. Okay. To generate this much of throughput contribution, we are incurring this much of cost. Okay. This is throughput cost, this is throughput contribution, sir. Okay. This is throughput cost. Okay. But so let's say for now we take it as a throughput cost or factory cost, sir. Factory cost except direct material cost. Okay. So under throughput costing we will be having some bottlenecks, sir. Now, so till now, are you okay with this, sir? Okay. Under throughput, except direct material, all cost will be treated as period cost. Okay. So from sales, if you subtract direct material cost, means you will get a throughput contribution. From that, all other cost you will get the profit, sir. Okay. So so generally we take here direct materials only, but as per the definition of throughput accounting, what they say is like in case of direct materials, take pure variable cost, sir. They call it as pure variable cost. Pure variable cost means direct material. Always direct material is the pure variable cost, sir. Okay. Sometimes, sometimes direct labor will also be taken as pure variable cost. Okay. When direct labor, sir. So direct labor will be get paid on two basis, sir. Based on the two, so systems they can be paid. What is the two systems means? Based on piece rate, piece rate and time rate, sir. Time rate. Okay. What is piece rate means? Piece rate. Okay. Per unit, whatever the units produced by the worker for that particular unit, per unit if they are getting paid means that is piece rate. Okay. So irrespective of production, whatever the time spent by the labor in the factory, for that time if they are getting paid means time rate basis. Okay. this this piece rate basis only will be taken as pure variable cost, sir. Okay. So time rate basis payment of direct labor is not pure variable cost. That means sometimes, so along with the direct materials we can also take direct labor only if and only if that direct labor are getting paid on piece rates, sir. Okay. So but generally in any problem we won't get that information, sir. Direct labor regarding information won't be there. So just a point, small point, conceptual point, that's it. Okay. Next one, we have to understand what is bottleneck, sir. Bottleneck. So what is bottleneck, sir? Neck of the bottle is called bottleneck, sir. Wow, nice, sir. Okay, this is neck of the bottle. This neck of the bottle is called bottleneck, sir. Okay, so what is the use of this bottleneck? It reduces the flow of the water. That's it, right? Okay, so if I keep the water bottle like this, okay, total water won't fall, right? Okay, so if I take a glass, in a glass if I take some water and keep it like this means total water falls. Okay, so what is the use of this bottleneck means bottleneck reduces the flow of the water, like that. In manufacturing industries, some resources reduces the flow of the production, sir. Okay, so what are the resources? So here resources means again direct, so raw materials or else direct labor hours, or else machine hours, sir. Machine hours or else sometimes money. Okay, so if these resources are available in limited units, then production capacity will be limited, sir. Okay, so in that case that limited resources is called as bottleneck. Okay, bottleneck is also having other names, sir. Limiting factor, limiting factor, or else in marginal costing we call it as a key factor, limiting factor, sometimes governance factor. So whatever the name we call it, but that what is that, sir? Limiting factor, bottleneck, or key factor or governance factor. That means the resource which is available in limited quantity. Just because of having that limited quantity of resources, our production capacity will be limited to certain units. Okay, that's why we call it as a bottleneck, sir. Okay, let's say for example, let's say for example, I'm having, so in my production farm I'm having two machines, sir. Machine A and machine B, sir. Okay, so the maximum capacity of this machine A is 100, sorry, 1 lakh units. Let's say 1 lakh units. That means machine A can produce 1 lakh units per day. Okay, so machine B can produce only 80,000 units per day, sir. For one day, A can produce 1 lakh units, B can produce 80,000 units, sir. Let's say, so I have to, so to produce a finished goods, I have to give input something like raw materials here. Okay, so after producing, so after processing from the machine A, this work in progress stock will be go to the machine B. Then after getting processed by machine B, finished good will come outside, sir. That is nothing but output. Okay, see, if I give input here, this input will be processed by machine A, then work in progress will be processed by B, then I will get finished goods as output, sir. Now let's say for example here I have to give input. As I am having the machine A capacity of 1 lakh units, I thought like I have to give 1 lakh units of input. Okay, let's say for example I gave a input of 1 lakh units, sir. 1 lakh units of raw materials I have given as input. Okay, so now machine A, can this machine A process this all these 1 lakh units, sir? Yes, this can process. Okay, machine A can process all these 1 lakh units and it will give, so it will send outside the work in progress units of 1 lakh units. Now here as work in progress stock I'm having 1 lakh units after machine A. So this is ready to go into the machine B, sir. Now machine B, how many units it can process, sir? 80,000 units only it can process. That means out of this 1 lakh units, machine B can process 80,000 units. That means it can produce, it can give as output 80,000 units only. Now I will get an output of 80,000 units as finished goods, sir. Now, so out of this 1 lakh units, 80,000 units are, so will be get processed. Then 20,000 units will be remained as work in progress stock here, sir. So now on this 20,000 units, I will incur what, sir? Excellent, madam. Okay, I will incur some storage or carrying cost. Yesterday itself we have discussed. Okay, so just because of I'm having this mission B capacity limited to 80,000 units, so 20,000 units are remained as work in progress here. Okay, on this work in progress stock, I have to incur some carrying cost. So carrying cost means we have discussed in yesterday's class. What is the carrying cost, sir? Rental cost, electricity cost, security cost, taxes, okay, and also what's our interest cost. All these costs will be treated as a carrying cost. So I have to incur some carrying cost on this work in progress stock, sir. So now what is our target is like as I am incurring some carrying cost on this work in progress stock, I have to eliminate that cost, sir. Okay, on this work in progress stock, I will incur carrying cost. So I will incur some carrying cost. Now I have to eliminate that carrying cost, sir. So how can I eliminate that carrying cost? Okay, or else to eliminate that carrying cost, I have to remove this bottleneck, sir. Okay, so I have to increase that capacity or else something like that. Okay, what are the strategies? I'm having strategies to eliminate bottleneck, sir. Now, so tell me some strategies to remove that bottleneck, sir. Here I'm having 1 lakh units of capacity for machine A, 80,000 units of capacity for machine B. Now I have to reduce that bottleneck. So bottleneck means limited capacity. I have to remove that limiting factor. So what can I do to increase that capacity or to remove that bottleneck? Means tell me some strategies to avoid this carrying cost, sir. What's that? Okay, so input should be given as in 80,000 only. That means okay, on mission A also we have to process 80,000 units only. That means what is our first strategy means align all machines to bottleneck machines, sir. That's it, right? Okay, if bottleneck machine is having 80,000 capacity, okay, only 80,000 units should be produced on machine A. Then we won't get that work in progress and we won't incur some carrying cost, sir. Now what is our second point? Second strategy. Tell me some other strategy, sir. Okay, so we have to increase the capacity of machine B. So that is only I'm talking. So how to increase that capacity? Capacity of machine B should be increased. How? How, sir? Wow, excellent, sir. That means replace the old machine with a new machine having capacity of 1 lakh units, right? That is only what you're telling. Okay. Now replace replace machine B with new machine has capacity of 1 lakh units. Okay. So that means I have to do some capital investment, right? Okay. This is nothing but capital investment, sir. capital investment. Now, tell me other points, sir. Excellent, sir. Talented, sir. Talented. Okay, I don't need to replace that machine B. Okay, for that additional capacity of 20,000 units, if I purchase a small machine which is having capacity of 20,000 units, so that would be fine. Okay, so then whatever the units processed by machine A, 80,000 will be processed on machine B, 20,000 units will be processed on a new machine, sir. That means do capital investment for capital investment meant for 20,000 units capacity. That's it, right? Okay. Next, tell me other points, sir. Sorry, tell me. You are trying to tell something, right? You only, sir. No. Okay. Now, so here I'm having work in progress stock of 20,000 units. For this 20,000 units, I can do what, sir? Capital investment of a new machine 20,000, or else I can so outsourcing, sir. I can give them this 20,000 units to outsourcing. Outsourcing means some outside so person will be there. He will process the same process which is being done by machine B. The same process will be done by some other person. For that, I will pay some uh, expenditure or cost, sir. Okay, outsource, outsource 20,000. Sorry, 2 lakh. I'm right. 20,000 only. 20,000 units capacity. Outsource, or else we can say it as subcontract, sir. Subcontract, subcontract this 20,000 units. Okay, now this is the all the strategies we are having here, sir. Out of these four strategies, two strategies saying you have to do capital investment, sir. Okay, so whenever you are doing some capital investment means okay, keep in mind that so whenever you are doing capital investment, always do capital investment for bottleneck resource, sir. If you are do capital investment for non-bottleneck resource means if I do investment of 20,000 units capacity machine on machine A, so say so now I'm purchasing a similar kind of machine that can process what will be done by machine A. Similar kind of machine I'm purchasing which is having capacity of 20,000 units, which is non-bottleneck machinery, sir. If I do a capital investment on non-bottleneck machinery, so this machinery capacity will be increased to 1,20,000, sir. Let's say I'm doing a capital investment on machine A, which will increase the capacity of machine A to 1,20,000 units. Will that remove my bottleneck, sir? No. So again, even though when I so even then, if I give 1,20,000 as input, only my then also my output will be 80,000 only. Okay. So what here we are saying is like under throughput costing, whenever you are doing capital investment, invest invest on bottleneck resource or mission, bottleneck mission only. Why means this only will remove our bottleneck. Remove bottleneck. If you do some investment on so if you do some investment on non-bottleneck unit, non-bottleneck machine, if you do capital investment on non-bottleneck machine, that won't increase our, will not remove bottleneck, sir. Okay, small and common sense point only, but this also will be asked in the questions, sir. Practical problems we will be having all these concepts. Okay, different strategies will be given in the problems. Then we have to analyze whether that strategy remove the bottleneck or not. Like that we have two questions on this concept, sir. Okay, now so coming to the overview chart, sir. Okay, so under throughput costing, here we have one illustration on differences between all these concepts. Okay, so for bottleneck removal strategies we have two questions, sir. Illustration 14, 17. Okay, those four are the bottleneck elimination strategies. And when there is a bottleneck we have to write a product optimal product mix, right? On that also we are having two questions, illustration 13 and illustration 18. And June 24 attempt there is a question, sir. And December 2017 question, four questions are there on that concept, sir. On this formulas concept we will be having two questions, illustration 12, illustration 15, sir. Okay, in total we have four models on this concept, sir. Okay, so out of these four models one question is only there on this concept one, which won't be asked in the examination. That means this one will be the lengthy question, some or 2 3 pages question will be there. Okay, so not at all that much important for examination. But these three concepts, okay, so one or two problem for each concept, one or two problem for each concept. So we have to learn that, from, so important. So that too, this product mix concept is very important, sir. Okay, in June 24 attempt itself they have asked a question for 7 marks. Now let's discuss this bottleneck concept with optimal product mix, sir. Okay, we all know that optimal product mix concept from marginal costing, sir. Under marginal costing you might have learned that product mix decisions. Okay, see, now bottleneck, sir. Bottleneck product mix, optimal product mix under throughput costing, sir. Under throughput costing, under throughput accounting, if there is a bottleneck, so how to calculate the optimal product mix, sir? Okay, so here I'm taking an example. So let's say for example I'm having two products A and B, two products. Okay, so under throughput accounting, to take product mix decisions, we have to calculate throughput contribution, sir. Under marginal costing, we will take decisions based on contribution. Okay, so but here we use throughput contribution. How we can get the throughput contribution means sales minus direct material, sir. Okay, so you will get throughput contribution. Let's say this contribution for product A is 4 rupees, this contribution for product B is 6 rupees, sir. Contribution. Okay, same concept only, whether that is throughput contribution or else direct marginal costing contribution, not a matter. So same concept. Okay, see, now I'm generating 4 rupees of contribution for product A. For product B I'm generating 6 rupees of contribution. Okay, let's say for this example, let's say this throughput contribution is contribution only. Okay, so 4 rupees of contribution, 6 rupees of contribution. Generally, so as I am getting 4 rupees of contribution from product A, 6 rupees from product B, which product I will give some more preference to produce the more number of units, sir? Product B only. Okay, as I am getting 6 rupees of contribution from product B, so I would prefer to produce and sell this product only, more number of units. Then I will get more revenue, right? More profits. That's why I go for this unit only. Generally, that means if you are having unlimited resources, you try to produce maximum units of product B. Okay, so then you go for A. That means your preference preference will be first preference for product B, second preference for product A, sir. That's it, right? Okay, when, sir, when you have unlimited resources. Okay, unlimited resources means resources, men, material, raw material, direct labor, mission hours. Okay, all these resources, if you are having unlimited means okay, so you will produce max units of B and sell those units if that product is having demand. Okay, now let's say for example our raw materials are not unlimited, sir. They are limited only. Let's say for example, I'm in my hand, I'm having 100 kgs of raw material only, sir. Using that 100 kgs of raw material only, I have to produce A and B, sir. Okay, now see, to produce one unit of A, to produce one unit of product A, I have to use 2 kgs of raw material, sir. I have to use 2 kgs of raw material. Okay, so to produce one unit of product B, I have to use let's say, mm, let's say again, no, let's say here 1 kg only, here 2 kgs, sir. Okay, to produce one unit of product A, I need to use 1 kg of raw material. To produce one product of B, I have to use 2 kg of raw material, sir. Okay, so this is particular situation. In my hand, I'm having 100 kgs of raw materials only. Okay, in this particular situation, so how will you use this 100 kgs, sir? In which product you invest these 100 kgs of raw material? So which unit you try to produce more number of units? B only. Why B, sir? Okay, so B you are saying, sir. Okay, let's say with this 100 kgs of raw material, if I produce product B, how many units I can produce, sir? For each unit, I need 2 kgs. Okay, so with this available 100 kgs, I can produce 100 by 2. That means 50 units of B only I can produce. 50 into 6, 300, sir. Okay, so B 300 only contribution I can get from product B. So if I invest this 100 kgs in product A, what will happen, sir? By using this 100 kgs of raw material, how many units I can produce of product A, sir? Okay, so for each kg I can produce one unit, right? That means 100 divided by 1 kg, 100 units I can produce. And each unit, how much contribution I will get, sir? That means 400 rupees of contribution I will get. That means, so total available 100 kgs of raw material. So I will invest on which product, sir? Product A only. Why means I will be getting more contribution if I invest that 100 kgs on product A. So that is general calculation only. But here to make decisions, we calculate profitability, sir. So when there is a limiting factor, so to make product mix decisions, we have to calculate profitability. Now our question is, what is profitability, sir? So profitability means so under marginal costing, if that is marginal costing means you have to calculate contribution per unit of limiting factor, sir. Contribution per unit of limiting factor. As this is throughput costing, we have to calculate throughput contribution per unit of limiting factor, sir. Okay, so what is that per unit limiting factor contribution means? Okay, see, to produce to produce 1 unit of product A, I need 1 kg of raw material. If I invest 1 kg of raw material in product A, I will get how much contribution, sir? 4 rupees. Okay, so to earn this 4 rupees of contribution, I have to invest 1 kg of raw material. That means I can earn and I can earn 4 rupees of contribution per kg, right? So throughput contribution per kg of raw material, per kg of raw material, that means 4 by 1, 4 rupees for 1 kg, that means 4 rupees. Okay, here in case of B, to earn this 6 rupees of contribution, I have to invest 2 kg of raw material. Okay, so 2 kg of raw material will give 6 rupees of contribution. That means per kg how much contribution I will get, sir? 2 kg, that means 3 rupees only I am getting, sir. Okay, here, so if you observe profitability, that means throughput contribution per kg is 4 rupees here, 3 rupees here. So as I am getting highest throughput contribution 4 rupees from product A, okay, I try so I prefer to invest all these limiting raw material cages in product A only. Okay, if I invest 100 kgs of raw material on product A, for each kg I will get 4 rupees of contribution. 100 into 4 rupees, 400. So if I invest this 100 kgs in product B, for each kg I will get 3 rupees. 100 into 3, 300 only. Okay, so in different way we are showing calculations, sir. Okay, that means here our preference will be, here our preference will be, one here, two here, that's it, right? Okay, so let's say for this case study, for this particular example, okay, one limiting factor is enough, sir. If there are multiple limiting factor, to take decision making we have to use linear program planning. Okay, so if there is only one limiting factor, we can use marginal costing or throughput costing, sir. Okay, let's say now, the case scenario is like, I am having demand of demand for product A. Demand is for product A, my demand is let's say 30 units, sir. Let's say 40 units of demand is there. So for product B, okay, I am having 100 units of demand, sir. Okay, so what is my actual demand? Actual outside market demand is for product A 40 units, for product B 100 units. Now the question is, okay, so what is the product mix for this example? That means we have, so how you will invest this 100 kgs on product A, product B? How will you so invest on product A and product B? That is the question here. Now, so to calculate the product mix decision, we have to take what is the bottleneck resource available. Bottleneck units available, sir. How many units available, sir? 100 kgs only. Okay, so this 100 kgs is a limiting factor, right? So when there is limiting factor, what is my preference, sir? I have calculated this preference, right? Okay, you should not consider this preference, sir. When there is no limiting factor, that is the preference. But here your preference is changing, right? Okay, so when there is a bottleneck, your preference is with the first preference you go and produce product A, then in with second preference you go for B. Okay, so here I'm having 100 kgs of raw material only. What is your first preference? You will produce product A. So how much demand we are having, sir? 40 units only. That means you will produce only 40 units. More than 40 you won't produce. Why means that won't be sold, right? That's why. Okay, so I can produce A. How many units? 40 units. For each unit, how many kgs of raw material required, sir? 1 kg. 40 into 1 means 40 kgs. Okay, that means okay 100 minus 40. Balance raw materials are 60. Okay, here what I have done, sir, I have produced product A 40 units. 40 units of production done. Now with available balance 60 kgs of raw material. So which unit I will produce, sir? So my second preference product B. How many units of demand is there? 100 units. To produce 100 units, 100 into 2, that means 200 kgs of raw material required. I cannot produce 200 units, so 100 units here. That means with the available 60 kgs of raw material, how many units I can produce, sir? I'm having 60 kgs for each. So for each unit, I need 2 kg of raw material. That means 30 units only I can produce. Okay. So then here use this 60 kgs on product B 0. Here I have produced B 30 units. So now what is the optimal product mix means A is to B, that is equal to 40 is to 30, or else A 40 units, B 30 units, like that also we can write, sir. Got it, sir? Any doubts? Okay. The same concept will be repeated in the same concept we will discuss in throughput costing. We have discussed, sir. Similar concept and same concept we will discuss in linear program planning in broader way, and same concept will be repeated in transfer pricing, and also same concept will be discussed in marginal costing, sir. Okay, so that means the same concept, same example, with the same example, same limiting factor, same calculation of profitability will be discussed in 4 chapters. Okay, so one of the most important concept, limiting factor. We have done with the 3 concepts, sir. This is only small question only. Mm. Now, so we left with formulas. Okay, it will take some time. For we have 15 minutes of time. In the time, let us do 1 or 2 problems, sir. Small problems only will be there. Okay, see, sir. Illustration 13. Read this illustration 13. Read that question once. Okay, so modern company produces 3 products A, B, C. The details of which are as follows. So particulars A, B, C, selling price, direct material cost. Okay, from selling price and direct material cost, what we can calculate, sir? Throughput contribution. Okay, next one is variable overheads. Okay, maximum demand 30,000, 25,000, 40,000. Time required on bottleneck resources. That means here we have bottleneck. Okay, so bottleneck hours per unit 5, 4, 3. Now there are 3,30,000 bottleneck hours. Okay, either that is mission hours or labor hours. They are not specifying, but bottleneck resources hours. Okay, so to produce 1 unit of product A, we need 5 hours. To produce 1 unit of product B, we need 4 hours. To produce 1 unit of product C, we need 3 hours, sir. Now calculate the optimum product mix based on the throughput concept, sir. Okay, so to calculate optimum product mix under throughput concept, we have to calculate what, sir? Throughput contribution. So from that, we have to calculate throughput, so profitability. So if that is marginal costing, if this point is not there means throughput concept. If this point is not there means we have to use marginal costing concept. Okay, so marginal costing means you need to calculate contribution. Contribution, how can we get that contribution means sales minus variable cost. Here variable, what is that variable cost, sir? Direct material and variable overheads, if that is marginal costing. But as we are in throughput costing concept, okay, here we have to calculate throughput contribution only. That means selling price minus direct material cost, throughput contribution. Okay, you don't need to consider variable overheads here. This is nothing but a trap. Okay, so some traps will be there. You have to avoid the traps, otherwise you will become, yeah. Okay, sir. Unnecessarily they will give some over information, sir. We have to so eliminate that information. That's it. Now, okay, under throughput costing to calculate optimal product mix, first one, step one, calculate the preference, sir. Calculation of calculation of product preference. Preference ranking. Here we have three products, sir. Product A, product B, product C. Okay. So as we are in throughput costing, we have to calculate throughput cost, sorry, throughput contribution for each product, sir. Now to calculate throughput cost, throughput contribution, sales minus direct material, sir. What is sales value for product A? 120, 110, 130. Now direct material cost is 60, 70, 85. Now what is the throughput costing for each unit, sir? 85, sorry. 85, right? Okay, throughput contribution. 120 minus 60, that is 60. 110 minus 70, 40. 130 minus 85, 45. Okay, so okay, generally if there is no limiting factor means directly we go and produce product A, but we have limiting factor. Okay, so what are the limiting factor units, sir? Limiting factor bottleneck hours. Bottleneck hours. So in total we have 3,20,000 hours in total. Okay, to produce one unit of product A, how many hours needed, sir? Bottleneck hours required. Bottleneck hours required for product A 5 hours, for product B 4 hours, for product C 3 hours. Okay. So if I invest 1 hour on product A, how much contribution I will get, sir? That is only we have to calculate throughput contribution per hour for bottleneck unit, sir. Hour means bottleneck hours, right? So what is throughput contribution per hour from product A? 60 by 5, 12. Okay, 60 by 5. So for B, it is 10 rupees, 40 by 4. Okay, for product C, wow, 45 by 3. That means 15 rupees. So I will get highest contribution from which product, sir? Now give the ranking. ranking. First ranking product C, second ranking A, third ranking B. Got it, sir? Till now, any doubts? Okay, what we have to calculate? First of all, we have to calculate throughput contribution. From that, calculate contribution, throughput contribution per unit of limiting factor. Then give the ranking. So after giving ranking, preference ranking, so then go to the step 2, sir. Step 2. Step 2 is what, sir? Product mix calculation. Optimal product mix. Okay, now total bottleneck hours available. Bottleneck hours available are 3 lakh 20,000, right? We have 3 lakh 20,000 of bottleneck hours. What is my first preference, sir? Product C. Okay, what is maximum demand of product C, sir? Okay, I'm having 40,000 of demand. That means produce 40,000 units of product C, sir. Okay, how many hours needed? For each unit, 3 hours. That means 40,000 into 3, 1 lakh 20,000 hours. Okay, if I use this 1 lakh 20,000 hours on product C, the balance hours available are 2 lakh. That means here how many units I have produced, sir? Was C 40,000 units I have produced in the first preference. Next, next I'm having 2 lakh units. What is my second preference? Product A. How much demand is there, sir? 30,000. For each unit, how many hours required? 5 hours. 30 into 5, 1 lakh 50,000. Okay. Balance hours are 50,000 hours. In second preference, I have produced product A. How many units? 30,000 units. Okay. In last preference, with last preference, I have to go for so product B. How much uh, demand is there, sir? 25,000. 25,000 into 4. That means how many hours needed? 25 into 4 means 1 lakh hours, right? Okay, so I'm not having 1 lakh hours. That means per unit of product B I require 4 hours. Okay, that means with the available 50,000 hours, okay, how many units I can produce means 12,500. Okay, so product C 12,500, use 50,000 hours on product C, 0 will be available. So C will be produced by 12,500 units. B only, sorry. B 12,500. Now, right, what is the product mixer? Optimal product mix is C 40,000, 30, A 30,000, B 12,500. Okay, so optimal product mix. A, B, C. 30,000, 12,500. So that is only the product mixer. That's it, sir. Enough. Any doubts, sir? Okay. So on the throughput caution to calculate product mix, first of all, calculate throughput contribution. So throughput contribution per limiting factor preference. Then So calculation using available hours. That's it. So if that is the marginal costing means only contribution. Sales minus variable cost, total variable cost, you will get a contribution. Okay, contribution per limiting factor. That's it. That is only the difference. Otherwise, okay. So throughput costing somewhat similar to the marginal costing only. So thank you all. We'll meet you in the afternoon session. Bye. Okay. Hi, hello everyone. Welcome back. So I'm Rajesh, your SCM and M faculty. So welcome to the world of strategic cost management and decision making. So in morning class, that means previous class, we have started with throughput accounting, sir. So in throughput accounting, in total we have how many concepts, sir? Four concepts only. Okay. So first one is difference between absorption costing, marginal costing, throughput costing. Second one, bottleneck and bottleneck elimination strategies. Third one, bottleneck. When there is bottleneck or limiting factor, so calculation of optimal product mix. Okay, so last one is some basic formulas will be there. On that, we have two problems only. Okay, so we have done which problem, sir? 13th. Let us go to the 18th problem, sir. Okay, so read this. So see, in this problem also, second point is throughput accounting ratio calculation, sir. Okay, so to solve this problem, again, we need to know some formulas. Okay, so for 10 or 15 minutes, I will tell you some formulas, sir. Then we go and solve the problem. See, throughput accounting ratio and everything. So formulas, concept number 4, sir. So formulas. So here, first of all, we have to understand. So the first formula and basic formula, throughput accounting ratio, sir. Throughput accounting ratio. Throughput accounting ratio. So what is this throughput accounting ratio? So the name itself is saying a ratio. Ratio means ratio. It should be like so some A by B in that format. Okay, if any number is in A by B form, that is called as ratio. Or else we can also write it as A is to B. That is called ratio, sir. That means in this ratio also we'll be having two parts, numerator part and denominator part. So what is the numerator part means? Nothing but return. So in denominator cost, sir. Return divided by cost in simple. Okay. So return divided by cost. That means this throughput accounting ratio represents okay, if I invest 1 rupee of cost, so how much return I'm generating? Let's say I'm getting 4 rupees of return. That means I'm generating 4 rupees of return by investing 1 rupee of cost. That is throughput accounting ratio, sir. Okay, so now we have to understand what is this return. Return. So here return means return per unit of return per unit of bottleneck, sir. That means we are not taking total return, just return per unit of bottleneck. Okay, again we are saying return. What does it mean by return? Return here, that means throughput contribution, sir. Throughput contribution. Okay, so that means throughput contribution per unit of bottleneck, sir. Okay, so how we can calculate the throughput contribution per unit of bottleneck, sir? Throughput contribution per bottleneck unit. So again, here we are having two parts. So throughput contribution per bottleneck unit, we have already calculated in the product mix decision, right? So throughput contribution can be calculated by using sales minus direct material costs. So that means sometimes we also need to take direct material plus direct labor. So when we can take direct labor means if the direct labor cost is being paid on piece rate basis. Okay, so that means in numerator what we are writing, sir, per bottleneck unit how much return we are getting, throughput contribution per bottleneck unit, sir. Okay, now so in denominator what is the denominator part means cost, sir. What is this cost? Cost means nothing but throughput cost, sir. Throughput cost here I have already told you total factory cost, sir. Total factory cost. Factory cost. But except direct material cost, sir. Except direct material, total factory cost is throughput cost here. Okay. But the two, so how can we get this total factory cost except direct material cost means direct labor plus direct expenditure plus total factory overheads, sir. Okay, so accept direct material cost, eliminate that direct material cost and take total factory cost. Okay, so this is not total factory cost but actually total factory cost per unit of bottleneck, sir. Per unit of bottleneck. So that means a return should be taken per unit of bottleneck. Cost should also be taken per unit of bottleneck. That means here how can we calculate that cost per unit of bottleneck means so by using this direct labor, direct expenditure, factory overheads, we can calculate total factory cost except direct materials. So divide that with bottleneck units available, sir. That means total factory cost except direct material cost divide with total total bottleneck units available. Total bottleneck units available. Okay. Let's say for example, if my total factory cost is 1 lakh rupees, sir. 1 lakh rupees total factory cost. Out of this, my direct material cost is let's say 10,000. That means my throughput cost is 90,000 rupees. Okay, so I'm having bottleneck resource, that is machine hours are limited, sir. Now let's say that limited machine hours. That means bottleneck only, right? Bottleneck hours. Let's say 4,500 only. 4,500 is bottleneck hours. Then what is my cost per bottleneck unit means the cost per unit of bottleneck, that is equal to 90,000 total factory cost divided by total bottleneck hours available 4,500, that is equal to how much, sir? 20 rupees. Okay, like that we can calculate cost per bottleneck unit. Okay, here we have already calculated throughput contribution per unit of bottleneck in this statement, sir. In the statement, this is only the throughput contribution, sir. Throughput contribution that we are referring that as written here. Written. So, in total, how can we understand this throughput accounting ratio means? Okay, so per bottleneck unit, how much throughput cost you are so investing. So to convert the raw material into finished good, so the conversion cost, how much conversion cost per bottleneck unit you are incurring. This is denominator part. In numerator, what we are taking, sir? Return. Return means throughput contribution per unit of bottleneck. How much return you are generating per bottleneck unit for limiting factors, sir. Okay, that return by cost. That is nothing but throughput accounting ratio. So this throughput accounting ratio should always be greater than or equal to 1. Then only that would be beneficial, sir. That means if I am investing 1 rupee, I have to generate at least 1 rupee return or more than 1 rupee. Okay, greater than or equal to 1. Now we have to understand efficiency, sir. Efficiency. So how can we calculate this efficiency means? We all know that efficiency can be calculated in two ways, sir. From output point of view, from time point of view also, we can calculate this efficiency generally. Okay, let's say what happens here means, to calculate the efficiency, first of all we have, so to calculate a person's or machinery or a resource efficiency, first of all we have to give them a target, sir. So let's say to calculate efficiency of a person on output basis, first of all I have to give him a target. So I'm giving a target, sir. So I'm giving target like in 1 hour, within 1 hour. So I'm instructing a labor that you need to produce within 1 hour, let's say 5 units you have to produce. That is the condition I'm giving. Okay, so I'm fixing some target, that means standard I'm fixing. Okay, that standard is called, here we can take it as standard output, right? Within 1 hour you have to produce 5 units, but in reality, so after 1 hour if I go and check, within that 1 hour actually that labor has produced 4 units only. 4 units only. Okay, so this can be taken as actual output, sir. Okay, what is my standard output means whatever the target I am giving is standard. Okay, actual means actual, in actually how much they have produced. Okay, now I told him to produce 5 units, but he has produced 4 units only. Now, so can you say whether he is efficient or inefficient, sir? Inefficient. Efficient or inefficient? Inefficient only. Okay, so inefficiency means more than 100% or less than 100 percentage. Less than 100%. So to get less than 100 percentage of efficiency, so I have to write a 4 by 5 or 5 by 4. If I write 5 by 4, what happens, sir? 5 by 4 into 100 means it will be more than 100. So actually he is inefficient, right? So to calculate his inefficiency, I have to take 4 divided by 5 into 100. That means how much, sir? 80 percentage. 80 percentage is the efficiency. That means what the formula I'm using, sir? In numerator I have taken 4. 4 means actual output. Actual output divided by standard output into 100. This is the efficiency formula. From which point of view, sir? Output point of view. Now, so in time point of view, so to calculate efficiency in time point of view also, again I have to give some target. Okay, now what target I'm giving means, so to produce 1 unit, 1 unit, I'm giving a target, I'm allowing so labor to take let's say 10 hours only for 1 unit. Within 10 hours you should produce 1 unit, but in reality, to produce 1 unit of output, labor has taken let's say 15 hours, sir. They have taken 15 hours. So this 10 hours I'm fixing some standard. This 10 hours is called standard hours. This 15 now is called actual hours, sir. Standard hours divided by, so standard hours by actual hours. Okay, so now efficient or inefficient, sir? Inefficient. So inefficient means more than 100 or less than 100, sir? Less than 100. To get less than 100, I have to write 10 by 15 or 15 by 10. 10 by 15 only. 10 by 15 is his efficiency. That means how much, sir? 66 point. Okay, so this is his efficiency, sir. Now, so what is the formula? 10 means standard hours, 15 means actual hours. Standard hours divided by actual hours. Okay, if you can observe, in output point of view, I have to write actual divided by standard. But from time point of view, I have to take standard divided by actual. Why this reverse happens means, okay, if the labor, so I'm fixing the target. If he produces more than the standard means he will be efficient. Okay, I'm fixing 10 hours. If he is taking more than 10 hours means he will be inefficient. If he takes more time, inefficient. If he produces more output, efficient. So that's why some reverse formula will be there, sir. Actual output divided by standard, standard hours divided by actual, reverse relationship, sir. Okay, so you don't need to remember all the so these formulas, but so just conceptually try to understand whether he is efficient or inefficient. Inefficiency means less than 100, efficiency means more than 100. So what I have to take the formula, so like that only you think, sir. Now let's say, so a bottleneck resource is, bottleneck resource is having let's say 10,000 hours, sir. 10,000 hours. That means a machine is having 10,000 hours. Now I can call it as 10,000 hours as available hours, sir. Okay. So more than 10,000 hours I cannot use. Why means this is bottleneck. Limited hours only I'm having. Okay. So maximum, at most, what I can do here, sir, maximum 10,000 hours I could use, or else less than 10,000 hours. Okay. If I use the 10,000 hours, means 100% efficiency. Okay. If I cannot able to use those 10,000 hours means inefficiency, right? Okay. Let's say, for example, in reality, I have used bottleneck hours used. Bottleneck hours used is equal to 90,000 hours only. Sorry, 9,000 only. 9,000 hours only. That means clearly we can say he is inefficient. Okay. So then efficiency is equal to hours used divided by bottleneck hours used divided by hours available. Okay. Efficiency can be calculated in three ways, sir. Output point of view, time point of view. When there is bottleneck, you have to use the formula hours used divided by hours available. That means hours used 9,000 divided by 10,000 into 100. That means how much percent? 90% only. Okay, that is how you can calculate the efficiency, sir. Okay, so here in this throughput concept, we use this formula only. Okay, so here we have one more concept, sir. So to calculate the throughput cost, throughput cost calculation, sir. Let's say, for example, so I'm having bottleneck resource, sir. Bottleneck resource machine, sir. A machine is bottleneck machine. Okay. So to produce one unit of product A, I have to so process for let's say 5 hours on machine, sir. Okay. So can I call it as standard hours? Okay. So I'm fixing you should only use for one unit of product A 5 hours. Required bottleneck hours for that product is 5 hours. That means standard hours, sir. Standard hours or standard time per unit. Okay, now actually I have produced actual output. Actual output is actual output. So actual output is let's say for example 900 units, sir. Okay, so again here we have so cost concept, right, sir? So here cost means so factory cost per unit of bottleneck, sir. Let's say so for to convert the raw material into finished goods per hour bottleneck is hours, right? So per hour our cost is let's say cost per hour, that means bottleneck unit, that is equal to let's say 2 rupees, sir. 2 rupees. Okay, in this situation to calculate the throughput cost, the formula will be throughput cost throughput cost standard hours for actual output. Okay, so not actual hours, sir. To produce that actual output, how many hours you should have taken? Okay, that means I have produced 900 units. Okay, to produce that 900 units, how many hours I should have consumed, sir? Per unit 5, 900 into 5, 4500. 5 into 900, that means 4500. 4500 is the standard hours for actual output. Okay, so this is hours. We have to calculate cost, sir. So what is the cost per hour? Bottleneck hour means 2 rupees, that means multiplied with cost per bottleneck unit, sir. That would be 2 rupees. 4500 into 2, that is equal to 5000, sir. Okay, sorry. Yeah, sometimes happens. No, no, no. I'm checking whether you are observing or not. Yeah. Okay, so now the formula would be throughput cost means. Okay, so we have to calculate cost per unit of bottleneck, but to calculate total cost, okay, you should use the standard time allowed for actual output. That means based on the standards only we calculate the throughput cost, not actual. So they might have taken. So here we are allowing 4500 hours only for actual output, but in reality they might have taken 5000 hours. But you should not consider this 5000 hours, only take standard hours, sir. Okay, so you will get more clarity while doing a problem, sir. Okay, on this concept we have two problems. Okay, so to revise once again, so throughput accounting ratio, that is equal to return by cost. Here return means return per unit of bottleneck, that means nothing but throughput contribution per unit of bottleneck. Here cost means total factory cost. Total factory cost per unit of bottleneck, sir. Total factory cost per unit of bottleneck. So So total factory cost means total factory cost except direct material cost. Okay, this is actually cost. Okay, so this can be taken as throughput cost, but so in reality we won't take that cost as a throughput cost, but we use this formula, sir. Okay, so for actual output produced, how many standard hours you should use and what is the cost per hour. So on that basis only we calculate throughput cost. So again we have formula efficiency. To calculate efficiency we have three formulas. Out of these three formulas we use this formula here. Okay, these formulas also we will use in standard costing. Okay, so right now, so basic three formulas, sir. One, uh, this one is two, this one, sir, three. Formulas only enough. Okay, now let's go to that problem, sir. 18th problem. Here we have two concepts. Okay, first one is we have to calculate product return per minute and also throughput accounting ratio, sir. Read that problem once and let me know how to calculate that problem, sir. Okay, so first of all, so while doing any problem in SCM RDM, you have to write, you have to read. So this required points are first of all read these points. Company adopted throughput accounting. Okay, so by reading this line, you have to understand this problem is from throughput costing. Okay, and the products are ranked according to the product return per minute. Return means throughput contribution per minute. Select highest rank product. That means here we have to calculate the ranking, preference ranking for each product. First point. Second point, throughput accounting ratio. For that they have given information. Okay, so H Limited manufactures three products. Material cost, selling price, bottleneck resource. Details per unit are as follows. Okay, selling price given 66, 75, 90. Selling price, material and other variable cost. See here they are giving like direct material plus other variable cost. That means you have to assume like a pure variable cost. Okay, 24, 30, 40. Selling price minus pure variable cost, you will get throughput contribution per unit. Okay, bottleneck resource minutes. Okay, they have given minutes. Okay, here we can calculate contribution, throughput contribution per minute of bottleneck resource. Okay, based on that we can give preference ranking, right? So first point done. Second point, throughput accounting ratio. Throughput accounting ratio means return divided by cost. So return we can calculate in the so in first point itself we can calculate. We have you might have already calculated that in first point. Okay, throughput contribution per unit. Okay, this is only we can take as a return, sir. In so denominator we will be having cost. So cost means total factory cost per unit. Here they have given factory cost, sir. How much? 2,21,600. Okay, so directly they are giving factory cost. That means we can assume like this factory cost is total factory cost except direct material cost. that assumption we can take, sir. Otherwise, so from this factory cost, we have to reduce direct material cost. We are not having direct material cost information. So per unit only we are having that information, but demanded units, production units, we are not having, right? So that's why we can take an assumption like this factory cost is total factory cost except direct material cost. Okay, bottleneck resource available. That means total minutes available. So cost divided by time. That means we can calculate cost per total factory cost per minute. Okay. So that is how we can calculate uh, cost and throughput accounting. So throughput contribution per unit in total throughput accounting ratio, sir. Okay. So let us solve this problem point to point, sir. So try to write along with me. Solve the problem. I will be writing everything. You also try to write with me. Okay, so first point is calculation of preference ranking. Statement showing preference ranking, sir. Now, to calculate that preference rank, here we have three products. Okay, take product X, product Y, product Z, particulars column. Okay, now what is our first? First of all, to give preference ranking, you need to calculate profitability. Profitability means throughput contribution per unit of bottleneck. That means you have to calculate throughput contribution. For throughput calculation, take sales 66, selling price, that is not sales actually. Selling price 66, 75, 90. Okay, from that subtract pure variable cost. That means direct material cost and other variable cost. Okay, that is 24, 30, 40, sir. Now we get throughput contribution. Throughput contribution 66 minus 24. How much, sir? Okay, 42. Throughput contribution 42, 45, 50. Bottleneck hours required. Take bottleneck hours required. Required. Why I'm taking bottleneck hours means our target is to calculate profitability. So take 15, 15, 20, right? In question they have given minutes. Bottleneck hours, not hours, sir, minutes actually. Bottleneck minutes. Okay, what is throughput contribution per minute? Per minute. Throughput contribution will be 42 divided by 15. How much, sir? 2.82. Next one, 45 divided by 15 means 3. 50 divided by 20 means 2.5. Okay. So then now tell me what is your preference, sir? First preference would be for Y, second X, third Z. Okay. Okay. That is only the answer for this rank only they're asking in the first point, right? Highest rank product is Y only. Okay. Next one, second point, sir. Second point, we have to calculate throughput accounting ratio. That means that is equal to return divided by cost. Return means return per unit of bottleneck. That means throughput contribution per unit of bottleneck, sir. Per unit of bottleneck. In denominator, we have to take cost. Cost per unit of bottleneck. Okay, so let us calculate cost per unit of bottleneck. Cost per unit of bottleneck, that is equal to See guys, I think hi, hello everyone, welcome back. I think in yesterday's class, in previous class, we have stopped at this problem, right? 18th problem. In the middle of this problem only, I have stopped the class. Okay, see, in this problem, we have to calculate ranking as per throughput contribution. Selling price minus variable cost, you will get a throughput contribution. So here we have to take minutes per 1 unit. Okay, so by dividing with these minutes, you will get a throughput contribution per minute. Okay, so as this product Y is having 3 rupees highest throughput contribution per unit, rank 1, rank 2, rank 3. Then, so in this particular problem, our target is to calculate so one product return per minute. So we have calculated. Second one, throughput accounting ratio. To calculate throughput accounting ratio, we need throughput contribution per unit, so per minute. We have calculated that in first statement, and now we have to calculate cost. So cost means total factory cost per minute. So the total factory cost directly given in the question, and also total bottleneck minutes available. Total factory cost divided by total bottleneck minutes, you will get cost per unit per minute. Okay, so to calculate total throughput accounting ratio for the three products XYZ returns, we have calculated in point 1. Then cost, so which we have calculated so in above working. So now throughput accounting ratio return divided by cost. Okay, based on this return also we can give ranking 1 2 3 like that. Okay, as the product Y is having okay highest throughput contribution per minute, and also throughput accounting ratio is also greater than 1. So that's why you need to produce more number of units of Y. Okay, minimize the production of X and Z, sir. Okay, this is the problem. Okay, so once again to revise the total throughput costing. Okay, in throughput costing we have in total 4 concepts, sir. So first one is the difference between absorption costing, marginal costing, and throughput costing. So bottleneck and bottleneck elimination strategies. Bottleneck, when there is a bottleneck, how to calculate that optimal product mix, and some formulas. Okay, so coming to the first concept, difference are so comparison between absorption, marginal, and throughput costing. So under absorption costing, so product cost means the cost which we have to take to in valuation of closing stock, that is nothing but cost of production. Here cost of production means direct material, direct labor, direct expenditure, factory overhead, whether variable or fixed, sir. Okay, so period cost means selling and distribution overheads. But so coming to marginal costing, so under marginal costing, so while valuation of closing stock, we have to take only variable cost, that means direct materials, direct labor, direct expenditure. In case of factory overheads, only variable portion only we have to take under valuation of okay, so under marginal costing, closing stock valuation, sir. So next, coming to throughput costing, we only need to consider direct material cost only, that means pure variable cost. Sometimes we need to consider labor cost also, when labor cost is being paid based on the piece rate basis. Okay, so then so coming to income statement, marginal costing income statement, sales minus variable cost contribution minus fixed cost, will get profit. But in case of throughput costing, same, but in case of variable cost, you have to write direct materials, then you will get throughput contribution minus total period cost. Okay, you will get profit, sir. Okay, so coming to the bottleneck, so bottleneck means so work center or machinery which is having minimum capacity in the production system. Okay, if this is the production flow, in this production flow the work center or machine which is having minimum capacity is called as bottleneck, sir. Okay, so this bottleneck capacity minimizes the flow of production. So that's why we need to, so if bottleneck system is there means so there will be some work in progress stock will be blocked, sir. So on that work in progress stock you will be having some carrying cost. To eliminate the carrying cost, we have to eliminate this bottleneck. Elimination of bottleneck means increasing the capacity of bottleneck center. Okay, so to increase the capacity of bottleneck center, we have 4 strategies here. So first one, align all missions to bottleneck mission. So that means as this bottleneck center B missionary B capacity is 80,000 only. So we have to produce 80,000 units only on mission A. So then there won't be any working stock progress pile up here. Okay, so coming to second one, so replace complete mission B with a new mission which is having capacity of 1 lakh units capacity. Okay, that means we have to do some capital investment again. So coming to another strategy, we can also do for this 20,000 units, for the surplus of 20,000 units, so we can do some capital investment. That means we can purchase additional small machinery which can process 20,000 units, or else you can give subcontract this 20,000 units, outsourcing or so subcontracting this 20,000 units. Okay, so the point here is whenever you are making some capital investment, so only do capital investment on non-bottleneck mission or non-bottleneck center. Okay, in doing investment on so bottleneck center doesn't sorry, in reverse I said. Okay, so always do capital investment on bottleneck machinery or bottleneck center only. So doing investment on non-bottleneck center doesn't improve any so output capacity of production system, sir. Okay, so next one, optimal product mix, sir. So to calculate optimal product mix, we have to calculate profitability. Here profitability will be calculated based on the throughput contribution per unit of bottleneck. Okay, so to calculate throughput contribution, sales minus direct materials, you will get throughput contribution. Okay, so divide each unit throughput contribution with bottleneck units required to produce that particular unit, sir. Then you will get throughput contribution per bottleneck unit. Okay, based on that you will give preference ranking. So based on this preference ranking you can calculate the product mix, sir, like this. Next one, formulas. So first formula is throughput accounting ratio. In simple, so this is the ratio between return and cost, sir. Okay, return divided by cost. That means so so if you invest 1 rupee of cost, how much return you are getting on that investment of 1 rupee? So that is actual throughput accounting ratio, sir. Okay, so if you are getting some return means how much you are investing for that, how much cost you are incurring for that return, sir. That is actually so represented by throughput accounting ratio. So here return means return per bottleneck unit. That means throughput contribution per bottleneck unit. Throughput contribution can be calculated using sales minus direct materials. Sometimes direct labor cost also will be taken. So when labor are being paid based on the piece rate. Okay, so coming to cost. Cost means total factory cost except direct material cost, sir. Okay, so total factory cost except direct material cost per bottleneck unit. Okay, so here return also we are taking per bottleneck unit, and also cost is also will be taken as per bottleneck unit, sir. So next one, efficiency can be calculated based on the three basis, that is output basis, time basis. So in case of bottleneck resources, we can calculate it using hours used divided by hours available. Okay, throughput cost. To calculate this throughput cost, the formula will be like okay, standard hours for actual output. Okay, multiplied with cost per bottleneck unit. That's it, sir. These are the concepts we have learned in throughput costing. Okay, so next we shall discuss. Come to this problem number 14, sir. Read this problem once. Bottleneck elimination strategies. So come to the page number 4.3.1 in our workbook. Okay, illustration number 14, that is based on bottleneck elimination strategies. Done. See, CAT company makes a product using three machines, sir. X, Y, Z. The product has to pass through all three machines. We're having X, Y, Z. So the capacity, mission capacity per week. Okay, that means X can produce 800 units in 1 week. Y can produce 600. Z can produce 500 units within 1 week, sir. Okay, now out of these three missions, which one is the bottleneck mission, sir? Z. Y, least capacity, right? So minimum capacity. So that's why Z is the bottleneck center, sir. The demand for the product is 1000 units, sir. Now our target is to satisfy this demand of 1000 units, sir. Okay, as the product has to pass through all three missions X, Y, Z. Even if I give so out input of 800 units, it doesn't give output of 800 units, right? So how much maximum output I will get, sir? 500 only. Okay, that means I have to improve the capacity of Z bottleneck machine. So and also here we have demand of 1000 units. That means we have to satisfy the demand of 1000 units. To satisfy the demand of 1000 units, what I have to do, sir? Okay, I have to increase the capacity of Z, capacity of Y, capacity of X also here. Okay, read that question. For every additional unit sold per week, profit increases by 50,000. CAT company is considering the following possible purchases. Okay, so following three alternatives as given in the question, sir. They are normally exclusive. Hence, combination of exclusive means independent of each other. Okay, you can use the combination of proposals also. Proposal 1, proposal 2, proposal 3. So, what is proposal 1, sir? Proposal 1 is saying like replace mission X with newer model. This will increase the capacity to 110. Okay, if I implement proposal 1 only independently, that means my Z capacity, mission X capacity will be increased to 1100. Okay, so if I only take this alternative only, in that case also my bottleneck capacity won't increase, sir. In that case my bottleneck is Z only. I can produce 500 units only. Okay, so what happens if I take proposal 2 only? Okay, invest in second mission Y, increases the capacity by 550. Now, so if I take proposal number 2, what will be my capacity of mission Y, sir? So here wordings are important, sir. They are saying by 550, here to 110, sorry, 1100. Okay, by 550 means plus 550, in total 1150. Okay, if I take proposal 2 only, in that case also my bottleneck center is Z only. Bottleneck capacity is not increasing. Okay, so proposal 3, upgrade mission Z at a cost of 75 lakhs. Okay, if I increase the capacity of Z by investing 75 lakhs, okay, so increase the capacity to 1050. In that case my Z capacity will be increased to 1050. Now which one is the bottleneck center, sir? Y will be the bottleneck center. So in this case also I cannot satisfy this demand of 1000 units. Now let us take the combination of proposals 1 2 2 3 1 3 like that also. Okay, even if I take 1 2 combination or else 2 3 combination or else 1 3 combination. Okay, I said okay, 2 2 combination, even though if I take 2 2 combinations, I cannot produce 1000 units, right? Okay, see in this answer, come to the answer. Okay, so here they have given 50,000 rupees. Okay, under throughput costing, decision will be taken on capacity of machine only, not based on the profit or investment. Okay, we have to so focus on satisfy this demand of 1000 units. That's it. That is only our target here. Okay, so if I take proposal 1 only, so X capacity will be increased, then Z will be the bottleneck. Okay, so if I take proposal 2 only, Y capacity will be increased, then Z will be the bottleneck. Okay, so if I take proposal 3, then Z capacity will be increased, then Y becomes the bottleneck. Then so if I take XZ, XY, ZY, these combinations, XZ means X capacity, Z capacity will be increased, Y will be the bottleneck. If I take X and Y, okay, So X capacity, Y capacity will be increased, Z will be the bottleneck. If I take Z and Y, okay, these two machines capacity will be increased. Now X will be the bottleneck. Okay, in this all these three alternatives, I am not satisfying this demand of 1000 units. In this any of this alternative, I cannot produce 1000 units, right? Okay, as I am having 1000 units of demand, so I shall try to satisfy that demand. Okay, then only I will get maximum profits. Okay, see, now for that what I'm doing is like I can implement X, Y, Z. That means alternative 1, 2, 3 simultaneously. So X capacity will be increased to 1100, Y to 1150, Z to 1050. That means in this case, for all the machines are having capacity more than 1000 units. That means I can produce the demand of 1000 units, then I can sell all the production, sir. That's it. That is only the problem. Therefore all the three proposals, all three machines are to be purchased in the above order to meet the existing demand. To satisfy the existing demand, I have to implement all the three proposals. Okay, so here the point is like, so if your target is only to improve the bottleneck capacity, means you have to do investment on bottleneck central. Okay, here to while satisfying the demand. Okay, so at any point of time, all three machines become bottleneck centers. That's why we have to do investment on three machines. Just a small normal question only. Now read this question, illustration 17, sir. So read that question and tell me which one is the bottleneck center. So which one is the bottleneck, sir? Finishing. Excellent, sir. Now see, T Limited produces a product which passes through two processes, sir, cutting and finishing. Which type of product will pass through cutting and finishing process, sir? Wood cutting. Wow, excellent, sir. Nice. Okay, cutting finishing, sir. Available hours per annum 50,000, 60,000. So by see after seeing these two numbers, most of the students say like cutting is the bottleneck center, but in reality we have to check for output only. Okay, hours needed per unit of product 50,000 divided by 5, 10,000. That means cutting process capacity is 10,000 units. Coming to finishing, 60,000 divided by 12, that means 5,000. So finishing output capacity is 5,000, cutting output capacity is 10,000. Now finishing is the actual bottleneck unit, sir. Okay, fixed operating cost per unit, so per annum excluding direct material cost. Okay, 10 lakh, 10 lakh, sir. Now the selling price of product is 1000 rupees per unit, and the only variable cost per unit is direct material, which cost 400 per unit. So now what is the throughput contribution, sir? Throughput contribution, that is equal to 1000 minus direct material cost 400, that means 600 is the throughput contribution, sir. Okay, so there is demand for all the units produced, so whatever the production you make, okay, for that there will be demand, sir. Now, so evaluate the each of the following proposals independent of each other. Okay, independent means what, sir? So only one only I have to take, or else combinations can I take? Only out of three proposals, only one proposal only I have to implement. That's it. Okay. Now see. So first one, an outside agency is willing to do finishing operation. Okay. So what is our bottleneck operation, sir? Finishing only. So outside agency is willing to do finishing operation. That means outsourcing or subcontracting option. Any number of units between 5,000 to 7,000 at 400 rupees per unit, sir. Okay, so keep it aside. Second alternative, another outside agency is willing to do cutting operation. Okay, actually here my bottleneck process is finishing only. I have to increase the capacity of finishing only. Okay, then why I go for this alternative too, sir? So actually cutting operation is having surplus capacity. See, cutting operation capacity is 10,000 units, finishing is 5,000. Okay, so that means maximum output. If I, even though if I give our input of 10,000 units, okay, my output will be 5k only. So if I give input of 5k, so my output will be 5k only. That means cutting operation is having 5,000 units of spare capacity, surplus capacity, right? Okay, so already cutting operation is having surplus capacity. So then why I try to implement second alternative, sir, under outside agency cutting operation? Why I give subcontractor outsourcing of cutting operation? Okay, this alternative I will never go for. Okay, so third one, additional equipment for cutting can brought for 10 lakhs, increase the cutting capacity by 50,000 hours, annual fixed cost. Okay, here again, okay, so this alternative is to improve the capacity of non-bottleneck center. Okay, so that's why these two alternatives trying to improve the capacity of cutting process, that means non-bottleneck center. Okay, so these two alternatives won't be implemented. Why means this doesn't increase the capacity of finishing activity. Okay, so now what I can do is I can implement alternative one only. Okay, let's write the answer, sir. So let's say we have to show the calculation that finishing activity is only the bottleneck center, sir. Okay, so first one, so cutting, finishing, cutting, finishing. Hours available. hours available, here 50,000, here 60,000 hours. Okay, so hours needed per unit, here 5 units, here 12 units, sorry, 12 hours. That means output, maximum output, that is 10,000 here. That means 50,000 divided by 5. Okay, here 60,000 divided by 12. That means how much, sir? 5,000 only. Okay, so now which one is the bottleneck? Bottleneck center. No, yes, this is the bottleneck center. Okay, so write one observation. Okay, here, so cutting process has the surplus capacity of surplus capacity of 5,000 units. Surplus capacity of 5,000 units. Finishing process is bottleneck. So implement the strategies. which which increase capacity of bottleneck center. Now write evaluation of alternatives. In the first point itself we can write like alternative 2 and alternative 3 are not increasing the capacity of bottleneck center. So these alternatives are not at all feasible, right? Now alternative 1, sir. Evaluation of alternative 1. Now see, let's say for example, in first alternative, let's say point A, if our demand is 5000 units only, sir, let's say only the demand. So if 5000 units only the demand, so what I will do, sir, I can produce 5000 units on machine, using these two processing centers, so cutting and finishing, as my capacity of cutting process is 10,000, finishing 5000, so that means I can produce 50,000 units. In that case, what will be my contribution, throughput contribution? Yes, cutting 5000, finishing activity 5000, 5000 units can be produced. Throughput contribution will be 1000 minus 400, that is equal to 600 throughput contribution, sir. Now let's say our demand is 7000 units, sir. Okay, so if my demand is 7000 units, first of all, using the existing capacity, I can produce 5000 units, sir. Okay, for remaining 2000 units, what I can do, sir, I have to go for outsourcing. Okay, let's say what this alternative is saying, an agency is willing to do finishing operation number of units between 5000 to 7000. Okay, so that means they won't process just 2000 units only. So in that particular situation, so either I have to go complete outsourcing, or else you have to produce only 5000 units on existing machine, right? Got it? Okay, so outside agency less than 5000 units. Okay, so that means either we have to go for complete outsource of 7000 units, or produce 5000 units only. sacrifice demand of 2000 units. Let's say now my capacity is 10,000 units, sir. 10,000 units demand. So in this case, what I can do, sir, for first 5,000 units, I can produce in-house. For the rest of 5,000 units, I go for outsourcing. Okay, so in-house production, outsource. Okay, nothing but here we are doing analysis of somewhat like make or buy situation, similar to the make or buy situation, sir. Okay, so I'm producing first 5,000 units in in-house production. That means how much contribution I will get, sir? Selling price 1,000, direct material cost 400. That means throughput contribution is 600. Okay, so if I go for outsourcing, means selling price 1,000. Okay, so direct material cost 400 only. So throughput contribution is 600. From this throughput contribution, in addition, I have to incur somewhat how much, sir? Subcontracting cost 400. That means so subtract this 400. Net contribution 200 only. Okay, that means my contribution is getting reduced in this outsourcing alternative. Okay, sir. Let's say so further analysis not needed, but let's say if I have to do means 5,000 units into 600, how much, sir? 30 lakhs. Okay, so what is my fixed cost? Total fixed cost 10 lakhs, 10 lakhs on two processings, right? 10 lakhs here, 10 lakhs here, total 20 lakhs. Okay, 20 lakhs. That means here I am getting profit of 10 lakhs. Okay, so here 200 on each incremental unit, 5,000 into 200. That means how much, sir? 10 lakhs. Okay, so from this 5,000 units itself, I am recovering my total fixed cost, sir. Here itself I am getting profit of 10 lakhs. Okay, so from this additional so subcontracted units, again I am so earning 10,000 units contribution. So as I have already recovered fixed cost, so here even though my net contribution is getting reduced, I can go for what, sir? Subcontracting. Okay, so these alternative, all these alternatives we don't need to write. Okay, in case of marginal costing, we do all this calculation and everything. Okay, so this is enough, sir, I think. Let's say in this point, in this first point also we can do this analysis, sir. Okay, let's say for example in this first 5,000 units alternative. Okay, so I'm having two alternatives, sir. Either producing in-house or else I can go for outsourcing. So if I do in-house production only, I will get throughput contribution 600. So instead of producing in-house, if I go for outsourcing means here also I'm getting only 200 net contribution, sir. Okay, so in that case my fixed cost, total fixed cost will be 5,000 into 200, that is 10 lakhs only. From this 10 lakhs I will be having to subtract fixed cost, how much, sir? 20 lakhs. Then I will be getting loss of 10 lakhs. That means in this particular situation, if my demand is 5,000 only, I have to produce in-house only. Okay, That's it, sir. That is enough, I think. Okay, write the conclusion. Okay, what if the demand is more than 10,000 units, sir? Sir? Yes, sir. So cutting activity, we are having 10,000 units only capacity. Okay, that means we cannot produce more than 10,000 units. Okay, if you want to produce more than 10,000 units means then you have to go for one of the alternatives, 2 or 3, sir. Okay, let's say if my uh, demand is 12,000 units, then I go for second alternative also. So if I go for first alternative and second alternative, so cumulatively I have to apply, right? So then what will be my contribution, sir? Throughput contribution. So for 10,000 units, more than 10,000 units, from 5,001 to 10,000 units. Okay, this is only right. On this 5,001 to 10,000 units, I am getting throughput contribution of net contribution of 200 rupees. Okay, so if I go for more than 10,001, that means cutting. So here for finishing activity, we can give outsourcing of till 7,000 units also I can give outsource, right? Okay, for each unit I will be incurring 400 additional cost only. Okay, so finishing activity capacity is there. So in-house capacity 5,000 plus outsourcing 70,000. Total 12,000 capacity in maximum is there. Okay, so cutting activity capacity 10,000 only. I have to increase the 2,000. To increase the 2,000 capacity, if I choose alternative 2, what will happen, sir? Additional cost of 200 rupees. That means net contribution will be selling price, 1000 rupees, direct material cost how much, sir? 400 rupees. Okay, then throughput contribution is 600. Okay, as I have to so outsource the finishing activity. For that finishing activity cost 400. Okay, again for 1000, 10,001 to 12,000 units I have to give outsourcing of cutting activity also. For that cutting activity, so again I will incur additional 200 rupees. So net contribution will be 0. Okay, so you won't go for that alternative more than 10,000 demand. So as you are not having capacity of cutting activity, so if you go for outsourcing means you will get a 0 contribution. That means till 10,000 units analysis is enough, sir. Okay, all those alternative calculation and everything don't need it, not needed. Okay, so till let's write a conclusion, sir. For more than 5,000 units, okay, even though finishing activity outsourced, net contribution is positive. So company go for alternative 1. So for how many units they have to outsource, sir? outsource outsource 5,000 units only. Okay, so in this particular alternative also, these 2 points you don't need to write, sir. You can avoid these 2 points. You can directly write this point, sir. So the answer given in the workbook is somewhat wrong, sir. Okay, that was given in institute material. That is, they will say like outsource 7,000 units. Okay, in that alternative they will get the losses. So that's why. So we won't go for 7,000 alternatives. Okay, and in one of the, so near I think In 2014 MTP, same question was given. Okay, in that MTP also they have so given a solution like this only. Same analysis they have given, sir. Okay, so as I'm feeling like this answer is somewhat so wrong here. Why means throughput contribution 7,000 units. They are calculating some RAM calculations. So that's why you write this answer only. This was given in MTP. So 2014 at that means in old syllabus 2012 syllabus this kind of analysis is there, sir. Okay, done. Next one, some small questions only. Two small questions are there, sir. Question number 12. Come to the page number 4.3.5, illustration 12. Hi Shakshi, hi Haripriya, good morning. Okay, read this question. A factory has key resources, bottleneck facility A, which is available for 60 to 2600 minutes per week. The time taken per unit of product X, product Y in facility A are 5 minutes, 10 minutes respectively. Last week actual production was 9500 units of product X and 1300 units of product Y, sir. Actual factory cost is 1,56,500. What is the throughput cost for the week, sir? So what is the formula for throughput cost? Standard time for actual output multiplied with the cost per bottleneck minute, sir. Okay, now let us write this answer. Throughput cost. Throughput cost for a period. That is equal to standard time for actual output multiplied with cost per unit of bottleneck, sir. Cost per bottleneck unit. Now let us calculate the standard time for actual output, sir. Here we have two products X, Y. Okay, so actual output of product X and product Y. Actual output how much, sir, for product X? Okay, actual output of product X. So look at the question and tell me how much is the actual output of product X, sir. 9500 units. For product Y, 1300 units, sir. Okay. Now what is the standard time per unit? So 5 minutes, 10 minutes. Okay, in total. So total time, standard time for actual output. Actual output how much, sir? So 47,500. So this is 13,000. Okay. So in total standard time used, total standard time 60,500 exactly. Okay, minutes, right? Okay, now we have to calculate cost per bottleneck unit, sir. Cost per bottleneck minute. Okay, that means total factory cost divided by bottleneck minutes available. bottleneck minutes available. So now total factory cost, how much, sir? 1,56,500. 1,56,500 divided by bottleneck minutes available 62,600. Okay, so cost per bottleneck minute, how much, sir? 2.5 rupees per minute. 2.5 rupees per minute. Now, so we can calculate total cost for the period. So standard time for actual output is 60,500 minutes into 2.5 rupees per minute. That is equal to how much, sir? 1,51,250. Okay, so can you guys tell me what is the efficiency here? Okay, so how much bottleneck minutes available, sir? 62,600. How many standard bottleneck minutes used? 60,500. So now what is the efficiency, sir? 60,500 divided by, so how much? So that means with the available data we can also calculate efficiency. Done. So next, go to that next question, sir. So this is somewhat big question. So this kind of questions only be asked in the exam. Okay, read that question, sir. Read this question. So first of all, read these points, sir. What they're asking: calculate total factory cost, cost per factory minute, return for factory minute. That means throughput contribution per minute. Okay, throughput accounting ratios for the both the products, throughput cost, efficiency ratio. 6 points they're asking, sir. Okay, so first of all, read the question. Okay, with the available data, so how can we calculate all these factors means? So just think. So tell me first point, sir, what is the total factory cost? Yeah, total factory cost means total factory cost except direct material cost. That is only you have to take, right? Okay, let's read this question. A factory has key resource, that means bottleneck. So facility A, which is available for 30,300 minutes per week. That means available bottleneck times are budgeted factory cost on two products XYZ are shown below. Selling price, material cost. Selling price minus material cost. You will get throughput contribution. How much here, sir? 15. 35 minus 17.5. 17.5. Okay. Now, time in factory A 5 minutes, 10 minutes. That means throughput contribution per minute. Can we calculate that? Here 15 by 5, 3. 17.5 divided by 10. That means 1.75. This is throughput contribution per minute. That means we can say a return. In throughput accounting ratio, we can take it as a return. Okay. Second one, budgeted factory cost per week, direct labor, indirect labor, power, depreciation, space cost, engineering and administration. Okay, so all these costs we can take those costs as okay, so factory cost. So make a total of it, sir. How much it is? 25,000 plus 12,500, 1750, 22500, 8,000 plus 3,500 plus 5,000. So that number actually directly they have given in the question itself. That means this is only the answer for point number 1, sir. Okay. Actual production during the last week. Actual output they are giving, sir, for product X and product Y. So what is total factory cost? Total factory cost means total factory cost except total factory cost except direct material cost. Okay, that is 78,250. Okay, now cost per factory minute. Okay, total factory cost divided by bottleneck minutes available. That means 78,250 divided by bottleneck minutes available. How many minutes, sir? 31,300. 31,300. So how much? Okay, 2.5 rupees is cost. Okay, now return for factory minute for both the products. Okay, so for factory minutes, return for factory minutes we have calculated here. Next one, 3 and 1.75. Now throughput accounting ratio, that means return by cost for the two products separately X, Y. For X 3 rupees, for Y 1.75. Cost is 2.5, 2.5. You can calculate throughput accounting ratio. Okay, sir. Understanding, sir. Okay, next one, throughput cost per week, sir. Throughput cost means standard time for actual output. So we have to calculate that standard time. So now what is that actual output, sir? Actual output given in the question, that is 4750650 into standard minutes for product X, 5 minutes, for Y 10 minutes. Okay, that means multiply here with 5, here with 10. So 4750 into 5, how much, sir? 23,750. 650 into 10, that means 6,500. So total 30,250. This is the standard time for actual output. The standard time for actual output is nothing but so we can take it as a minutes used for actual output. Okay, so what is the cost per minute, sir? 2.5. Here we have calculated. So standard time into 2.5, you will get a throughput cost, sir. Now efficiency ratio. Efficiency ratio is nothing but so time used or else hours used 30,250 standard divided by, so actual time available 31,300. Okay, $96 point. Now, so let us write, sir, solve point to point or else it's fine for you. Okay, so solve చేద్దామా? Okay, see, let's solve, sir, point to point. So actually one of the important question only. Okay, even though it will take time, I will solve. Okay, right, try to solve along with me, sir. Okay, so first of all we have to calculate the total factory cost. Point number one, total factory cost, that means total factory cost except direct material cost, sir. So that amount directly given in the question, that's why I am writing 78,250. Okay, second point, cost for back factory minute, cost per factory minute, that is equal to factory minute, that is 78,000 total factory cost divided by bottleneck minutes available. So total factory cost is 78,250, sir. Bottleneck minutes available are 31,300. That means 2.5 rupees. Now third point, what is our third point, sir? Return. Okay, so third point. Okay, let's say here I will be taking a statement product X, product Y, sir. Selling price, how much, sir? Selling price for X 35, for Y also 35, 35, 35. Okay, so direct material cost minus direct material cost for this one 15, 17.5, 15 only, sorry, 20. Yeah, I'm checking whether you are following or not. I'm testing you, sir. 15, 17.5. Okay, so this is throughput contribution. Bottleneck minutes required. Bottleneck minutes required per unit. Okay, that is given in the question. That is 5 minutes here, 10 minutes here. Okay, so to produce 1 unit of X, I need 5 minutes. Okay, so if I produce 1 unit, I will get a throughput contribution of 15. That means per unit, if I use this 5 minutes on this product X, per unit I will get 15 rupees of contribution, and per minute throughput contribution per minute, per bottleneck minute. So 15 by 5, 3 rupees here. So 1.75 here. That means 15 by 5, 17.5 divided by 10. Okay. So now next point. Okay, let's say actual output. So here we got written, right? Oh, so what is our next point, sir? What is that? Throughput accounting ratio. Okay, so here we have already written a statement, right? Okay, cost. So return cost 2.5, 2.5. Throughput accounting ratio 3 divided by, so return divided by cost, 3 divided by 2.5, how much, sir? 1.2. That means this is greater than 1. Okay, here 1.75 divided by 2.5, that means 0.7 less than 1. Okay, this is answer for fourth point. Okay, next one we have to calculate what, sir? Throughput cost. Throughput cost. Throughput cost, that is equal to standard time for actual output into cost per minute. Okay, so now, so for product X, what is actual output, sir? 4750 units. Okay, so 4750 units into standard time per unit is 5 minutes. Okay, plus product Y. Okay, actual output is 650 only. For each unit we need to take 10 minutes. This is what's our standard time. Okay, so what is this total standard time? 30,250 multiplied with the cost 2.5, sir. Multiply with 2.5, you will get 70 75,625. Okay, so this is throughput cost, sir. Now sixth one, efficiency. Efficiency, bottleneck hours available. Bottleneck hours available in total, how much, sir? 31,300. 31,300. Okay, so bottleneck, so minutes only. Bottleneck minutes used, that means standard time for actual output, 30,250. Efficiency is equal to 30,250 divided by 31,300 into 96.65 percentage. That's it, sir. Okay, so here we have one past paper question, sir. Okay, read this question once. June 24 attempt. So they have given this question, sir. Here we have to write product mix only. But one additional point is there. Okay, read that question once. Okay, see. So BN Limited, a manufacturing company, manufactures three products VN, DN, XN. Due to scarcity of mission hours, management of BN Limited is planning to adopt throughput accounting in the company. The information pertaining to three products are as follows: VN, DN, XN. Selling price, material cost. Okay, selling price minus material cost, you will get throughput contribution. Okay, mission hours required. Throughput contribution divided by mission hours required. Profitability. Based on that profitability, you will give the preference ranking, which has to be produced first and which is to be later. Maximum annual demand for VN 3000 units, for DN 4000 units, for XN 2000 units, sir. Now, so maximum demand also given in the question. Total factory cost is 1 crore, right? 1 crore 5 lakhs. Available mission hours are 35,000 hours only. Bibon has to supply 2,500 units of product DN to Beta Limited as per the court judgment, which cannot be denied. Okay, now, so what they are saying is DN unit has to be produced to Beta Limited as per the court order. That means they might have entered an agreement before. Okay, so Beta Limited may went to the court. So court judgment is like, so supply this 2,500 unit to DN. Okay, now so required rank the products using throughput accounting and prepare a statement showing optimal mix for maximization of profits, sir. Okay, so first of all, so to give the decision, here we have to calculate throughput contribution per minute per mission hour, sir. Per mission hour we have to calculate. Based on that, we will give preference ranking, sir. Okay, so let's say here which product we have to supply to Beta, sir. DN, right? DN has to be supplied to Beta. So DN. Let's say if our preference is, first preference is VN, second preference is XN, third preference is DN, sir. Okay. So but as court judgment is to supply the DN to Beta. First of all, we have to produce and supply this DN to, so produce, so for this 2,500 units we have to give some preference. Okay, see, read these 2 points. Rank the products using throughput accounting, prepare a statement, optimal product mix, maximization of profit. That means okay, so irrespective of, so not considering this court judgment, first of all we have to calculate the optimal product mixer based on the throughput preference. Second point, whether the court judgment has affect the optimum plan of the product. That means, okay, if court judgment is implemented, so at the beginning itself, we have to give preference for this 2,500 units for D answer. Even though as per throughput accounting, it's ranking 3, we have to give preference. That is only the court judgment here. Okay, so here we need to calculate product mix, and also as they are asking for amount, how much amount, that means we have to calculate profit also. Profit means throughput contribution, total throughput contribution minus factory cost, sir. Okay, but same general question only, but court judgment small point added in this particular question, sir. That's why, see, I will be solving the first point and second point. For the first point, so do the problem as usual, as usual. Okay, see, point number 1, sir. So calculation of throughput contribution and preference ranking. Okay, we have how many products, sir? VN, DN, XN. Product VN, product DN, product XN, sir. Okay, So what are the selling prices? Selling price is 5,000, 4,000, 3,500. 5,000, 4,000, 3,500. Now, what is direct material cost? Direct material cost is 2525 2,500, 2,500, 2,000. Okay, that means throughput contribution will be 2,500 here and 1,500 here and 1,500 here, sir. Okay, so bottleneck minutes, sorry, hours. Bottleneck hours, that means here mission hours actually. Okay, required per unit is 564. Okay, throughput contribution per hour 2,500 divided by 5. So 500 rupees per hour. Here 250 rupees per hour, 375. So which one is our first ranking, sir? Your first preference will be VN, second and third preference, right? Okay. So based on this preference ranking, first of all, let us let us calculate the product mix, sir. Okay, so for the first point, sir, first point, what they are saying, as per the optimal product mix. Okay, so without considering code judgment, without giving preference to code judgment, first of all, what I am doing is, as per the throughput costing preference only I am going, sir. Okay, so total hours available. So here, write particulars. Take 3 columns here, sir. 3 columns here. 3 columns. Okay, so first bottleneck hours available. How many hours available, sir? 35,000 hours, sir. What is my first preference? Product VN. Okay, so how much is the maximum demand for product VN, sir? 3,000 units. For each unit I need 5 hours. 3,000 units into 5, that means 15,000 hours. Okay, so remaining hours are 20,000 balance. Okay, so here how many units I have produced, sir? Output. Okay, that means VN produced by 3,000 units. Okay, contribution, throughput contribution. For each unit of VN, what is my contribution, sir? Throughput contribution 2,500. Okay, now what is total contribution? 3,000 units into 2,500. How much, sir? 75 lakhs. Okay, why I am writing this throughput contribution means here I have to calculate the total profit. Okay, directly I am calculating, sir. Now, what is our next preference, sir? Second preference is XN. What is the total demand of XN? 2,000 units. For each unit I need how many hours? 4 hours. 2,000 into 4, 8,000 units, sir. 8,000, sorry, 8,000 hours. Okay, so balance hours will be 16,000 hours, right? Okay, so that means here I have produced 2,000 units of XN, 3,000 units of VN. Sorry. 12,000 hours only. Third point, third preference. So what is our third preference, sir? DN. Okay, actual, what is the outside maximum demand, sir? So maximum annual demand is for DN 4000 units, and also we have to supply 2500 units as per the court judgment. Okay, now we have to produce 4000 units and 2500 units, but so for each unit I need how many hours? 6 hours. Okay, so tell me how much, sir? 4 plus 6500 into 6, how many hours? Total hours are not available, right? Okay, so here I will calculate with the available 12,000 hours. So how many units I could produce? 12,000 divided by 6, 2000 units. So that means I could only produce 2000. So this is 0. I am producing 2000 units of DN only. Okay, whether I will supply this 2000 units to beta or not, that is secondary, sir. Okay, I am not considering court judgment here, as I am following throughput costing. So as per the throughput costing, I am calculating optimal product mix. This is only the optimal product mix under throughput costing, right? Okay, so this is how I have to go for. But so calculate the contribution here, sir. 2000 units xn contribution is 1500. Okay, so 2000 into 1500, 30 lakhs. So for this also 30 lakhs, 30 lakhs. Okay, now what is total contribution, sir? 1 crore 35 lakhs. Okay, what is my total factory cost? Less total factory cost 1 crore 5 lakhs. Okay, that means net profit will be 20 lakhs, right? Okay, sir. Got it, sir. Okay, so generally this product mix is fine. So in general problem, why I'm calculating this total contribution means, okay, here we have two alternatives. I have to compare. So I have to compare and tell what is the maximum profit and which alternative is the best also. Okay, now what is our second point is asking whether the court judgment has affected the optimum production plan. Okay, actually this is only my optimal production plan. That means producing 3000 units of VN, 2000 units of XN, and 2000 units of DN. This is the optimal product mix. But if I have to follow court's judgment, if I have to follow court judgment, so what will be my product mixer? Okay, so optimal product mix as per, so keep side heading, right? Like heading optimal product mix as per throughput accounting. Okay, so if I follow throughput accounting, this is only the my optimal production mixer. Now, so if I also need to consider court's judgment. Okay, so for that second point, product mix as per court judgment. Court judgment. See, same like above statement, take three columns, sir. Take three columns. First one is hours, second one output, throughput contribution. Okay. total hours available, sir. Bottleneck hours 35,000. Now, so if I have to follow court judgment, what would be my first preference, sir? In the beginning itself, I have to produce DN. How many units? Why 6,500, sir? 2,500 only, right? Okay, sir. Yeah. So, DN, how many units? Court judgment, 2,500 units only. Okay, for each unit, how many hours I need, sir? See, that means how many? 15,000, right? 15,000 hours, sir. Okay, so balance will be 20,000 hours. Okay, so now here my output is 2,500 units of DN. If I produce DN, okay, for each unit of DN, I will get contribution of 1500. Now 2,500 into 1500, sir, how much? 20 37 lakh 50,000, right? Okay. Now, so then what is my next preference, sir? So my next preference will be VN. VN as per the throughput accounting, first preference this one. So VN, how much maximum demand, sir? 3,000 units. Okay, so produce VN 3,000 unit. For each unit I need 5 hours, that means 15,000 hours. Okay, so my production will be 3,000 units of VN. Okay, so then remaining balance hours is 5,000 hours only, right? Okay, so for this 3,000 units, on each unit I will get contribution of 2,500 multiplied with 2,500. 3,000 into 2,500, how much, sir? 70 75 75 lakhs, right? Yeah. Next, I have 5,000 hours only, sir. What is my next preference, sir? Okay, so third one, produce XN. So what is the maximum demand of XN, sir? XN 2,000 units. Okay, so I'm having 2,000 units of demand of XN. Okay, each unit I need how many hours? 4 hours. 2,000 into 4, 8,000. So do I have 8,000 hours, sir? No. That means with the available 5,000 hours, 5,000 hours only available. For each unit I need 4. That means 1250, 1250 units. Okay, so use this 5,000 hours, 0 balance hours, 1250 of XN. On each unit I will get a 1,500 contribution. 18 lakh 75,000. Okay, how did I got it? Means 1250 into 1,500. Okay, next, total contribution. Total 1 lakh 1 crore. Okay, so then subtract total factory cost 1 crore 5 lakh 26 lakh 25,000. Okay, so got it, sir. So difference in profit. If we follow court order, profit will be reduced by how much? 3 75,000 only. So how did I got that? Means 30 lakhs minus 30 lakhs minus 26 lakh 25,000, sir. Got it, sir? Any doubts? So just normal optimal product mix question only, but here we have code judgment. In one alternative, without considering code judgment, you calculate the optimal product mix. So in second alternative, so you have to give that preference to the court order. Okay, if you give the preference to court order means third preference product. For the third preference product, you have to produce that one. So in the beginning itself, then your profit will be reduced by 3,75,000. So 7 mark question, sir. Okay, so next and final question only we have. Okay, I think this question you can do this, sir. Similar question, similar to, I think this kind of question we have done. Illustration. Uh, Ranking and throughput accounting ratio we have done, sir, this question. Okay, similar to the illustration 18, sir. Similar to illustration 18. Okay, so try this question later, not now. Okay, we have 13 minutes of time. Okay, let's read this question, sir. Illustration 16. Okay, so difference between absorption costing, marginal costing, and throughput costing. Okay, this kind of questions definitely may not be asked in the examination. Definitely won't be asked in the examination, sir. Why means this one is somewhat lengthy question, sir. So this kind of questions won't be asked in the examination, but for conceptual purpose, let us do this problem, sir. Okay, go through that question once. So in this question they ask you to, under absorption costing, marginal costing, throughput costing, income statements, sir. Okay, so under absorption costing, so if you follow absorption costing, okay, so direct material, direct labor, factory overhead is the cost of goods sold. Okay, if you follow marginal costing, all variable cost. Okay, so if you follow throughput costing, only direct material cost. Okay, this is how you have to calculate the profits under each different methods. Okay, so here we have 3 period data: year 1, year 2, year 3. Okay, so in first year, I think we are not having any opening or closing stock. Second year, closing stock is there. Third year, opening stock is there. Okay, so this question is for conceptual understanding only. Okay, read that question and then we will solve that part, sir. Okay, so we will solve this question tomorrow's class, sir. Okay, after completing this question, we'll start activity based question in next class. Okay, so for now, take a break. We'll be having DT class at 11 o'clock. So thank you all. We'll meet you in tomorrow's class. Bye. Yeah, hi, hello everyone. So welcome back. Good morning, sir. Good morning, all of you. So come to the page number 4.3.8 workbook illustration 16. Read that question once, then we will solve that question. Done, sir. Shall we start? Yeah. See, given below is the basic data relating to New India company for 3 years. Okay, 3 years data given in this question, sir. Okay, production and inventory data. Okay, planned production in units. So 2500, 2500, 2500. Finished goods inventory. Okay, so opening inventory is not there. Actual production 2500, 2500, 2500. This is actual production. Okay, actual sales 2500. So 1750 only, 3250. Finished good inventory. So given. So they have given in the question opening stock. Okay, let's say this is opening stock. This is closing stock. Okay, actual production, actual output, sold units. Okay, so now revenue and cost data for all 3 years. Selling price per unit 48 rupees. Okay, now material cost per unit, sorry, manufacturing cost per unit given in the question. Okay, direct material 12 rupees, direct labor 8 rupees. Okay, so variable manufacturing overheads for total variable cost 24 rupees. So 12 plus 8 plus 4, 24, right? Okay, now so used under absorption costing, fixed manufacturing overheads. So fixed manufacturing overheads, that is equal to, so annual fixed overhead divided by annual production. So 30,000 is the, so fixed manufacturing overhead, sir. Okay, total absorption cost per unit. Okay, 30,000 divided by 2,500. How much, sir? 12. 12 rupees. Okay, total variable cost 24 rupees and fixed cost absorbed 12 rupees. That means under absorption costing, so 36 rupees is the total cost absorbed. Okay, variable selling and administration cost per unit 4 rupees. Okay, selling and distribution cost, sir. Selling and distribution fixed cost 5,000. Okay, so this is selling and distribution overheads. Okay, this will be treated as period cost. So whatever the amount incurred, that will be transferred to the P&L account. Okay, so you are required to prepare absorption costing, income statement, marginal costing, and throughput costing, sir. Okay, first of all, coming to the absorption costing. So in absorption costing, okay, so we have to treat it as like in absorption costing, cost of goods sold, direct material, direct labor, factory overheads. Okay, so total manufacturing cost only will be treated as cost of production. Total selling and distribution overheads will be treated as period cost, sir. Okay, we have, so in 1 year we have opening stock and in 1 year we have closing stock, sir. Okay, with this data we have to calculate the profit under absorption costing, sir. Okay, so okay, let us solve this problem, sir, step by step. Okay. First one, absorption costing, income statement, sir. First point, absorption costing. Income statement. Absorption costing, income statement. Okay, so nothing but somewhat like this one is the cost sheet only. See particulars. So we have 3 years data, right? That's why year 1, year 2, year 3, sir. So what is actual output, sir? Actual output produced. So in each year 2500, right? 2500, 2500, 2500, 2500 in all 3 years. But units sold, is how much, sir? In first year 2500, second year 1750 only. Okay, so that means in second year there will be a closing stock of 250, that will become the opening stock in for year 3. Okay, so in year 3, what is the sales, sir? 3250, right? Okay, now so this one is basic information, sir. Now we have to write nothing but sales minus cost. That's it. Okay, sales information, sales value, sir. So what is the selling price per unit, sir? 40 48 rupees. Sales at the rate 48 rupees. Okay, so in year 1 sales will be 2500 into 48. How much, sir? 1 lakh 20,000. Okay, in year 2 1750 into 48 84,000. In year 3 3250 into 48 1 lakh 56,000, sir. Okay, now less from sales we have to subtract cost of goods sold. Cost of goods sold, sir. So this one, sir. So under absorption costing, what is cost of goods sold, sir? Direct materials plus direct labor plus factory overheads, whether variable or fixed, total to be considered. Okay, so in question they have given per unit information. Direct material cost per unit is how much, sir? Direct material cost 12 rupees, direct labor 8 rupees, variable manufacturing 4 rupees, in total 24 rupees. Okay, and also fixed manufacturing overhead per unit 12 rupees, right? Okay, in total how much, sir? 24 plus 12 36 rupees. Okay, so so for each unit sold you have to consider the cost of goods sold of how much, sir? 36 rupees per unit. Okay, so in that case we don't need to subtract the closing stock value, right? So now 2500 into 36, number of units sold into cost of goods sold, how much, sir? 90,000. Okay, so in second year 1750 only units sold, multiplied with 36 63,000. Okay, so in third year 3,250 units into 36 rupees 1 lakh 17,000, sir. Okay, this is cost of goods sold, sir. Okay, let's say this one is gross profit or gross margin. Gross margin is so 1,20,000 minus 90,000. How much, sir? 30,000. 84 minus 63 21,000. Okay, 1,56,000 minus 117 39,000. Okay, so from this we have to subtract what, sir? Period cost less period cost. So what is period cost, sir? Selling and distribution overheads are the period cost. Okay, so in selling and distribution overheads we have two types of cost. First one is variable and fixed, sir. Variable cost, fixed cost. Variable cost is at the rate 4 rupees per unit, right? Variable is 4 rupees per unit. Okay, 4 rupees per unit, but fixed is 5,000 per year. Okay, so fixed variable cost for each unit sold you have to calculate with 4 rupees. 2,500 into 4 10,000. Okay, so 1750 into 4 7,000. 3250 into 4 13 1000 sir. Next 5000, 5000, 5000. Okay. Now we will get net profit sir. So how much net profit? 30 minus 15, 15,000, 21 minus 12, 9,000. Okay, so 39 minus 18, 21,000. Okay, so this is absorption costing income statement sir. From sales we have subtracted cost of goods sold. From that so period cost sir. Okay, here directly per unit data is given, so that's why I'm directly subtracted cost of goods sold. So otherwise you have to calculate cost of production, and that cost of production again so classified into cost of goods sold and closing stock value. Okay, here as they have given directly per unit information, so whatever the unit sold, for that unit sold I have calculated cost of goods sold 36 per unit. Okay, on sold units I have calculated this value, right? Okay. So I got gross margin. From that I have subtracted selling and distribution overheads. I got this net profit sir. So next go to marginal costing income statement sir. So second point, marginal costing. So in marginal costing income statement also, so take the same statement, particulars, year 1, year 2, year 3 sir, 3 years data. Okay, just copy paste the actual output and units sold. Now okay, so write sales value sir, sales same value, so as like in above statement. 1 lakh 20, 84, 1 lakh 56,000, 1 lakh 20,000, 84,000. So last one, 1 lakh 56,000. Now, so from the sales we have to subtract less. Under marginal costing we have to subtract what sir? Variable cost. That means the cost of goods sold is only the variable cost sir. Okay, so variable cost here means direct material variable cost plus direct labor variable cost. Okay, so variable factory overheads. Okay, this is total variable cost. You can also add okay, selling and distribution overheads here, or else directly in period cost. Actually that is period cost only, that's why I will be writing that cost in period cost only. Okay, direct material plus direct labor plus variable fixed overheads. Direct materials 12, direct labor 8, 20 plus 4 rupees variable manufacturing, total 24 rupees, sir. Okay, so each unit should be multiplied with 24, whatever the units sold for that units, calculate multiplied with so 24, you will get 25, so 2500 into 24, 60,000. Next one 42,000, so the 3,250 into 78,000, sir. Okay, so this is cost of goods sold. So subtract these values, so we will get gross margin, or else here contribution. Okay, let's say how much, sir? 1,20,000 minus 60,000, 84 minus 42, 42,000, 156 minus 78,000, sir. Okay, from that we have to subtract period cost less period cost, that is nothing but fixed cost, sir. Here we have two fixed costs. First one is fixed factory overheads and also fixed selling and distribution overheads. Actually we have variable selling and distribution overheads also, but that we have to, so we can take either here or else here also. Actually that is period cost only, right? That's why I'm writing here. So if you are writing variable selling and distribution overheads here, means you should not write it as a contribution, just write it like gross margin. Okay, variable selling and distribution overheads, sir. Okay, so what is fixed factory overheads, sir? 30,000, right? 30,000, 30,000, 30,000. Okay, so fixed selling and distribution overheads 5,000, 5,000, 5,000. Okay, variable selling and distribution overheads. Okay, so multiplied at the rate 4 rupees, right? So in year 1, 10,000, year 2, 7,000, in year 3, 13,000. Okay, so now what is net profit, sir? Okay, 60 minus 45, 15,000. Okay, in year 2, so 42 minus 30 plus 7 plus 42, 0. In year 3, 78 minus 30, 43, 48, 78 minus 48, 30,000. Okay, this is income statement and marginal costing, sir. So for cost of goods sold value, you have to consider these values only. Okay, pure variable cost only, direct material, direct labor, variable fixed overheads. Okay, so you can also write selling and distribution overheads also here. Okay, actually we incur selling and distribution overheads for units sold only. Okay, you can write here as variable cost or else as period cost, you can write here, so there won't be any change. Okay, but so for presentation point of view, if you are writing contribution here, means you should write variable selling and distribution overheads here. Okay, otherwise, okay, as I am taking variable or selling and distribution overhead here, means here I have to write gross margin only. Now next point, third statement, sir, income statement under throughput costing. Okay, so year 1, year 2, year 3 particulars. Okay, so first 3 rows, same data, actual output, units sold, and sales revenue value also same. Same, that just copy paste that data. Now under throughput costing, what is our cost of goods sold, sir? Means only direct material cost. Direct material cost, how much, sir, per unit? 12 rupees. Okay, so units are sold 2500 into 12, how much? 13,000. 30,000. 1750 into 12, 21,000. 1,56,000 into 12, okay. So how we have calculated this means units sold into 12 rupees, right? Now, so write throughput contribution, sir. 1,20,000 minus 30, 90,000, 84 minus 21, 63,000, 56, 156 minus 39, 1 lakh, right? Okay. Now from this throughput contribution, you have to subtract less period cost. So what is that period cost, sir? Direct labor, variable factory overheads, total whatever the cost incurred, the total value you have to subtract, sir. Okay, so now fixed factory overheads, fixed selling and distribution, variable selling and distribution, all these expenditure we have to subtract, sir. Now first of all, what is direct labor cost? At the rate 8 rupees. Okay, so 8 rupees on which you are on units sold or on units produced, sir? On which we have to take, sir? On units sold cost, whatever the cost you incurred in that particular year, you have to subtract that, sir. So you incurred cost means whatever the units you have produced, on all those units you will incur direct labor cost, right? So that's why, so very very important point, you have to take these period cost on units produced only. Sir, so, sir, why you have taken on units sold here, sir? In marginal costing for selling and distribution overheads, we have taken on units sold only. Here, our assumption is like selling and distribution overheads you will incur on the units sold only, not on units produced. Okay, so coming here, direct labor cost and variable fixed overhead cost, you will incur these variable cost on units produced. Okay, so whatever the cost incur, all those costs you need to subtract, sir. But this variable selling and distribution overheads, you have to calculate that cost on units sold only. So our assumption is like you will incur variable selling and distribution cost only on units sold, not on units produced. So that's why, so direct labor cost on units produced, sir, units produced 2500 into 8, 20,000, 20,000, 20,000, 20,000. Okay, next one, variable factory overheads. So variable factory overheads, how much, sir? 4 rupees. That means half of direct labor. 10,000, 10,000, 10,000. So got it, sir? So next, fixed factory overheads, 30,000, 30,000, 30,000. Fixed selling and distribution overheads, 5,000, 5,000, 5,000. Variable selling and distribution overheads, this you have to calculate on units sold only. We have calculated that cost previously. So 10, 7, 13, right? 10,000, 7,000, 13,000. Okay. So what is net profit, sir? Net profit under throughput costing. 15,000. Net loss 9,000. 39,000. Okay, done, sir. 3 statements we have presented. Now draw your observations. Okay, now we have to give some observations. So to give that observation, that just nothing is there, sir. Just compare the data. Year 1, year 2, year 3 data. Just comparison only we need to do. Year 1, year 2, year 3. Observations. Observations. Just compare year 1, year 2, year 3 data, sir. Okay, so also copy paste the units produced and units sold. Just observe one thing. In year 1, no opening stock, no closing stock, sir. In year 2, there is closing stock, no opening stock. Okay, in year 3, opening stock will be there, closing stock is not there, sir. Okay, now what is the profit under absorption costing? Absorption costing. So tell me those profit elements, sir. 15, 9, 21. So under marginal costing, 15,000, 0, 30,000. Under throughput, 15, negative 9,000, 39,000. Okay, so tell me what is your observation, sir? So under absorption costing, closing stock will be valued at cost of production. That means direct labor, direct material, direct labor, factory overheads, whether variable or fixed, variable and fixed. In marginal costing, closing stock will be valued at direct materials, direct labor, variable factory overheads. Under throughput costing, closing stock will be valued at direct materials only. See, in year one, we are not having any opening stock or closing stock. That's why under three methods, our profit is same only. Okay, so what is our first observation? As we are not having any opening stock or closing stock in year one. Okay, so absorption costing, marginal costing, throughput costing, all these costing systems is giving us same profit elements. Okay, now coming to year number two. In year two, we're having some closing stock. Okay, so if you observe under absorption costing, marginal costing, throughput costing, under absorption costing will be, so under absorption costing, closing stock will have highest value. That means direct material, direct labor, factory overheads, variable, fixed. So these all are cost elements will be there in closing stock. In marginal costing, closing stock will be valued at only this direct material, direct labor, variable, factory overheads only. At this cost only, we value the closing stock. Under throughput costing, closing stock will be even more lesser, only for direct material cost only. That means absorption costing will have closing stock highest value, next highest, throughput costing, so closing stock will have lowest value. Okay, so if you observe, through closing stock, some portion of cost we are transferring that cost to the next period under absorption costing. Some portion of fixed cost is being transferred to the next period. That means, so in second year, so that particular year cost is getting reduced. So absorption costing profit is 9,000, sir. Current year cost transfer to the next year. So current year we have 9,000 profit here, absorption costing. So in year 3 we are having opening stock. Okay, so previous year cost brought forward to this year through opening stock. Okay, so as we are having opening stock value highest value, okay, when compared to the marginal and throughput costing, absorption costing profit is lower here. Got it, sir? Okay, so under marginal costing only we are valuing at so variable cost only, so we got 0 here, so 30,000 here. Okay, so in throughput costing we are valuing the so closing stock at direct material cost only. That means the total whatever the cost you incur on direct labor, so direct so fixed overheads and selling and distribution, all those costs are treated as period cost and charged in this particular year only. So that's why we are getting losses here and we are getting highest profit here. Got it, sir? Okay, here opening stock value will be lower. That's why, okay, higher profit under throughput and marginal costing, sir. Okay, just that comparison only enough for us. So tell me what you have understand, sir. Under absorption costing, closing stock value will be higher or lesser, sir? Closing stock value will be higher. So higher means present current year cost being transferred to the next year. That's why, so if we have closing stock means under absorption costing you will get higher profit. Okay. So in the next period, if you are having opening stock only, so as so absorption costing will have under absorption costing opening stock value will be higher. That means highest cost of goods sold. So that's why profits will be lesser. Okay. So when compared to so marginal costing and throughput costing. Okay. So in marginal costing we value closing stock at variable cost only, so we got 0 here. Okay. Under throughput costing we value closing stock at direct materials only. That means we value closing stock at very so less value, and all the direct labor, all other cost will be charged to current year itself. That means that's why we are getting so losses here. So here opening stock value will be opening stock value units will be somewhat around 750 units will be there. For that units value will be very less under throughput costing. That's why we are getting profit here, highest profit. That's it, sir. That's the point. Okay. So even if you don't understand these points also fine. Okay. These kind of questions are never asked in previous attempts, any previous attempts, sir. Okay. So in this throughput costing you need to focus on these questions enough. So bottleneck elimination strategies and bottleneck and product mix, this throughput formula questions are enough. So take one question for each model, sir. Under throughput costing you don't need to practice all the problems. Okay. So just take one problem for each model. So bottleneck elimination strategies, take the 17th question, bottleneck product mix. For product mix problem, take June 24 attempt question. Okay. Throughput formula question, just 15th question, enough. If you understand concepts and practice these questions enough, if you have time, then you will go to other problems, sir. Yes, excellent, Sakshi. Nice observation. He has given some comments, sir. That's why I told you. Okay, now we're done with throughput accounting, sir. Okay. Now our next chapter is activity based costing, sir. One minute. See, yeah, yeah. Hi, hello everyone. Welcome back. So I'm Rajesh, your SCM faculty. Okay, so in previous class we have done with the throughput costing. So in this session we start with activity based costing, sir. Okay, ABC, A, B, C means activity based costing. So this is nothing but somewhat advanced technique for overhead absorption, sir. Under traditional costing system, we have overhead absorption system, sir. Some basic method of absorption of overheads. Okay, so this old and traditional technique. So as there are some demerits in SCM strategic cost management. Okay, a new technique came into force, that is activity based costing. Okay, so in place of olden technique, a new technique came into picture means that old technique having some demerits, right? That's why a new technique came into picture. So before going into the discussion, we have to understand some basic terminology, sir. So basic terminology means now first of all, cost object, sir. Cost object. Okay, in every business organization, we calculate cost, sir. We calculate cost of something. That something is called cost object, sir. That's it. Okay. So let's say BCCA. BCCA, so Educational Institute. We can calculate the cost per faculty. Per faculty, we can calculate the cost. Or else in BCCA, we can calculate the cost per student. On student basis, I can calculate cost, right? How much cost we're incurring per student, how much cost we are incurring per batch, we can calculate. So also we can calculate the cost we are incurring per faculty. Okay, so and also we can calculate the cost of somewhat like division, CMA division, CA division, something like that. Or else we can calculate the cost of foundation students, foundation, total overall foundation, overall enter, overall final level. Or else we can calculate the cost of branch, Hyderabad branch, so Nujvid branch, something like that. So we can calculate cost for anything or something. That anything or something is called as cost object, sir. Okay. So here in normal business organizations, normal manufacturing industries also we can calculate the cost per product or unit, uh, per service, or else per customer basis, or else on divisional basis, on branch basis, something like that. We can take any basis and on that basis we can calculate the cost for that particular object, sir. Okay, now our question is, what is ultimate cost object, sir? We can calculate cost based on any objective, but what is our ultimate cost object means the objective which generates the revenue is called ultimate cost object, sir. Okay, in BCCA point of view, okay, so which objective generates the profit here, sir? Which factor? Actually, from students only we will get revenue, right? So that's why student is the ultimate cost object, sir. Here, let's say in this manufacturing industry, only product, from the product only we are generating revenue means product is the ultimate cost object, sir. Okay. So for that cost object, we calculate the total cost, sir. total cost. We have to calculate cost. Okay, now there are two types of cost, sir. There are two types of cost, that is direct cost, indirect cost, sir. Direct cost means the cost which we can trace directly to the product. So that means we can say directly for this particular unit, this is the cost incurred. Okay, so let's say this is the table. For this table, so by seeing this wood and this iron, I can say like this much is the cost. Okay, direct material. This would be around. So this is somewhat like take take. Okay, and this cost will be around 3,000, 4,000, randomly I can say, like if I have some knowledge. Okay, so while making this table, they might have used uh, some some nails, some gum. Okay, I cannot see that nails and that gum, but they have used some small indirect materials. Okay, so by seeing this material, I cannot say how much cost incurred for that small nails or small gum or small tape, sorry, I mean paints, everything. Okay, so that means the cost which directly traceable to the product is called direct cost, which cannot be directly traceable to the product is called indirect cost, sir. Okay, direct cost, what are the direct cost here we have means direct material, direct labor, direct expenditure, nothing but prime cost, sir. So coming to indirect cost, so indirect cost is nothing but we call it as overhead, sir. Here we have three types of overheads. Okay, factory overheads, administration overheads, selling and distribution overheads, sir. Okay, these all are the indirect cost. Okay, so to calculate the cost of the product, to calculate cost of product or to fix the selling price of a product, okay, so I have to calculate cost per each unit. Okay, I know as I can directly trace the cost of a product, direct cost. Okay, so I can say per this unit this much direct cost, but I have to add indirect cost also to the product, right? Okay, I have to add some indirect cost also to the product. Okay, so now I cannot say so how much cost we incur per unit. Okay, this indirect cost I cannot say how much cost we are incurring per unit. In total we can say, but per unit we cannot say, sir. That's why we have to use some absorption methods. We have to use some methods methods to absorb this overhead, sir. To absorb overheads. Okay, here we have two types of methods. Okay, generally under traditional costing system we have overhead absorption that you might have learnt in CMA inter level. Okay, so in SCM, okay, some advanced technique came into picture, that is activity based costing. Activity based costing, traditional costing system, we have overhead absorption, sir. Let us see. So what we have done in traditional costing system, that is overhead absorption. Okay, see, in overhead absorption under traditional costing system, okay, so you have some overheads, sir. Overheads, let's say for example rent, electricity, supervisor, salaries, depreciation of right, insurance, administration overhead, selling, distribution, all these overheads are overheads. Okay, first of all we have calculated overheads for each element. Okay, now we'll be having different departments, production department 1 2 3 and service departments. Okay, so first of all we allocate this overhead, sir. Allocate allocate so allocation means okay, directly we can say these overheads are incurred particularly for this department only. Okay, if you can say directly, that means you can allocate. Let's say salary we are paying, let's say 1 lakh rupees, sir. Okay, that employee is only working in production department 1 only. That means as that employee working in production department 1, okay, I'm paying 1 lakh rupees salary, I can directly allocate that salary to the production department 1. Okay, so if I cannot directly allocate means I will do some primary distribution, sir. Primary distribution means let's say I'm paying some 1 lakh rupees of rent. Okay, so in that building, so we have placed some production department 1, production department 2, production department 3, service department. 4 departments are so placed in that building itself. Okay, so the space occupied by 4 departments are equal. Let's say 1 is to 1 is to 1 is to 1. That means what I can do, sir, so this 1 lakh rupees overhead will be distributed between the departments based on the space occupied by those departments. That is called primary distribution. Okay, so first you will do allocation, then you go for primary distribution. Okay, so after doing primary distribution you go for secondary distribution, sir. Secondary distribution means okay, so we have allocated some overhead to the service departments. Okay, as we are generating, so as products are being produced from production departments only. Okay, so from production departments only we are getting so revenue, right? That's why you need to reallocate these service department overheads to the production departments, sir. That is called secondary distribution. For this secondary distribution we will be having different methods: direct redistribution method, simultaneous equations method, repeated redistribution method, something like that. 4 or 5 methods was there. Okay, all those methods not needed here. Okay, so just methods are there, like that only I'm telling. Now what is our target is like this this production department overheads, this production department's overheads, we have to absorb those overheads to the products, sir. Okay, so this products is our cost objects here, cost objects. Okay, so production, so all the overheads are now, all the overheads are at production departments. Now each production department's overheads should be allocated to the products. Okay, A, B, C. Let us say we are producing 3 products A, B, C. Okay, so for this we are having overhead recovery method, sir. Overhead recovery rates we calculate. So we can calculate overhead recovery rates based on percentage of direct materials, percentage of direct labor, percentage of prime cost, mission hour rate, labor hour rate. Like that we had 5 methods. Okay, so if this, let's say if production department, if production department 1 is completely mission oriented, mission intense department, that means only with missions we do production in that particular department. In that particular situation we can use mission hour rate method. Based on the mission hours we absorb the overhead, sir. Or else if, let's say for example, production department 2 is labor intense department. Labor intense means labor directly work on that production, so missions doesn't involve in the production of so products in department 2, sir. Okay, that's why those departments can be called as labor intense departments. In case of labor intense departments we can use labor hour rate. So like that we have 5 methods. Based on these 5 methods production departments overheads can be allocated to the products, sir. This is the basic okay, so methods we have done in traditional costing system, sir. Okay, now so this traditional costing system we have some demerits, sir. Okay, let us try to understand what is that demerit with an example, sir. With an example, let's say for example, okay, just try to understand this one example only, sir. If you understand this example means activity based costing is over, that's it. Okay, so let's say a department is there, sir. Production department A, the department name is A, that's it. Okay, so this is a mission intense department. Mission intense department. Mission intense department means on that in the department we work with missions only. Majority of the processing will be done by machines only. Okay. So now overhead cost data is like this, sir. Overhead cost data in the department, total overheads incurred is 1 lakh rupees. 1 lakh rupees is total overhead, sir. Let's say, so we are producing two products, product A, product B, sir. Okay, so to produce a product A, okay, we have produced, let's say, for example, number of units. Okay, for an example only, I'm taking units of production. I have produced 500 units of A, 500 units of B, sir. Simple. Okay, to produce this 500 units of product A, I have used machine hours. Okay, so this is machine intense department, right? Okay, for to produce this 500 units, I have used 5000 machine hours. Okay, for B also we have used 5000 machine hours. Simple. As our department is mission intense department, okay, so we have incurred 1 lakh rupees of overhead. Okay, apart from the direct cost, this indirect cost is also to be added to the products. We have two products only. Okay, so as this is in mission intense department, we recover or absorb this 1 lakh rupee overhead based on the mission overhead rate. Okay, so now we have to calculate mission hour rate, sir. Mission hour rate. So what is mission hour here? Mission hour rate means the total overheads. Mission hour rate. Total overheads is 1 lakh rupees divided by total mission hours. So what is total mission hours, sir? 5000, 5000, 10,000. 10,000. That means 10 rupees per hour. 10 rupees per hour. Okay, so based on this mission hour rate, we can absorb the overheads. Okay, 1 lakh rupee overheads will be distributed between product A and product B. Okay, so for product A, how many hours mission hours used, sir? 5000 hours. For each mission hour, 10 rupees. That means 50,000 overheads will be allocated to product A. So again, 5000 into 10, again 50,000 overheads allocated to product B. How many units we have produced, sir? Units of production 500. Again here also 500. That means 100, right? 100 rupees, 100 rupees per unit. Overhead cost per unit. 100 rupees per unit, 100 rupees per unit. Now see, okay, see, as I have used mission hour rate here means I have used mission hour rate. That means based on the mission hours only, this 1 lakh rupees of cost I have incurred. Okay, I have incurred 1 lakh rupees of cost for just for using that mission. Okay, so as I have consumed mission hours, that's why only I have incurred that 1 lakh rupees of cost. That is only the assumption we are taking here. So that's why only I have used mission hour rate here. Okay, so let's say, for example, if we have the in detail data means okay, so 1 lakh rupees overhead is 1 lakh rupees, but this 1 lakh rupees why you have incurred means if we have detailed data means let's say mission operating overheads. For machine operating, I have incurred 60,000 rupees, sir. Okay. Just for machine operations, I have incurred 60,000 rupees of cost out of 1 lakh. Okay. So next one, for materials ordering. For materials ordering. For materials ordering, I have incurred 30,000 rupees. Next one, for machine setup. I have incurred 10,000 rupees. Okay, this is the detailed data, sir. So detailed data, and also let's say for example, I have the data relating to product A and product B. A, B, mission hours. Mission hours. So 5,000, 5,000. Let's say number of orders. 700, 300. Okay, so machine setup. Setups. Machine setups, let's say 90, 10, sir. Okay, so see. Okay, now this is the detailed data, sir. In previous, we have the data like we incurred 1 lakh rupees of cost in that particular department only. Okay, in mission hours are 5,000, 5,000 only. That is the only data we are having. Based on that data only, we have calculated mission hour rate and I have observed the overheads. But so if you go into the details, why that 1 lakh rupees of cost I incurred means for mission operations I have incurred 60,000. Okay, so for material ordering 30,000. Okay, for machine setup 10,000 rupees. Okay, so what we have done in traditional costing system means so whatever the cost incurred on operating, machine operating, material ordering cost and machine setup cost, all these costs are recovered based on the machine hours. Okay, so actually all these costs are not directly linked to the machine hours. Okay, so this machine operating expenditure only linked to the machine hours. This materials ordering cost will be linked to the number of orders. This machine setup linked to the number of machine setups. Okay, but we are absorbing all these costs on based on the machine hour rate, sir. So based on the machine hour rate, splitting this overhead of 1 lakh rupees to product A and product B is not correct, not accurate, sir. Why means, let's say in simple, for example, three persons X, Y, Z are there, sir. Okay, they went to the movie. Let's say they went to the movie. Say in total they have incurred 3,000 rupees cost, sir. They went to the movie, 3,000 rupees cost incurred. So after coming from the movie, so they have distributed, so let's say in bachelor rooms also, some so friends went to the movie means they will, after coming back to the room, they will share those expenditure, right? Okay, so X, Y, Z, the three persons went to the movie. Okay, total cost 3,000 they have incurred. So after coming to the room, they have shared those expenditure equally. 1,000, 1,000, 1,000 they have shared, sir. Now Z is raising a question. So why 1,000 for a movie? Okay, so 500 rupees only the ticket rates, right? So now why I have to pay this 1,000 rupees? Okay, so they have detailed data. So for movie tickets, each one, each ticket 500 rupees, 500 rupees, 500 rupees, sir. Okay, so now let's say 1,500. After coming back from the movie, they have taken some biryani. Okay, so biryani is 500 rupees. Only two of them, X and Y only. So 8 biryani, 500 rupees and 500 rupees only. Okay, so after eating biryani, they drank some cool drinks, sir. Yeah, so rich cool drinks. That is also only X only uh, drank some cool drinks, 500 rupees only. Yeah, uh, somewhat like a luxury flavored cool drinks. Okay, sir. Okay, so based on this data, if you have detailed information, movie ticket, all of three have went to the movie 500, 500, 500, 1500 only. Okay, biryani, only X and Y only taken that biryani. That means 500, 500 only. Okay, Jed no need to bear that biryani cost, right? And also cool drink, only X only drank that drink. Okay, 500. Only X has to bear. Y and Jed no need to bear, right? So that's why here cost will be for X 500, 500, 500. 1500, 1000, okay, 500. Okay, this is how they have to bear that expenditure of 3000 rupees, not like this equally based on the ticket number of tickets. Okay, so this is actually we have to share the expenditure, right? This is wrong, right? That is only I am telling here. Okay, so this total overheads of 1 lakh rupees should not be distributed based on the mission hours only. So we have to distribute them based on the how these overheads are consumed. Okay, that is only the basic difference, why that activity based cost came into the picture, sir. So that means if you are taking this mission hours as a base for distribution of overheads, okay, your assumption is like total overheads are linked to mission hours, but not actually the case. Okay, so that means there is some demerit in traditional costing system, sir. Even though the overheads like material ordering, machine setup, all these overheads are not directly linked to the mission hours, but we are absorbing those overheads based on the mission hours only. Okay, in that situation it doesn't give the accurate calculation of cost. Okay, like here, like this. Okay, so they have shared 1000, 1000, 1000. That is not accurate, right? Okay, we have to share it, we have to share those based on the how they have consumed the overheads, in which ratio, in which so consumption basis. Okay, we have to calculate. So that is only activity based costing saying, sir. Okay, that's why they have given a new procedure. Okay, what we will do in activity based costing means, under activity based costing, activity based costing, okay, we will identify the activities, sir. Activities. So what all the activities are being performed in an organization? Total activities. Okay, so sir, what is activity, sir? Activity means, I have told you activity definition in network analysis, sir. What is activity in network analysis? Activity definition, activity, activity is represented with straight line named as A, B, C, D. Okay, activity is something that consumes time and resource, that we have learnt in network analysis. Here also similarly like that only definition. Activity means set of tasks, set of tasks you need to perform. Set of tasks need to be performed, need to be performed to produce a product. To produce a product or service, sir. To produce a product or to render a service. Okay, whatever the tasks, okay, so set of tasks you perform to produce a product or to render a service, the task here we are calling as activities. Okay, so first of all we will identify the activities, what all the activities are being performed in every organization, different activities we will identify, sir. Okay, for each activity we calculate the cost of that activity, total cost of that activity. We calculate total cost of that activity, total cost. So let's say in BCCA, teaching is an activity. Let's say how much cost we are incurring just for teaching activity. Okay, another activity, online operations. So okay, so online operation, for that online operations, how much cost we are incurring, like that we can identify different activities, we can calculate total cost of that activity. Now this total cost of activity is called as cost pool, sir. Cost pool pooling means totaling, cumulative. Okay, so totaling means total cost of particular activity is called cost pool, sir. Now now so total cost, now we have to identify on what basis this cost pool is linked to. That means we have to identify cost driver, sir. Cost driver, sir. What is this cost driver, sir? Okay, so we all know that who is a lorry driver, sir. Lorry driver is the person who moves the lorry forward, backward. That's it, right? Okay, so now cost driver is the factor which increases the cost or else decreases the cost. Okay, so cost driver means the factor which increases or decreases cost of an activity. So cost of activity means cost pool only, right? So I can write cost pool. Okay, so here I have written some activities, sir. Machine operating is an activity. Machine material ordering is an activity. Machine setup is an activity. Okay, now this machine operating activity cost will be increased or decreased based on the machine hours. Okay, material ordering cost 30,000 will be linked to the number of orders. If number of orders are increasing, material ordering cost will be increasing. Number of orders are less, decreasing, material ordering cost will be less, right? Okay, like that machine setup. If number of setups are more, cost will be more. Number of setups is less, machine setup cost will be less. That means these are the activities. Okay, for this activity total cost is 60,000. This is cost pool, right? Okay, now so this mission hours is cost driver. Mission hours is cost driver for mission operating activity. Number of orders is cost driver for material ordering. Okay, number of machine setups is cost driver for machine setup activity. Okay, now so for this each cost driver we have some quantity, right? Okay, this is called as cost driver quantity, sir. Cost driver quantity consumption. Okay, so after identifying cost driver, we have to identify the cost driver quantity. Cost driver quantity. So cost driver means how much resources of cost driver being used or consumed. How many are being consumed? That's it. Okay, so after identifying cost driver quantity, like overhead absorption rate, we have to calculate cost driver rate, sir. Here cost driver rate, cost driver rate. So this is something like overhead absorption rate. Okay, so how we can calculate this cost driver rate means that is equal to pool cost pool divided by cost driver quantity, sir. Cost pool divided by cost driver quantity. Okay, based on this cost driver rate, those cost pool of activities will be linked to the cost objectives. Cost objects. Cost object, maybe let's say products A, B, C, three products. Okay, this is the sequence of activity based costing system, sir. Okay, so what we have to do, first of all we have to identify activities. Activities means set of tasks that you need to perform. Okay, to produce a product, to render a service. Okay, we calculate total cost of that activity, that is called cost pool. Okay, so that cost pool will be increased or decreased based on some factor. That factor is called cost driver, sir. Okay, so now, so we have to identify quantity of cost driver, that is cost driver quantity. How many resources of cost driver are being consumed. Okay, mission hours is cost driver. How many mission hours? Number of orders is cost driver. How many orders? Okay, that is cost driver quantity. Okay, now we have to calculate some overhead recovery rate. Nothing but cost driver rate is overhead recovery rate only. Okay, so this only the rate we use in absorption, so activity based costing system. Under absorption costing system, we have 5 methods. But here we have cost driver rate. For each cost driver, we have to calculate cost driver rate. Okay, cost pool divided by cost driver rate, cost objects. Sir. See, okay, so same like uh, same like traditional costing system, will be having some overheads. Under ABC also, we will be having some overheads. Okay, now these overheads will be linked to the activities. Activity cost pool. For you will identify the activity. For each activity, you will you calculate the total cost of that activity. That is called cost pool. Okay, so we are linking this overhead cost to the activities. Okay, setup activity, how much cost you are incurring. Okay, for orders, material handling. Okay, like that you will identify the activity. For each activity, you calculate the cost. Now, so as we are linking these overheads to the departments here, but in activity based costing, these overheads are being linked to the activities. Okay, activities. So after linking these activities, the overheads linked to the activities, then this activity cost will be absorbed or linked to the cost object, sir. Okay, so how we link this activity cost to this cost object means, here we have, so nothing but this is cost pool, sir. For each activity, we will be having cost driver. So cost driver quantity. Based on that cost pool and cost driver quantity, you calculate cost driver rate. Okay. Now this activity cost will be linked to the object based on what, sir? Cost driver rate. Okay. Got it? Now we have to calculate cost driver rate under, so activity based costing system, sir. Now for this example only, I will calculate cost driver rates and everything. Okay, so in activity based costing system, to solve the problem, 2 steps only will be there, sir. So 2 steps. So step one. Okay, so just understand these 2 steps enough. Okay, what is our step one? Step one, you have to take, so first of all, you have to write activities. So what are the activities we have here, sir? So machine operating activity, materials ordering activity, and machine setup. Machine setup, sir. 3 activities. Now after activities, what we have to take, sir? I have to take cost pool. Cost pool means nothing but total cost of that particular activity. This cost pool will also be given in the question itself. Okay, what are the cost pools, sir? 60,000, 30,000, 10,000. 60,000, 30,000, 10,000. Okay, now what is cost driver? Cost driver. So cost driver, machine hours, number of orders, okay, number of setups. Okay, these are the cost drivers, sir. Next one, what is cost driver quantity? Cost driver quantity in total. In total cost driver quantity 5,000 means how much, sir? 10,000. Total mission hours are 10,000. Okay, what is total number of orders? 7,000 plus 700 plus 300. 1,000, right? Okay, 90 plus 10, 100. Okay, this is cost driver quantity, sir. Now we have to calculate cost driver rate. cost driver rate. So this cost driver rate is nothing but cost pool divided by cost driver quantity. So what is that cost pool, sir? 60,000 divided by cost driver quantity 10,000. That means how much, sir? Okay, 6 rupees. That means we are incurring 6 rupees cost per machine hour. Okay, next one. So material ordering 30,000 rupees cost for how many orders, sir? 1,000 orders. That means how much? 30 rupees per order. Okay, now number of setups 100 setups 10,000. How much, sir? For setup 100 rupees is the cost, sir. Okay, so in step 1 I have to calculate what, sir? Calculation of cost driver rate, sir. For all the questions this step only we have to do. Okay, so this is standard, sir. For any question you have to do, you have to calculate cost driver rate. Step 1. Step 2, next we have calculated cost driver rate, right? What is our next target? Our next target is to cost driver rate calculation done. Now we have to link this overheads to the this cost object based on the cost driver rate. Okay, so next one, step 2, keep heading step 2 absorption of overheads based on or else under activity based costing. Under activity based costing, sir. Under activity based costing we are absorbing overheads. Okay, see again. So in first column we have to write activities, again activities and cost driver rate, sir. Cost driver rate. Okay, so what are the our activities, sir? First one is machine operating. For that machine operating, what is our cost driver rate? 6 rupees per hour, right? Okay, so what is our second activity? Materials ordering. Okay, for each order what is the cost driver rate, sir? 30 rupees. Okay, what is our third activity? Machine setup. For each machine setup what is our cost, sir? 100 rupees per setup. Okay, now so cost driver, so activities and cost driver rates, sir. First column I have taken first column. Now so how many products we have, sir? This activity cost to be absorbed to the product A and product B, sir. Product A, product B. Okay, so for each product take two columns. Sir. So activity A, cost driver quantity rupees. Activity B, cost driver quantity rupees. Okay, now machine operations. For machine operations, the cost driver quantity for product A machine hours. How many machine hours, sir? 5,000. For B 5,000. Okay, so materials ordering, number of orders 700, 300. Now number of setups 90, 10. Okay, so now 6 rupees into 5,000, 30,000. Okay, equal. Okay, 30 into 700, 21,000, 9,000. Okay, 9,000, 1,000. Okay, so now what is total cost of product A? X is 60,000. If this is 60 means this is 40,000, sir. Okay, how many units I have produced, sir? Units of production I have given in the example in the beginning itself. Okay, 500 units, 500 units. Okay, hello all, welcome back. So in previous session we have started with the activity based costing, and we have discussed one example, sir. Okay, so basically what is the difference between traditional costing system and activity based costing system? So for absorption of indirect costs, sir. Okay, so under traditional costing system we take only one absorption method, either mission hours or labor hours or direct materials or percentage of direct labor, whatever it is. Okay, that means our assumption is like total overheads, a particular department total overheads will be linked to that particular. So mission if the department is mission intense, mission hours or labor hours directly linked to that factor only. So that is our assumption, but in reality, so there may be different types of overheads that are not directly related to either mission hours or labor hours. Okay, so that's why we have to take a detailed analysis of overhead absorption, sir. So that's why we have taken so cost driver analysis here. Okay, we have to calculate cost drivers rates, sir. For that, under activity based costing system, we first of all identify activities. So activities means a set of tasks which you need to complete the product or to produce product or to render service. Okay, so the total cost of that particular activity is called cost pool. Okay, so next, cost driver. Cost driver means the factor. So due to which cost pool increases or decreases. Okay, the factor which increases or decreases the cost pool is called cost driver, sir. Okay, so next one, cost driver quantity. How many units or else how much quantity we are consuming. So that is called cost driver, sir. Cost driver rate, cost pool divided by cost driver quantity, cost object. Okay, so in traditional costing system, departmental overheads will be linked to the products. So products here means cost objects. Okay, so departmental overheads linked to the products based on the overhead recovery rates. Five methods are there. But in case of activity-based costing system, activities cost, that means cost pool. Activities total cost pool will be linked to the cost object based on the cost driver rate, sir. Okay, so in this particular example, okay, so for a total production of A, our overhead is 60,000. For B, it is 40,000. So we have produced how many units, sir? 500 units of product A, 500 units of product B. That means the cost per unit, overhead cost per unit, that is equal 60,000 divided by 500. See 120 here, 80 here. Okay, so if you analyze the traditional costing system and activity based costing system, so under traditional costing system for product A, for product B, so cost is per unit cost is 100 rupees, 100 rupees. Under absorption costing system it is 120 and 80 rupees, right? Let's say for example, so as well we know that activity based costing system gives more accurate absorption of overheads, as we are taking detailed analysis. Okay, different multiple cost driver factors we are taking. So that's why this is somewhat accurate overhead absorption, sir. See, let's say for example, two companies are there, sir. Okay, so our own company and competitor. Okay, so let's say for example we are following traditional costing system and the competitor is following activity based costing system, sir. Okay, as we are following, so same products we are producing, product A and product B, same products are being produced by the competitor also. Okay, so as we are following activity based, so traditional costing system, our cost of product, let's say overhead absorption will be 100 here 120, so 80, sir. Let's say, so comparing the product A, so we are following traditional costing system and I have calculated the cost of a product 100 only. Okay, so apart from the direct cost, so indirect cost is 100. That means let's say no direct cost, only indirect cost is only there. Okay, 100 rupees is the cost of product A, sir. For competitor 120 rupees is the cost, sir. As we have calculated cost of product as 100, we add certain profit to that cost. That means our selling price. Okay, so when compared to the competitor, our selling price will be lesser. Okay, let's say some 10 rupees profit only I'm adding, sir. 10 10, our selling price will be 110, competitor selling price is 130. Okay, so in this particular situation, okay, we are selling this particular product A at a lesser price than compared to the competitor. That means we are selling 110 rupees only, competitor selling 130. So that's why customers will come and purchase our product only, or for our product demand will be increases, competitor product demand decreases, sir. Okay, so this product demand is increases, but in reality, so we may feel like so our demand is increasing, more sales we are making. 1 minute, sir. Sorry, sir. 1 minute. See, so under activity based costing system, okay, we got 120 here, 80 here. On traditional costing system, 100, 100. If two so companies are there, okay, selling same products A and B, in that situation, cost of A is 100, cost of A here 120. Okay, so our selling price will be compared to so competitor selling price is low. So we will fix the selling price, lowest selling price. Our demand will be higher. Okay, so when our demand is higher and we are selling the number of more sales, making more sales means we may feel like we are getting more profits and profits, but in reality, so our cost should be 120, but instead of taking 120, 100 only, I'm charging the cost as 100. Okay, so I'm fixing my selling price 110, but in reality, what is the cost to produce product A means 120, but I am selling the product at 110. That means maybe, so even though I'm making more sales, okay, I'm selling that particular product at loss. Okay, that I won't recognize till, so see, coming to the product B, sir. So this product B is having 100 rupees of cost. Here it is 80 rupees only. Okay, so let's say for example, I'm adding the profit of 10 rupees. Here also, they're also adding 10 rupees. So then selling price will be 110 here. Here 90 rupees only. Okay, when compared to the competitor selling price, our selling price is higher. Okay, so our selling price is higher means we will make less demand or less sales only will be there, sir. Okay, so for demand for our product will be lesser when compared to the competitor product demand, sir. We feel what we feel like, so we are making, so our demand is lower and lower. Okay, so we feel like this product is getting losses and this product only giving profits. We may feel like that. So in that situation, what we do is like, we discontinue the production of this product B, we continue the product A. So what will happen, sir? Okay, so after discontinuing product B, we will recognize that this product A cost is not 100, it is 120. Till now we are making losses on this product, that we will recognize when, sir, after discontinuing B only. So that means, so with this unaccurate information, our company may goes into the losses. Okay, so that's why, so to get the accurate information, we have to follow activity based costing system, sir. Got it? Okay, so next point, when a company when a company's organization is producing only single product, okay, so then if you follow traditional costing system or activity based costing system, so both gives the same result, sir. That means, okay, it doesn't matter whether you follow traditional costing system or else activity based costing system, but when compared to traditional costing system, activity based costing system is somewhat expensive, sir. expensive. So sir, why expensive, sir? Traditional costing system, okay, so even degree qualified person also can do the traditional costing system overhead absorption, sir. But so to do the costing under activity based costing system, you need to have some expertise knowledge. So why means we have to so divide the activities, we have to identify the activities, we have to calculate the activities total cost, then we have to identify cost drivers, cost driver quantity. Based on that, so we have to do some detailed analysis. Then you calculate cost driver rates. Based on that only you will recognize the so absorb the overheads, sir. Okay, so that's why this is somewhat expensive so method, sir. So expensive system is activity based costing system. That's why under, so if you are producing only single product means traditional costing system you have to follow, sir. Okay, so if you are producing multiple products multiple products means, let's say greater than one product you are producing, sir. Okay, so let's say for example you are producing product A and product B, two products. Okay, see, if you are producing two products, so here, so directly you have to follow the activity based costing system. No, you don't need to follow activity based costing system, sir. So when resource consumption is similar or equal, when resource consumption is equal or similar, okay, so traditional costing system or activity based costing system gives same results. Again, in that situation which system you will follow, sir? Definitely traditional costing system only, somewhat less expensive method or system. Okay, so see here in this particular example, let's say what is the resource consumption, sir? Okay, so here in this particular example, let's say, so 5000 mission hours consumption is 5000. Let's say for example orders, material orders also somewhat 500. Okay, number of machine setups 50. So if this consumption is like this, similar or somewhat equal, okay, in that particular situation what you will get, sir? Same results like traditional costing system, 100 and 100 only you will get, sir. Okay, so in that particular situation you don't need to follow activity based costing system, that is somewhat expensive procedure. Traditional costing system is enough for us. Okay, so when resource consumption is not equal or not similar, sir? Resource consumption is not similar. Okay, then only you have to follow activity based costing system, sir. In this particular situation only you have to follow ABC, otherwise traditional costing system is enough for us. Okay, so why means the traditional costing system is also gives the same results and it is somewhat less expensive system. So that's why traditional costing system is fine enough. Okay, that's it, sir. On this particular point we will be having some MCQs and one theoretical question also there, sir. Okay, see, once again, to absorb the overheads under activity based costing system, two steps will be there, sir. Step 1, calculation of cost driver rate. Step 1, same columns, activities, cost pool, cost driver rate, sorry, cost driver quantity, cost driver rate, sir. Okay, so next step 2, absorption of overheads under activity based costing system. Okay, activities and cost driver, first column. Okay, so two products, so if three products means you will take three products, how many, so number of products for each product, cost driver quantity, This cost driver quantity will be multiplied with cost driver rate. You will get the overhead absorbed or recovered. Okay, this is amount. So again, cost driver quantity results. Okay, that's it, sir. Okay, so come to the workbook. Okay, so come to the page number 4.1.9, sir, in workbook. One theoretical question is there. So after seeing this question, we go to the problematic question, sir. What, sir? Any doubts? Yeah. Okay, read this question. Okay, state with a brief reason whether you would recommend ABC system in each of the following independent situation. Independent means separate, separate, separate. Each situation is separate from others, sir. So read that point one. A consultancy firm is consisting of lawyers, accountants, computer engineers who provides management consultancy services to the client, sir. Okay, so in that particular situation, whether you would recommend activity based costing system or not. Read that question, sir. Tell me. Okay, tell me, sir. If you are providing only one service or one product, then traditional costing system. More than one products, if resource consumption is similar means traditional costing system, not similar means activity based costing system. Okay, here they are for, so here they are providing how many services? Lawyers, accountants and computer engineer, different services they are providing, sir. And they are not specifying any resource consumption kind of data. That's why, okay, here we can take an assumption like resource consumption is different from lawyers, accountants, computer engineers. Their resource consumption is different only. Okay, that's why we can recommend activity based costing system, right? Okay, so read that second point, sir. So company X produces how many products, sir? Okay, so what we can recommend blindly traditional costing system. Okay, so third point, read the third point and tell me. So okay, company Z produces two different labor intense products, sir. Labor intense products. Okay, the contribution per unit in both the products is very high. Okay, contribution is very high. Contribution high means variable cost is low. Okay, the break even point is also very low. Okay, all the work carried on efficiently. Okay, so highlight the word efficiently to meet the target cost, sir. See, their contribution is very high means variable cost will be low, break even point is also low. So the point here to identify is efficiently all the work is being carried out. That means we can take an assumption like resource consumption is somewhat similar or equal. The two labor intense products only. So in that situation, so they are having two products, right? So greater than one product and resource consumption is somewhat similar. We can recommend similar. traditional costing system. Okay, so company Y produces 4 different products using different production facilities. Different facilities, 4 products, more than one product, and different facilities means different consumption of resources. Activity based costing system. Okay. Then okay, page number 4.1.11, sir, illustration 3. In additional questions, some basic question is there, sir. Okay, illustration 3. After doing this question, we go to the main question, sir. 4.1.11. 4.1 activity based costing system, page number 11. Okay, read that question once. Okay, so read that question. So on that question, you have to identify activities, and for each activity, you have to link the cost driver, sir. Identify the cost driver for each activity. Just link that activities and cost drivers. So hello Sakshi, hello Haripriya. Okay, so please try to attend the classes regularly. Then only you can understand concepts and everything. So Haripriya, where are you from? Read that question, sir. Hyderabad only. Okay, nice. Yeah. Okay, done. Done reading the question. Yeah, see, a company produces 4 products, sir, PQRS. The data related to the production activities are as under. Products PQRS, quantity of production 4500, so 13640, 2340, 18350. Quantity of production means we can assume it as units. Okay, material cost per unit 12, 15, 25, 21. Direct labor cost, direct material, direct labor cost. Machine hours per unit given in the question, sir. Okay, total, so sorry, direct labor cost per unit. Okay, they have given labor hours per unit, labor cost per unit, direct labor. Okay, so production overheads are as under, sir. Production overheads, so first one, overheads applicable to mission oriented activity. Second one, overheads relating to ordering materials. Third one, setup. Now fourth one, administration of spare parts. Fourth one, fifth one, material handling, sir. So these all are the activities. We can take those points as activities, sir. Now we have to identify what is cost driver. The following further information have been compiled. Number of setups, this can be taken as cost driver for setup activity. Second one, number of material orders, ordering materials. See, we have to link those. cost drivers to the activities. Number of setups, setup cost. Number of material orders to number of materials handled. Okay, material handling cost. Number of spare parts. Okay, so second one, third one, fourth one, fifth one. For all these four activities, we got a cost driver, sir. Now tell me what is the cost driver for mission oriented activity, sir? Mission hours. Okay. See, setup. Coming to the setup, number of setups PQRS 3, 18, 5, 24. Total setups 50. Total material orders 30. Number of material handlings. Number of material handlings 81. Number of spare parts 36, sir. Now my question is, what is the total number of machine hours, sir? Wow, excellent, sir. Okay, so here we have machine hours per unit. Okay, quantity of production, sir. Okay, so this quantity of production into machine hours per unit, you will get machine hours. Okay, 4,500 into 1.5. How much, sir? 6,000, 60, 50. Okay, so next one, 13640 into 0.75. How much, sir? 10230. Next one, 2340 into 2.50. 5850. So 18350 multiplied with 4. 73400, sir. So total mission hours, we can calculate total also. 230. Okay, nice. Okay. So this is the first point you have to identify, sir. Okay, so next one, what are they asking in the question, sir? Select suitable cost driver for each item, overhead expenditure, and calculate the cost per unit of cost driver. Okay, now they're asking us to link the cost drivers to the activities. Okay, here we have 5 activities and we know the cost drivers for each activity. Okay, so then they're asking us to calculate cost driver rate, sir. Okay, so in step 1, calculation of cost driver rate, first column activities cost pool, cost driver name, cost driver quantity, total you have to take, and then cost driver rate, cost pool divided by cost driver quantity. We can get cost driver rate, sir. Second one, using the concept of ABC, compute the factory cost per unit of each product. Okay, so that means nothing but overhead absorption based on ABC. Step 2. In step 2, we take activities and their respective cost driver rates of one column. And we have here, we have four products and cost driver quantity rupees column, cost driver quantity rupees column. Like that, we have to take two statements. In these statements itself, you will get the answer, sir. Okay, so here you need to show somewhat separately this total mission hours calculation, sir. Total mission hours calculation. So with a working note. Okay, in the beginning itself, we can write the working note, sir. Okay, and let us practice this problem. Okay, so along with me, try to practice the problem. It's not a class I am telling and you are listening, not like that. It is like a preparation. So cumulative preparation, that is only how you have to so feel. Okay, in this class itself, you should try to understand this question itself. Okay, after the class means you should be confident like yeah, I know this question. When you are leaving the class, you feel like yeah, today I learned something. Okay, when you are sleeping, going to the sleep means yeah, today SCM ABC, I know all those concepts, I have understood. Okay, so like that only you have to feel, sir. Then only you will get confidence. Okay, solution, sir. For illustration 3, solution. Okay, so in the working note, first working note itself, try to calculate the total mission hours, sir. So working note 1, calculation of total mission hours. Total mission hours. For that, take how many products are P, Q, R, S, 4 products. Their quantity of production. Next one, machine hours per unit. Okay, totals. So quantity of production for product P, how much, sir? 4,500. 4,500 for Q, 13,640, R 2340, S 183,450. Next, mission hours per unit. So mission hours per unit 1.50, 0.75, okay, 2.50, 4.00. This information given in the question itself. Okay. Okay, to calculate total mission hours, so multiply this quantity produced into mission hours. So first one is 66750. Second one 10230. We have already calculated this one. So 5850. Okay, last one is 73400. In total 9230 only. Okay, 230, sir. Okay. Next, so point number one or step 1. Okay, so calculation of what, sir? Calculation of cost driver rate. Okay, what is cost driver, sir? Wow, excellent. What is cost driver rate? To calculate cost driver rate, that is equal to cost pool divided by cost driver quantity. Okay, so this cost pool means what, sir? Total cost of a particular activity. Okay, cost driver quantity. Here we have to take for that cost driver total, so quantity, total quantity, not individual products. So cumulatively for all the products, cost driver quantity we have to take, sir. Okay, here column. So first column activity, sir. Activity. So what is our first activity? Mission oriented activity. So activity, next cost pool, cost driver, cost driver quantity, cost driver rate. So that means you need to take how many columns? 5 columns. Okay, so activity, mission oriented activity, first one, mission oriented activity. So next one, what is that second activity, sir? Ordering material orders, ordering materials, ordering activity. Third one, setup activity, administration of spare parts, administration. Last one, Material handling. Material handling. Now, so cost pool means so total cost of that particular activity, that is directly given in the question itself. Okay, so how much, sir? 1,65,900, 8760, 21,400, 44,690, 25,000. Wow, nice. Okay, next. What is cost driver? So for mission oriented activity, mission hours. Machine hours. So second one, number of orders. Okay. Third one, number of setups. Okay. Fourth one. Okay, this is administration of spare parts. That's why number of spares. Number of spare parts. Okay, material handling. Number of handlings. Okay. Coming to cost driver quantity, sir. Now, so what is the cost driver quantity? In total, mission hours. Okay, 96,230. Okay, this 96,230 we have calculated in working note 1. Okay, so second one, total number of orders, 30 orders. Okay, number of setups, 15. Okay, number of spares, 36 spare parts. Number of handlings, 81 handlings. Okay, 81. Okay, now you can calculate cost driver rate, sir. Cost driver rate, that means column number 2 divided by column number 4. Okay, 165,900 divided by 1.724. Next one, 292. Okay, 8760 divided by 30, 292. Okay, so third one, 428. Next one, 1241.4. Last, 315.4, 315.4 rupees. Okay, per handling. This is step number 1, sir. Next one, step number 2, point 2 or step 2. In step 2, what is that, sir? Absorption of overheads. Absorption of overheads under activity based costing system. Now here, so you have to take activities and their cost driver rates, first column. And we have how many products are P, Q, R, S. For each product, take 2 columns, cost driver quantity, amount rupees. So cost driver quantity rupees. So cost driver quantity rupees. Cost driver quantity rupees, like that. Take 2 columns. Okay, now what is our first activity? Mission oriented activity. For this, cost driver rate is at the rate 1.7. 7 to 4. Okay, so our next activity is number of setups, ordering activity. For this ordering activity, so for each order cost is 292 cost driver rate. We have calculated in step 1, sir. Okay, so third activity setup, for this activity 4 to 8 is the cost setup. 4 to 8. Next one, administration. Admin, for each spare part cost would be 1241.4. 1241.4. Yes. Next, material handling. For each material handling cost is 315.4, sir. Okay, so these are the activities and their cost driver rates which we have calculated. Cost driver rates calculated in step 1, sir. Now, so for each product PQRS, you need to take what, sir? Cost driver quantity. Okay, so write the cost driver quantity for each product, sir. Okay, let's say coming to mission hours. First one, mission oriented activity cost driver is mission hours. So mission hours individual calculation was done in working note 1, sir, 6750. So first one, 6750 for P. So next one, 10230 for Q, and for product R 5850, for product S 73,400, sir. Okay, these all are the amounts, right? Okay, we have calculated that in working note 1. Okay, now so write the ordering, for ordering cost, number of orders. Okay, number of orders for each product. 312. Okay, so number of setups 3, 18, 5, 24. So number of spare parts 6, 15, 3, 12. Okay, number of times material handled 6, 30, 36. Now you have to calculate this, fill this rupees column, sir. Okay, so multiply this cost driver quantity with respective cost driver rate. Write the amounts here. So ordering, so cost driver rate into number of orders. Okay, write the amounts here. Okay, and also here and here, like this, fill those columns, sir. Okay, just some clerical work only. Okay, so after filling those columns, total the rupees column for each product. Done, sir. So tell me these total amounts. For product P, it is 23,137.8. For product Q, 56,927.5. For product R, wow. So S, 166,568. Wow. 1,66,568, right? Now, so we need to calculate what is this, sir? This cost is total factory cost, right? Total factory overheads only. Okay. Now, units, we have to take a number of units to calculate factory overheads per unit. Factory overheads per unit, sir. Okay, number of units of production. Okay, so that information given in the question itself. So what is the production units for product P 4,500, 13640, 2340, 18350. Then you will get factory overheads per unit. How much, sir? 5.14. 5.14, 4.173, 8.4, and finally 9.08. Okay, so go to the question and once again read that question what they're asking in the point number 2. So point number 1, select a suitable cost driver for each item of overhead expenditure, calculate the cost driver. Okay, so in point 1 we have done that so calculated, so we linked the cost drivers and activities, and also we have calculated cost driver rate. So coming to the point number 2, they're asking using the concept of ABC, compute the factory cost. So they're asked, factory cost per unit, sir. What they're asking, not that factory overhead per unit. We have calculated factory overhead here per unit. So they're asking us to calculate factory cost per unit. So what is factory cost, sir? Factory cost is, okay, so prime cost plus factory overhead. Prime cost means direct materials, direct labor, direct expenditure plus factory overheads per unit basis. Okay. Now, so to this factory overhead cost per unit, add direct labor and direct material cost, sir. Okay, take direct labor cost, direct material cost per unit, direct labor cost per unit. So this is directly given in the question itself, I think. So what is the direct material cost? 12, 15, 25, 20, 21. Okay. Direct labor 8, 9, 27, 25. Okay, so make a totals of it. 25.14, 28.17, 60.4, 55.08. Nice. Okay, so you don't need to write a separate statement to calculate the factory cost per each unit. So in this statement itself, you can take, okay, so direct materials and direct labor and show the calculation that factory cost, this is factory cost per unit. Per unit. That's it, sir. That's it. That is enough, I think. Okay. So any doubts? So nearly for 90% of the questions, 90% of the questions under activity based costing system. So you just follow the step 1 and step 2. Step 1, cost driver rate calculation. Step 2, overhead absorption. So similar columns. So in the first column itself, so you sometimes we can avoid this cost driver name calculation. So name writing and everything. Okay, so with 4 columns also you can write this statement. Okay, step 1, step 2, sir, enough. So in some problems, sometimes they will give you directly cost driver rate, sir. In case if they have given cost driver rate means you can directly proceed to the step 2. Okay, in some questions they will ask you to calculate the factory overheads. So factory overhead absorption under traditional costing system, under activity based costing system. In 2 systems we have to calculate the cost, sir. Okay, that is only the major problems in activity based system. Okay, so next come to the main questions. Main questions. Illustration 4 is there, sir. Illustration 4. Okay, read that question once. So page number 4.1.4, sir. 4.1.4. Okay, so budgeted overheads cost driver volumes of XYZ are as follows. Okay, so here they have given cost pool, that means activities, the total cost pool, cost driver name, cost driver quantity, sir. Okay, so this is activity and their cost pool, cost driver name, this is cost driver quantity, right? Okay, in total cost driver quantity also given. So from this information itself you can calculate the cost driver rate, sir. Cost driver rate, cost pool divided by cost driver quantity. 5,80,000 divided by 1100. That means how much, sir? 12,000. Nearly 12,000. 1,200 or 12,000. 526. Sorry. 527.27. Okay, nice. Okay, 2,50,000 divided by 680. 367.64. Like that we can calculate cost drivers rate, sir. Okay. Okay, now read this material procurement. So cost driver is number of orders, material handling, number of movements, setup, number of setups, maintenance hours, quality control, number of inspections, machinery, machine hours, sir. Okay, now so the company has produced a batch of 2,600 components of AX15. They are producing a product that is AX15. Its material cost 1,30,000, labor cost 245, The usage of activities set batch are as follows. Okay, material orders 26. So actually, see, in total, what are our number of orders means 1100. For this particular batch of AX15, we have consumed how many orders are 26. Maintenance hours in total, maintenance hours are 8400, but here 690. Okay, so next one, material movements. In total, material movements are 680, but in this particular batch, so we have consumed 18. Inspections 28, setup 25, machine hours 1800. Calculate the cost driver rates used for tracing appropriate amounts of overheads to set batch. Ascertain the cost of batch of components using ABC. Okay, so first point, we have to calculate cost driver rates. For that, we use step number 1. Okay, so cost driver rate calculation, same format, sir. Coming to the next point, they're asking us to calculate the cost of the batch. Okay, so to calculate the total cost of the batch means here we have direct material cost and direct labor cost. So apart from that cost, we have factory overhead cost. Okay, so based on cost driver rates, so using activity based costing system, you have to absorb the overheads to AX5 15. Okay, then to that overheads add direct material cost, direct labor cost, you will get a total cost of the batch, sir. Okay, see, so write the answer, so solve that along with me. While I am solving the problem, you also try to solve, sir. Okay, so what is our step number 1? Step 1, calculation of cost driver rate. Okay, so what are our, so column headings means, okay, so to the table given in the question, take for first column activities cost pool. Next, cost drivers, cost driver quantity, cost driver rate. Okay, so same, in the same format they have given the information in the question itself. Okay, now from this calculate the cost driver rate, sir. Just copy paste the data from the question itself. Done, sir. So what is the cost driver rates? For first one 5 2 7, second one 367.65, 7 or 6. Okay, next one, third one 798.08. Okay, next one 48. Next one 5.56. So this is cost driver rate, sir. Now, so what is our step 2? Step 2, overhead absorption under ABC. Here we have to write what, sir? So first one, activities and their cost driver rates. Next one, how many products we are producing, sir? We are calculating cost for particular batch only. That is AX15. For this batch AX15, so cost driver quantity and take rupees column. Okay, so first activity, so material procurement. Material procurement cost driver rate is 527.27. Okay, so second activity, material handling. So third one, setup activity. Fourth one, maintenance. So next one, quality controls. So finally last one, machinery. Now, so cost driver quantities, sir. Let us write a cost driver quantities for this particular batch. Okay, see, for AX15, so look at the question what they have given. The usage of activity said material orders, 26 orders. Material orders 26, sir. Material handling, number of material handlings, how many, sir? 18. Look at the question. Okay, next one, setups, number of setups, 25 setups. Maintenance, number of hours, 690. Next one, 28, 1800. Okay, now multiply this cost driver quantity with cost driver rates, sir. 13709, round figures, sir, right? Noun figures, sir. 618, round figures, right? The round figures. 19,952. Next one, 79,681. So for 28, 5476, 54,000. Okay, so in total, this total cost 1,79,436. This is what, sir? Overhead cost of overhead cost of AX 15, sir. Okay, now we have calculated indirect cost or overhead cost of AX 15. Now what we have to calculate, sir? Actually, total cost of AX 15. Total cost of AX 15. So in this we have direct material cost, direct labor cost, and so by adding direct material and direct labor, you will get prime cost. To the prime cost, if you add factory overhead, means you will get total cost. Total cost of AX 15. So what is direct material cost, sir? Given in the question. 1,30,000 direct material. Direct labor is 2,45,000. Okay, next one, prime cost 3,75,000. Sorry, prime cost. Okay, factory overheads we have calculated here 1,79,436. In total, you will get the what? Okay, so 5,54,436. That is total cost, sir. Okay, so more or less all the questions in this activity based costing is similar only. Step 1, step 2, like that only. Okay, so maybe some one or two small adjustments will be there in each problem. That's it. Okay, if you understand these problems, and so that example we have discussed means enough. This is enough, sir. Okay, for conceptually, this is only the concept. Nothing more than this is there. Okay, so in tomorrow's class we will do the remaining problems, sir. Okay, additional questions, so main questions and additional questions also we will be solving in tomorrow's class. Okay, so thank you all. Now, okay, done enough, sir, for this class. Okay, at 2 o'clock you will be having, so which class, sir? To SFM, then law, right? That's it. Thank you, take a break.